Market already very close to all-time highs and credit spreads at multi-decade tights.
Yeah, it means basically to the moon, right? I mean, in terms of valuations, the real question that I have is, what does this do for inflation? And why has the economy not completely fallen out of bed if we were this restrictive for this long?
I've got the very same question in front of me too. I think we all have the same one with regards to that. Equity futures right now in the S&P 500, negative by about 1/3 with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara Anand. Hey, Yahara.
Hi, John. Former French President Nicolas Sarkozy has been convicted of criminal conspiracy. Paris judges made the ruling over allegations his 2007 winning campaign was covertly funded by the regime of late Libyan leader Muammar Gaddafi. Sarkozy is expected to serve a 5-year jail sentence even if he appeals. Meanwhile, Disney is preparing for a legal battle with President Trump after it put Jimmy Kimmel back on the air. The Trump administration has threatened to revoke the broadcast licenses of Disney's local stations. Disney's leadership has consulted legal experts and says it is confident it will win any case. And Oracle launched an $18 billion U.S. investment-grade bond sale, the market's second largest deal this year. The debt raise comes as Oracle begins to fulfill massive cloud infrastructure deals with customers like OpenAI and Meta. Sources telling us here at Bloomberg, the tech giant issued the debt in 6 parts, including a rare 40-year bond. That's your Bloomberg brief. John?
Yahara, thank you. Some real demand at that offering yesterday afternoon. Up next on the program, Federal Reserve Governor Stephen Myron as he makes his case for more aggressive rate cuts. That conversation is just around the corner. Live from New York City this morning. Good morning.
안녕하세요. 네, 안녕하세요. 자, AI 개장 브리핑 빠르게 진행 후에 금일 주요 일정 살펴보고 시간 관계상 빠르게 트레이딩에 나가도록 하겠습니다. 자, 바로 AI 개장 브리핑 진행하도록 하겠습니다. AI 개장 브리핑 진행하도록 하겠습니다.
(2025년 9월 25일) 장마감 AI 모닝 브리핑입니다. 간밤 미국 시장에서는 정부가 직접 특정 기업의 주주가 되겠다고 나서면서 시장이 크게 출렁였습니다. 바로 리튬과 반도체, 2가지 전략 산업에서 벌어진 일인데요. 오늘은 이 소식부터 집중적으로 파헤쳐 보겠습니다.
네, 가장 먼저 시장을 뒤흔든 건 리튬 아메리카스 소식이었습니다. 트럼프 행정부가 이 회사의 지분을 최대 10%까지 인수하는 방안을 추진 중이라는 보도가 나오면서 주가가 장중 한때 70% 이상 폭등했습니다. 단순한 대출 지원을 넘어 정부가 직접 지분을 소유하겠다는 건데, 이는 미국 내 리튬 공급망 확보를 국가 안보 차원에서 다루겠다는 강력한 신호입니다.
정부가 직접 주주로 나선다. 이례적인 일인데 시장에 미치는 영향이 클 수밖에 없겠군요. 반도체 쪽에서도 비슷한 움직임이 있었죠?
그렇습니다. 인텔이 한때 최대 고객이었던 애플에게 투자를 유치하기 위해 접촉했다는 소식이 전해졌습니다. 이 소식에 인텔 주가는 6% 넘게 상승했습니다. 최근 엔비디아의 투자를 유치한 데 이어 애플까지 끌어들이려는 건데요. 이는 인텔의 회생 전략에 대한 자신감을 보여주는 동시에 미국 내 안정적인 반도체 생산 능력을 확보하려는 애플의 이해관계와도 맞아떨어질 수 있는 부분입니다.
정부가 리튬 공급망을 챙기고 기업들은 자국 내 반도체 생산을 위해 다시 손을 잡는 모습이군요. 거시 경제 지표는 어땠습니까? 시장의 예상을 뛰어넘는 수치가 나왔다고요?
네, 8월 신규 주택 판매가 시장 예상치를 크게 웃돌았습니다. 전월 대비 20.5%나 급증한 연율 80만 채로 집계됐는데 전문가 예상치인 65만 채를 한참 뛰어넘는 수치입니다. 최근 모기지 금리가 다소 하락한 영향이 있겠지만 여전히 높은 금리 수준을 감안하면 미국 주택 시장과 소비 심리가 예상보다 훨씬 견고하다는 것을 보여줍니다.
주택시장이 이렇게 뜨거우면 연준의 금리 인하 결정에도 영향을 주지 않을까요?
정확한 지적입니다. 시장은 연준의 금리 인하를 기대하고 있지만 이렇게 경제가 강한 모습을 보이면은 연준으로서는 섣불리 금리를 내리기 부담스러워집니다. 실제로 시카고 연은 총재는 섣부른 금리 인하를 경계하는 발언을 내놓기도 했습니다. 반면 스콧 베센트 재무장관은 연준이 너무 오랫동안 고금리를 유지했다며 완화 사이클 진입을 언급하는 등 행정부와 연준 사이에 미묘한 시각차가 드러나고 있습니다.
에너지 시장 상황도 짚어보죠. 유가에 영향을 미칠 만한 데이터가 있었습니까?
네, EIA 주간 원유 재고가 시장의 예상을 깨고 감소했습니다. 시장에서는 약 80만 배럴 증가를 예상했지만 실제로는 60만 배럴 이상 줄어든 것으로 나타났습니다. 이는 공급이 예상보다 타이트하다라는 신호로 국제 유가 상승 압력으로 작용했습니다. 시장의 수급 예측이 또 한 번 빗나간 셈입니다.
다시 개별 기업 소식으로 넘어가 보겠습니다. AI 경쟁이 여전히 치열한데 오늘은 어떤 소식들이 있었나요?
AI 경쟁은 이제 모델 개발을 넘어 인프라 구축 전쟁으로 번지는 양상입니다. 오라클이 AI 수요에 대응하기 위해 무려 150억 달러, 우리 돈 약 20조 원 규모의 채권 발행에 나섰습니다. 데이터 센터 구축 등 막대한 자본 지출을 감당하기 위한 조치입니다. 동시에 마이크로소프트는 자사의 AI 비서 코파일럿에 오픈 AI 모델 외에 경쟁사인 엔트로픽의 모델을 추가하며 공급망 다변화에 나섰습니다.
AI 모델을 쇼핑하듯 선택할 수 있게 된다는 거군요. 특정 기업에 대한 의존도를 낮추려는 전략적 움직임으로 보이네요. 다른 주요 기업들 소식도 정리해 주시죠.
소셜미디어에 강자 메타의 인스타그램이 월간 활성 사용자 수 30억 명을 돌파했다라는 소식이 있었습니다. 2022년 20억 명을 넘어선 지 얼마 안 돼 다시 한번 큰 폭의 성장을 이뤄냈는데 숏폼 기능인 릴스의 성공이 결정적이었습니다. 한편 트럼프 행정부의 정책 변화가 여러 산업에 영향을 미치고 있습니다. H-1B 비자 수수료를 10만 달러로 대폭 인상하는 안이 금융 및 기술 업계에 큰 부담으로 작용할 전망이고 석탄 발전소 폐쇄를 막기 위해 비상 권한을 사용하겠다는 계획도 밝혔습니다. 또한 로봇, 의료기기 등에도 추가 관세를 부과하기 위한 조사에 착수했습니다.
정부 정책 하나하나가 기업들의 명운을 가를 수 있는 상황이군요. 이런 정책 리스크 속에서 실적을 발표한 기업들은 어떤 성적표를 받았습니까?
먼저 유니폼 및 사업 소모품 공급업체인 신타스 코퍼레이션 실적을 보겠습니다. 1분기 주당 순이익은 1.20달러, 매출은 27억 2천만 달러로 모두 시장 예상치를 상회했습니다. 연간 실적 전망치도 상향 조정했는데요. 이 기업의 실적은 미국 서비스업과 산업 현장의 경기를 보여주는 바로미터로 여겨지는데 인플레이션에도 불구하고 수요가 견조하다는 것을 입증했습니다.
신타스의 실적은 미국 경제의 허리가 튼튼하다는 신호로 해석할 수 있겠군요. 다른 기업은 어땠나요?
반면 유라늄 에너지 코퍼레이션은 아쉬운 실적을 보였습니다. 4분기 주당 순이익이 마이너스 6센트로 시장 예상치였던 마이너스 4센트보다 손실폭이 컸고 매출 역시 예상에 미치지 못했습니다. 원자력 발전에 대한 장기적인 기대감은 유효하지만 개별 기업의 실적은 분기별로 변동성이 크다는 점을 보여줍니다.
오늘 정말 많은 소식이 있었는데요. 가장 인상 깊었던 이슈는 무엇이었나요? 저는 정부가 직접 기업 지분을 사들이는 모습이 가장 기억에 남습니다. 여러분이라면 정부의 이런 직접적인 시장 개입에 대해 어떻게 생각하시나요?
오늘 시장의 핵심을 한 문장으로 요약하면은 정부의 귀환이라고 할 수 있습니다. 자유시장에 보이지 않는 손만 있는 것이 아니라 이제는 국가 안보와 공급망을 이유로 정부라는 보이는 손이 직접 플레이어로 나서고 있습니다. 리튬 아메리카스와 인텔의 사례가 이를 상징적으로 보여줍니다.
그렇다면 앞으로 우리가 주목해야 할 관전 포인트는 무엇일까요?
이러한 정부의 시장 개입이 리튬, 반도체를 넘어 다른 전략 산업으로까지 확산될 것인지가 첫 번째 관전 포인트입니다. 그리고 당장 이번 주 후반에 발표될 개인 소비 지출, 즉 PC 물가 지표가 시장의 예상을 뛰어넘은 주택 지표와 맞물려 연준의 금리 인하 경로에 어떤 변수로 작용할지 지켜봐야 합니다.
장마감 AI 모닝 브리핑 오늘 순서는 여기까지입니다. 내일 뵙겠습니다.
자, 이어서 금일 주요 일정 살펴보도록 하겠습니다. 잠시 후 금일 주요 일정 살펴보고 트레이딩 진행하도록 하겠습니다.
some financial markets and sort of security markets. So I don't think that that's necessarily a holistic look at the world of financial conditions in the economy. But even that aside, I think that People in financial markets tend to focus a lot on monetary policy because interest rates are, sort of huge tradable instruments, right? But there's so much more that goes into determining economic growth and the state of the economy and inflation and employment than monetary policy. And I think that attributing all changes in financial assets to monetary policy can be a mistake. And in particular, that's what I tried to do in my speech. Was to draw out some of these effects from non-monetary policies that are affecting the economy and, of course, therefore also financial markets. And so, if you have changes in tax policy, right, like significant incentives for investing that lower the effective tax rate on capital, of course, that's going to get reflected into capital assets. If you have significant changes to the regulatory environment, where you're removing barriers to operations that companies can make more cheaply, which, by the way, is disinflationary and pushes out the output gap, then, of course, that's also going to be reflected in asset markets. So I think it's a mistake to conflate the state of financial conditions with monetary policy. They're connected, they're related, they affect each other, but they're not exactly the same thing. And in the speech, I go line by line through these different items. And the reason why monetary policy doesn't have to react to the hawkish side in response to these policy changes is because they push out the supply side of the economy at the same time that they push out demand. And so if you're increasing supply and demand at the same time, there's no change to the output gap. And of course, it's monetary policy's job at the end of the day to be balancing the output gap, to be balancing aggregate supply and aggregate demand in the economy so it doesn't overheat or underheat.
I think there are a lot of people, Governor Myron, who would agree with you that probably the neutral rate is quite a bit below where we are now. You said even the other Fed governors did seem to agree with that, but not necessarily the speed. And I'm still unclear, why do you think it is so important to get rates down by 125 or 150 basis points more this year if inflation is still running hot and you're not seeing anything alarming in the underlying economy?
Yeah, so this year is merely a function of where the calendar is. So my view is that policy is quite restricted.
약 2분 전 2분기 실질 GDP 성장률 발표되었고요. 약 10분 뒤 8월 상품 수지 발표가 되고요. 그리고 도매재고 그리고 2분기 근원 PC 가격 지수 발표가 되고요. 그리고 8월 내구재 수주 발표가 됩니다. 자, 그리고 동시간대에 주간 신규 실업수당 청구 건수 발표가 되고요. 11시에 8월 기존 주택 판매 발표가 됩니다. 자, 그리고 11시 30분 EIA 천연가스 재고 발표되고요. 그리고 2시 자정 넘어서 2시에 7년물 국채 경매가 발표됩니다. 자, 연설로는 9시 20분에 연준의 쿨스비 총재, 10시에 윌리엄스 총재, 동시간대에 휴미드 총재, 11시에 보험원 부의장, 2시에 바이사, 2시 40분에 로건 총재, 그리고 4시 30분에 데일리 총재의 연설 예정되어 있습니다. 자, 백악관 일정으로는 금일 백악관 일정은 자정에 12시에 트럼프 대통령 터키 정상회담이 있고요. 그리고 4시 반에 트럼프 대통령 행정명령 서명이 예정되어 있습니다.
Yeah, so I would want to understand why there was an upsurge in inflation, what was driving it, and then sort of think about whether that shock is likely to be persistent or whether the shock is likely to be transitory. And it's the nature of the shock. It's not just is inflation higher for a certain number of months, it's why is it higher or why is it lower? And how long
자, 주요 지표들은 주요 기사들은 올려드린 링크 통해서 확인해 보시길 바라겠습니다. 기업별 기사 및 주요 속보들은 올려드린 링크 통해서 확인해 보시길 바라겠습니다. 자, 나스닥 정규 트레이딩 이어서 이어나가도록 하겠습니다. 금일 나스닥 정규 트레이딩 이어나가도록 하겠습니다.
That in my mind is not the type of shock that would lead you to think that inflation is going to stick for a long period of time. And in fact, there's most central banks around the world, actually all of them, would sort of encounter this in a much more direct manner through changes in value-added taxes. And they always look through them. They always say, okay, look, the VAT went up or the VAT went down, and and that's going to affect the inflation statistics for a period of time. But then we all know that this was basically a fiscally mandated price change, and monetary policy shouldn't respond necessarily to fiscally mandated price changes because that's not indicative of changes to the underlying supply-demand balance in the economy, which ultimately drives the type of persistent inflation that the central bank cares about.
Governor Myron, I'd love to get your thoughts a little bit more deeper on housing. This is something Matt Misk and Neil Dutta have talked a lot on this program about. Going into next year, do you think the housing market will weigh on a deceleration of inflation?
자, 3계약 운영하도록 하겠습니다. 3계약 운영하도록 하겠습니다.
Yeah, I mean it explicitly is.
자, 매도 진입 사인 드리도록 하겠습니다. 매도 진입 3계약입니다. 진입가 629.25입니다. 629.25 매도 진입 3계약 진입 사인 드립니다.
Of course, you are going to get upward pressure on shelter inflation. And then vice versa, if you start decreasing population growth because of a change in border policies without destroying shelter supply, or if shelter supply keeps on expanding at a rate that it has been in previous years, then you get a relative change in shelter inflation once again. So it's just it's simple, you know, it's simple supply and demand. If we have a material downward population shock because we have negative net migration, that's a net increase in the supply of shelter. And I think that the study that I cited in the speech on Monday, work where Albert says, found that the elasticity of one, basically that a 1% increase in the number of immigrant renters leads to a 1 percentage point change in the rents.
Right, but immigration is short term,
yeah.
right? This is a short term story. Would you be willing to revise up neutral if immigration is not much of a drag?
Well, I mean, you know, I have good reason for expecting that the immigration story is going to persist at least for another 3.5 years. And I think quite likely potentially after that also. So I'm not convinced that immigration is really short.
자, 여기서 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인 드립니다.
Beyond the end of this year.
Look, you know,
주문
I love
청산이
this country. I'm
완료되었습니다.
happy to serve this country in any way that I'm asked to do so. But personnel decisions are not decisions that I make.
Governor Myron, appreciate your time. Diplomatic.
자, 이어서 2차 진입뷰 대기하도록 하겠습니다. 2차 진입뷰 대기하도록 하겠습니다.
The next news from the Fed and his argument, very much lower neutral rate.
Yeah, and the key issue here in terms of how much delay there is between
자, 금일 목표 수익권 도달 시에는 빠르게 트레이딩 종료하도록 하겠습니다. 목표 수익권 도달 시에는 트레이딩 빠르게 종료하도록 하겠습니다. 자, 이제 2차 진입뷰 대기 중에 있습니다. 조금 더 지켜보고 2차 진입뷰 진입 사인 드리도록 하겠습니다. 자, 중요 지표 발표까지 약 2분을 앞두고 있습니다. 중요 지표 발표까지 약 2분을 앞두고 있습니다.
Is this going to be a Governor Myron just till January, or is he going to be someone that the Trump administration decides we are going to keep him in that spot? And I think this is becoming very political in Washington, obviously, because he's still keeping he has a leave of absence right now from CEA, so 1 foot kind of still in the White House. But if he continues going on this and trying to change the thinking of the Fed, this is really going to be the future. The Treasury Secretary said he wants more of a Greenspan-led Fed, forward-thinking, not data-dependent.
In just a moment, we're going to get jobless claims at about 8:30 Eastern Time. Mike McKee's been tracking a conversation we've been having around the Federal Reserve. Mike, the labour market, if you look at jobless claims, I don't know what the number's about to be in 2 minutes' time, but jobless claims so far look okay, don't they?
They do, and that's part of the story that Jay Powell and the rest of the Fed have been telling, that we're in this unusual situation where we're not hiring people, but we're not firing people either. And the question is, which direction do you go and how fast do you get there? The whole question with Stephen Myron versus the rest of the Open Market Committee is where is neutral, and he makes a big case for population, negative population growth because of the negative labor force growth because of immigration. And that should start to show up in the jobs numbers, but not necessarily in terms of layoffs. So the jobless claims numbers may not settle that debate.
자, 잠시 후 데이터 발표됩니다. 중요 지표 데이터 잠시 후 발표됩니다.
Well, it hasn't been extremely well received because there are some holes in his story.
자, 지표 발표 나옵니다. 잠시 후 지표 발표 나옵니다.
The real issue is he's talking about this negative net migration, but the labor force has not slowed, has not fallen. So the impact he's talking about hasn't happened yet, but the inflation impact is still happening. So that's what the
자, 고용 관련 데이터 주간 실업수당 청원 건수는 예상보다 좀 더 낮게 발표가 되었습니다. 자, 고용 시장이 좀 더 견조해지고 있다는 사인으로 해석할 수 있고요. 좀 더 시장에 어떤 영향을 끼치는지 지켜보고 대응해 나가도록 하겠습니다.
Well, John, we are certainly not seeing any problems in the labor force connected to jobless claims. 218,000, a big drop from a revised 232,000 last month. So it doesn't look at this point like we have a firing problem at all. Initial claims, continuing claims, 1,926,000. That's down a little bit from a revised 1,928,000. So all in all, jobless claims numbers still show companies sitting on the sidelines not making decisions. What else have we got today? We've got the advanced good trade balance. It is 85.5, a deficit of 85.5 billion. That's down from 102.8 billion last month. There was a lot of thought that what we were seeing in July was imports pulled forward because the tariffs were going to take effect in August. They did take effect, and it looks like we've had quite a.
자, 다시 한번 진입 사인 드리도록 하겠습니다. 기존과 동일한 포지션 매도 진입 3계약 진입 사인 드립니다. 자, 진입가 24,600입니다. 24,600.
The core goods, capital goods orders, non-defense ex-air up 0.6. That was up 1.1%. So it's down a little bit, but not what you would consider any kind of bad news. And finally, we've got the GDP, annualized GDP numbers, their third revision, the second revision, the third issue, 3.8%, a significant revision up from 3.3%. Personal consumption is the reason Americans spent more money, 2.5% from 1.6%. No real change in the.
자, 발표된 지표 정리해서
2.1% for headline.
급등일보에 올려드리도록 하겠습니다.
And 2.6% for core, both of those a little bit higher, but that's not the number we're looking at. We'll look tomorrow for the latest monthly release.
And Mike McKee, thank you, sir. I just want to sit on one data point. There are many here, but let's pick out one. 218 on jobless claims. 218. We're freaking out about the labour market. Big downshift in payrolls. I understand the concerns. I'm not dismissing them. You see it. It's real. But the fact that claims have come in at 218, it doesn't speak to any kind of weakness whatsoever.
And even continuing claims actually came in slightly. They didn't expand. So people are coming off that. Look, no one is saying that this labor market is falling into a ditch. The point is, do you need to have a more robust labor market in order to get growth that can sustain a lot of the expectations currently in markets? Do we need things to be a little bit less frozen? And ultimately, that might be the argument, but no one is saying that this is a labor market that is falling off a cliff.
I wish Governor Myron was still with us. Pretty impressive data points there for jobless claims at least. Yields are up at the front end by, let's call it 4 basis points on twos, 364. There's been a steady grind higher in bond yields ever since the Federal Reserve cut interest rates last Wednesday. The 10-year bond yields higher by about 3 basis points, so approaching again 4.
자, 현재 진입가 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인 드립니다. 수익 청산 사인 드립니다.
Coming out of it, we're down 0.4% on the S&P, down by 0.8 on the small caps. Joining us around the table, Nita Richardson of ADP. Nita, good morning.
Good morning.
That
Great
claims
to see you.
number, pretty
주문
impressive.
청산이
It is. In fact,
완료되었습니다.
if I would have just parachuted in from like some other place in time
5%
and
GDP
saw those
growth, amazing.
numbers.
자, 이어서 3차 진입뷰 대기하도록 하겠습니다. 3차 진입뷰 대기하도록 하겠습니다.
This is a perfect economy, but the thing is, I've actually not parachuted in. I've been here the whole time, and I've been looking at the data, and there are some cracks here that I want to uncover because yes, it is a low hire, low fire. It's been well-established jobs market. It's a stasis that I've been talking about with you for the better part of a year. But if you look, that stasis is having an effect that is not uniform in the labor market when it comes to wages. And wages, as I've said before, are the bridge between the jobs market and inflation. Inflation, when I look at those Fed projections, we're 4 years above target and 2 years to get to target.
자, 이전과 동일한 포지션 재진입 사인 드리도록 하겠습니다. 자, 매도 진입 다시 한번 3계약 매도 진입 사인 드립니다. 진입가 590.50입니다. 진입가 590.50. 매도 진입 사인 드렸습니다.
So even though we have this low fire, low hire labor market, wages are suffering for those.
자, 조금 더 지켜보고 매도 진입권 지켜보고 대응 이어나가도록 하겠습니다. 자, 나스닥 매도 진입 사인 드렸습니다.
What that means on a bigger scale, whether this tends to be a leading indicator of lower income workers are not seeing the pay raises that can keep up with inflation, whether that kind of leads a broader downshift, or if this just continues to emphasize the K-shaped economy where you have the high income earners benefiting from their wages, benefiting from the market, and benefiting from a world that seems to be increasingly catering to them.
Exactly. So when you look at that GDP print, it was on the backs of a 2.5% consumer spending growth. And that growth we think of as being really top heavy. So when you look at the labor market, and I said this last week with you, that the labor market is supporting consumers, but it's not consumers supporting them uniformly. So for high-income workers, you're seeing that their wage growth is actually peaking up from a year ago, whereas for low-income workers, it's decelerating fast. And so the disparity is rising, and that's going to show up in consumer spending trends. You're going to see this disconnect between high-income people and low-income people. And who are those low-income workers? Well, the majority of them are women. 60% of workers at the bottom of the pay distribution are women, compared to 30% at the top end of the distribution. And they are concentrated in certain industries. Those industries happen to be where all the gains have been: health and education, leisure and hospitality. So this disconnect in the labor market is going to show up in a disconnect in consumer spending.
If the Fed were to cut rates aggressively this year on the heels of our conversation with Governor Stephen Miron, do you think that would change the picture? Would you see a pickup in the wages and the employment at the sort of lower end of the income sphere?
It's hard to tell. You might see a pickup in hiring.
자, 현재 진입가 여기서 끊어가도록 하겠습니다. 자, 수익 청산 사인드립니다. 수익 청산 사인드립니다. 수익 청산 후에 재진입 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다.
주문 청산이 완료되었습니다.
자, 이어서 4차 진입뷰 대기하도록 하겠습니다. 이어서 4차 진입뷰 바로 대기하도록 하겠습니다.
With 3.8% GDP growth, you probably don't need to see those gains right now broadly. But to the people who it matters most for, maybe there would be an increase in hiring, which would spill over to wages.
Well, wouldn't have to be a wage increase if, like Governor Miron says, this pace of immigration policy we're seeing in the Trump administration is not short term. He thinks this is going to continue for the remainder of 3.5 years.
Well, let's hold there. There's a lot going on with demographics in the labor market. It's not just immigration policy, it's the fact
자, 조금 더 지켜보고 진입 사인 드리도록 하겠습니다. 조금 더 지켜보고 진입 사인 드리도록 하겠습니다.
as well. So those shifts are being seen in the labor force participation rate. It's edging down. You have the sandwich generation being impacted in terms of the number of hours they can contribute if they're taking care of their parents and their children. So there's a lot going on demographically. What it ends up being is labor shortages. Those shortages could tilt up wages in the sectors that are most needed to take care of an aging population. But what I read in that is inflation. And that's what you don't want to see. You don't want to see a wage cycle that leads to an inflation increase.
When it comes to the other part of the labor markets, of course, a lot of these grads coming out of school unable to find jobs. How much is AI part of that story, even though there should be enough supply given what's happening in immigration and given this aging workforce?
AI is having an effect on early career. We've partnered with Stanford on research showing just that using ADP data, that if you are in an AI-exposed field, a software developer, customer service
Isn't that
agent,
everything at this point? AI exposed almost?
No, there are some jobs, a plumber, HVAC. There's actually quite a few jobs that are not AI exposed, but you know, those aren't the jobs that young people, or especially college graduates, sometimes are oriented towards. But if you're in the healthcare field, needed more than ever, and you can see the employment trends going up. So not in 2025, maybe in 2035, every job will be an AI exposed job, but not now.
Nita, it's good to see you. Always is. Thank you. Nita Richardson there of ADP following that better than expected jobless claims data, the right kind of downside surprise. Kevin Gordon at Charles Schwab writes in, the biggest 2-week drop in claims since October 2021.
Yeah, if people were looking for some sort of confirmation of ongoing weakness, well, Congratulations, you didn't get it. You actually got quite the opposite, the sense that things aren't falling out of bed. And it just goes to the ultimate question that we've been asking so much on this program, which is, are we heading into a reacceleration? Are we already seeing it, especially ahead of some of the infusion of cash from the One Big Beautiful Bill, and with the likes of the airlines saying that actually they're seeing bookings pick up? So, I mean, it might be on the heels of the upper quintile of earners, but nonetheless, that is the personal spending. That is some of what you're seeing maybe in this data.
If you're long equities, that's what you're priced for into next year. Let's see if we get it. Long equities with a reacceleration plus the interest rate cuts. There will be questions about that if we continue getting data like this in the labour market. 218 for jobless claims. Big downside surprise. The estimate was 233 in our survey. Push that through the bond market and you were getting higher bond yields at the front end of the curve, up by 5. 2's up to 365. 10's up by 4 to about 418. Let's get you an update on news worldwide with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Let's recap that latest economic data. We saw weekly jobless claims fall by 14,000 last week to 218,000. That's the lowest level since mid-July. Analysts surveyed by Bloomberg were looking for 225,000 to 242,000. And don't bet against the U.S. consumer. Personal spending for the second quarter was revised up to 2.5% from 1.6%. Meanwhile, Best Buy has been making job cuts, including reductions to its Geek Squad team. The changes come as the electronics retailer has been impacted by tariffs and struggled to reignite the level of growth it saw from pandemic-era buying of computers and other gear. Shares of the company are down nearly 14% so far this year as of yesterday's close. And Jimmy Kimmel's return to late-night TV drew 6.3 million viewers, the most ever in the show's regular time slot. The total is significantly higher than the 1.6 million viewers Kimmel has averaged this year. That's according to Nielsen data. The host's opening monologue was also viewed more than 26 million times on YouTube and social media services. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Appreciate it. Up next, we'll catch up with Chris Heisey of Merrill and Bank of America Private Bank Plus. Danny has your morning movers. IBM climbing after HSBC says it found a way to use the company's quantum technology. That stock is up by 2.8%.
자, 현재 매도세 강하게 나와주고 있습니다. 조금 더 지켜보고 진입 사인 드리도록 하겠습니다. 자, 다시 한번 매도 진입 사인 드리도록 하겠습니다. 매도 진입 사인 드립니다. 진입가 569.75입니다. 자, 569.75 매도 진입 사인 드립니다. 자, 최대한 대응 짧게 이어나가도록 하겠습니다. 매도 진입 3계약 진입가 24,569.75 진입 사인 드렸고요. 좀 더 지켜보고 대응 이어나가도록 하겠습니다.
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Policy is quite restrictive, and so I'd like to adjust quickly much closer to zero. Those channels by which population growth affects neutral rates didn't disappear. I would rather act proactive. If you wait to see the result of that, you have waited too long.
Governor Myron making the case for much lower interest rates and getting there quickly. We just had data moments ago. 16 minutes ago, jobless claims 218. Big downside surprise. No problem in this labour market based on that data point. The estimate was 233. The response to it, bond yields higher, equities softer. We're down by 0.5% on the S&P 500. On the Nasdaq, down by 0.7. With that move in the bond market, small caps down 1 full percentage point. Twos at 366. With about 44 minutes away to the opening bell, let's get you some morning movers, some single names. Here's Danny Berger. Hey, Danny.
Hey, John. Intel continues to climb higher, but has lost some of its steam, was up more than 1%. Now just up 0.5% on this report that they approached Apple for an investment. That's maybe the key, that it was just an approach. It's in early stages. The two are talking about how they can work together, but a lot of skepticism, including Bernstein analysts saying that IBM doesn't have a money problem necessarily. It has a capability problem, and money won't help with that. Elsewhere, CarMax shares plummeting this morning. It missed on a variety of metrics. Used car prices fell. Sales fell to about 7%. It is very clear that what CarMax saw in the first half of the year was that pull forward effect from tariffs, and that has started to ebb. So shares there down 14%. Finally, the buzzy story of the morning, and that is HSBC saying, hey, we figured out quantum computing. We are using IBM servers, and we've been able to more accurately predict the price of bonds by 34% in a trial. There's some questions as to how you extend that trial and if you can use it more widely. Even so, IBM shares up 2.5%, John.
What a crazy story. Danny, thank you. Thanks for the update. Big rally for that name this morning, and others too. Let's turn to the Federal Reserve. Chris Heisey of Merrill and Bank of America Private Bank writing loosening conditions, including further Fed rate cuts, support risk assets further. Chris joins us now for more. Chris, good morning.
Good morning. Thanks
They're
for
on
having
top.
me.
Decent numbers like that.
Yeah.
Labour market data. What do you make of that claims data?
I make of it what I always do, which is week to week is data points are pretty noisy. It doesn't necessarily mean it's a trend, but it is something that I think we'll likely see, which is right around those numbers for the foreseeable future. There's a little bit of a supply and demand balance in the job market overall. Many companies are still in the wait and see mode as it relates to how you democratize artificial intelligence. So claims numbers are pretty much in line with what our belief is, which is a re-acceleration coming, not just in real growth, but nominal growth and ultimately profit growth.
Are you seeing any signs of that already? Beyond that jobless claims number, where are you seeing signs of a re-acceleration? Where are things firming up?
You know, it comes down at the beginning of the year before the tariffs were put in place. There was this notion that you'd have double-digit profit growth for this year and then next year. Then it was ratcheted back by pretty much everybody across Wall Street. Now we're back to the numbers again where they were at the beginning of the year. So it's a re-acceleration. We're seeing it already in profit revisions, not just for third and fourth quarter, but already for 26.
Do CEOs and CFOs believe it? Do they believe it enough to actually take big steps and engage in some of the M&A, engage in some of the hiring plans that they were talking about maybe late last year, early this?
Really depends on the actual sector, obviously, but in terms of the general broader community, you're starting to see sentiment, the soft data, start to change for the better. Remember when we were all talking about soft data being weak and then it was going to filter into the hard data? Never did. Now soft data is coming back. You're seeing in the small business segment a little bit because of rates coming down, but a little bit better economy, perhaps an adjustment to the neutral rate coming down a little bit, as Governor Myron just said. All of that coalesces around better optimism from the corporate side. I would say this, though. Margins have held in there, and that's the key.
The bottom line is being used on an efficient basis. Some productivity is increasing, but when you get a little bit above average inflation, that feeds directly to the revenue line, and you don't have to produce as much to get that higher revenue number. So that's why margins have actually stayed in there, in some cases actually widened out.
This sounds like a perfect scenario. It sounds like just nirvana, investing nirvana. It's priced as though it's investing nirvana too, though. At what point have we priced all of that in and then some that leaves it kind of vulnerable to anything that doesn't look like what we just got from jobless claims?
Yeah, Lisa, that's a great point. And I think a lot of that is priced in the here to now, but much of it is still not priced in for next year. There's a little bit of discounting of what the story I just laid out already, given where the S&P is 22, 23 times forward. I would say that in this asset-like world,
제가 수익 청산 사인 드리도록 하겠습니다. 여기서 빠르게 수익 청산 사인 드리도록 하겠습니다. 자, 수익 청산 사인 드립니다. 자, 수익 청산 후에 재진입 사인 드리도록 하겠습니다.
주문 청산이 완료되었습니다.
The investors you speak with, are they more worried about some sort of downturn in the
자,
economy?
이어서 5차 진입뷰 대기하도록 하겠습니다. 자, 5차 진입뷰 대기하도록 하겠습니다. 자, 현재 추세는 매도로 잡혀있는 것 같고요. 반대 의미 조정 나와줄 수 있기 때문에 좀 더 길게 지켜보고 5차 진입 사인 드리도록 하겠습니다.
situation in April. So they still have all of this in their mind, and they're comfortable still getting a decent yield on their cash. On the flip side, there are some that are very worried about missing the next move, particularly as it relates to the infrastructure build out of artificial intelligence. We believe there's some room to go there. We would caution, though, the signs of artificial intelligence and infrastructure build out peaking are all about the margin, all about the price side of the equation. We're not seeing that yet, but we need to watch that closely to understand what the demand for that will be once all of this is built in.
Clients that are concerned about the downside, is it because they think we're in a bubble?
They always talk about bubbles. Number one question I get right now is, are we in a bubble?
Are we?
I had 4 different meetings yesterday. Number one question. In some cases, in areas that are low quality, that don't have any revenues, that are built to sky-high valuations, you can argue yes. In other areas where they're still kicking off very good free cash flow, the answer is no.
So what's your advice?
The advice is diversified portfolio. I know that sounds like, okay, that's easy.
You're killing us, Chris.
Yeah. Right? I
Okay,
know.
what's the second question investors are asking?
But diversification works when you need it the most, and you can still participate. So for us, it's about having a little bit more non-US than you would traditionally have. We heard before about potential weaker dollar. Weaker dollar is probably a fading dollar story, not necessarily a weaker dollar story, given where growth is for us relative to the rest of the world and their deficits relative to ours. Small caps benefiting from a little bit of lower rates on the short end and potentially a reaccelerating economy. Mid caps, for whatever M&A cycle is around the corner. And then on the large cap side, I think it's 2 stories. It's the rest that we always talk about that are starting to rotate a little bit, a little bit on the value side. Those areas that were starved for capital, like materials and energy and others. We're still overweight financials. We're still overweight industrials, consumer discretionary, and utilities. We're trying to make sure that we stay balanced where we can, but participate in the AI growth story.
Does balance mean a little bit of gold as well?
Well, it's fortunate. We don't actually have it in our asset allocation schema overall, but yes, gold is showing some incredibly different signs than it normally would. It has a negative correlation with treasuries right now, which a lot of people aren't talking about.
And a positive correlation with risk assets for the year so far.
That's right. And also defensive assets. It's throwing off signs. Again, it's not perfect, but when you get one of the largest central banks in the world recycling their own foreign reserves and Euro reserves are not going up, but gold is. That's an interesting story.
What do you think's behind all that? Is there a dominant driver or just multiple pillars?
I think it's this regional economic trade zone developments from this ultra-competitive global world we were in for so long. As the world looked to the U.S. to fund their growth, now with all of that switching, I think you're going to have to see some of these central banks diversify their reserve base.
Bramo nodding along. agrees with you entirely.
Well, if you look back to when it really started, it was 2022 with the Ukraine and Russia conflict, when Russia invaded Ukraine. This question of repatriating some of the money, and that really kickstarted a central bank diversification away from the dollar. And that, I think, people have just seen accelerate from there.
Frozen Russian assets are a big piece of this conversation.
Absolutely. The Russians realized, their central bank realized they could just freeze our foreign holdings, so we need to diversify. And then other dictators around the world, like the Chinese, were also like, wow, we should probably actually up our gold as well.
Chris, it's good to see you. Thanks for dropping by. Thank you, sir. Chris Heisey of Maryland Bank of America Private Bank. Gold, what a year so far. Equities too, by the way, both equities and gold. Our guest from Deutsche Bank earlier on this morning saying a lot of people just liked what? It was the S&P, it was gold and EM. The S&P, gold and EM.
Yeah, I just am imagining someone walking through Midtown just totally draped in gold saying, I'm diversifying, you know? I mean, at a certain point,
security.
I just think it's really an interesting moment right now as people rejigger their ideas of the macro trade landscape and what it means to be diversified.
We've got to wrap up and rejigger our views on this labour market. That number, 25 minutes ago, what a jobless claims print. 218, that's a really strong figure.
I'm struggling to get my head around what these numbers mean. Exactly, because if we're looking at low hiring, then if you have that level of firing and you don't have that many new people brought in, what kind of stagnant market are we looking at? This is a very confusing economy. I don't know that it's going to get that much clearer.
218,000, the estimate was 233. The bond market doesn't like it. Yields are up at the front end by 6 basis points. Equities a bit softer on the S&P 500. Session lows, we're down by 0.5%. Coming up tomorrow, Cameron Dawson of New Edge, Mike Dada of Roth Capital, Victoria Fernandez of Crossmark, and the former Fed president, Jim Bullard from New York City. This was Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
자, 진입 사인 드리겠습니다. 자, 이전 같은 경우에 매도 진입
체결되었습니다.
사인 드립니다.
확인 바랍니다.
55.50입니다.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Bringing you
up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Futures down again today. Third day in a row of losses. Could be 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, Fed Governor Stephen Miron sounds the alarm on U.S. vulnerability, but fresh data points to resilient economic growth.
And a bid for a comeback. Intel seeks an investment from Apple as the two discuss how to work more closely together.
And Starbucks is closing stores and cutting jobs while the White House orders federal agencies to prepare for mass firings.
It's a weird thing because those headlines would imply that it is a weak jobs market, but we just had jobless data. And it was really good.
Yeah, there's so many up and down stories. Myron's worried about the economy.
Yeah.
It's growing at 3.8%.
Yeah.
Prepare for mass firings. Jobless claims drop.
This is a choose-your-own-adventure market, and Starbucks is part of that adventure. As we were talking about, it's one of the stocks we're watching, even though it's not moving that much. As a matter of fact, it's basically unchanged. Matt says that it's going to close several stores. It's going to be cutting 900 jobs. It's part of a $1 billion restructuring plan. Overall store count, they say, is going to drop by 1% during its 2025 fiscal year.
All right, only a drop of 1%, so maybe they could cut a little deeper. Intel was up as much as 3% this morning after Bloomberg reported it approached Apple about securing an investment that follows the $5 billion investment from NVIDIA and the 10% stake from the U.S. government. Maybe, just maybe, this is going to perk up Intel's foundry business a little bit.
Just maybe. That's certainly the hope, and let's broaden out and ask that question on the conversation on Intel. Joining us is Bloomberg Tech co-host Caroline Hyde. And Caroline, there's been a lot of skepticism thrown out there, and maybe that's why you're starting to see the stock come in. Bernstein, for their part, said that they have a capability issue, not a money issue. So what would an investment from Apple help Intel do?
I think, once again, just a sign of support and maybe future end demand for the fabrication of chips. All along, we have worried about the ability for them to keep up with the innovations that are necessary to produce the most sophisticated chips out there. And that's why Lip Bhutan, the relatively new CEO in the previous earnings, had said, I'm putting this fabrication stuff on ice. Pat Gelsinger's idea that Ohio was going to become one of the biggest producers of manufacturing of chips in the world ever.
The great state of Ohio.
Great state of Ohio. Go Ohio. But, I mean, it was put on ice because they were like, this is too complex at the moment, and I can build it, but I don't know if they're going to come. Well, maybe this is a signal that they're going to come. Apple doesn't use Intel to make its chips. It designs its own in-house, then it leans on TSMC. NVIDIA does the same. NVIDIA designs chips, and most of them are made by TSMC. But NVIDIA put in money. Now, if you can persuade Apple that strategically they could work better together, this would really help Tim Cook with that $600 billion deployment that he's promised into US in terms of domestic manufacturing and AI focus on servers, training. But that's a lot of money to put to work. It would be nice if you could help back Intel. Intel added $8 billion in market cap yesterday on the back of this.
Yeah, I mean, it could really help Donald Trump, right? Because remember, he got this 10% stake, and then he somehow convinced NVIDIA to buy a $5 billion stake. Maybe Apple wants to take a stake. It could be good for their business, right? It could be good for them if they start doing more business with Intel, and I'm sure that's part of the calculus. I want to ask about, speaking of calculus, quantum computing. Because it seemed like there was no real use case for it yet, but HSBC says it can help them price bonds 35% better than they could have previously, or predicts bond prices.
And real tangible data there. They're saying, look, this wasn't an out in the wild actually pricing in the real market, but running as if it would. And they got so much more efficient pricing. Everyone's going to run to catch up with this. It's interesting that, of course, IBM is rising pre-market on the back of this. This is the provider of quantum. It's Quantinuum who helped JP Morgan make a breakthrough previously when it came to quantum computing and the ability to find really certified, truly random numbers. That's helpful in cryptography. It's helpful in just understanding that transactions has actually helped and gone forward. But we're seeing basically a race going on. IBM has already put its stake in the ground. We will have a fit-for-purpose quantum computer in 2029. They're already in the wild with plenty of people experimenting, and HSBC is one of the key clients that have shown that this is really working in some way to make their business more efficient. But in the same way that AI has set off this firestorm in the financial services, everyone's racing to use it within their own quant strategies and be able to make more efficient in terms of pricing data. So too, quantum is the next iteration. It's using in parallel an ability to solve so many problems simultaneously. This is just going to make the world of AI supersonic.
By the way, we just showed a 5-year chart of IBM. That's just the price
record
change.
high, yeah.
If you adjust for dividends reinvested, so total return analysis, they have tripled, up 192%.
주문
They have
청산이
far
완료되었습니다.
outperformed Amazon on a 5-year basis, and they have even outperformed Microsoft on a 5-year basis. So they're neck and neck right now with Meta. They're doing just as well as a lot of these hyperscalers, and that was pretty surprising to me. Caroline Hyde co-anchors Bloomberg Tech with Ed Ludlow. You can catch her program starting at 11 a.m. They're going to talk, obviously, a lot about quantum computing, as well as Intel and Apple, I imagine. We mentioned Starbucks approving a restructuring plan that includes job cuts and store closures. Let's talk about that with Bloomberg Shelley Banjo. She's our managing editor for global business. And Shelley, this is Brian Nichols' second round of job cuts since he took over a little over a year ago. Since then, Starbucks shares are down 6%. So, like, is he going to finally do something to make these moves in the right direction?
I think that's what investors are hoping. We saw the shares pretty much flat on this news, and you might be wondering why. Personally, I think it's about, could they have gone a little bit deeper? But in general, people, I think, want to see him right-size this store fleet. They want to see him get this stuff right, get rid of the stores that are not performing, that haven't performed in a very long time, and start reinvesting that money into refurbishing. They said they're going to refurbish about 1,000 other stores and then start building again come next year.
But he already made all these splashy announcements, things like, we can refill milk on our own, which I guess is super appealing, that they're going to cut the menu down and not have as many crazy orders for baristas to do. Is this a sign that that turnaround so far hasn't taken hold, that those measures haven't yet helped?
I think a lot of that is aesthetics at the front. Let me put some splashy announcements so that people start coming back into our stores. They start pouring their milk again. And that was actually a thing people really, really wanted, and it seems to have made a difference. Then it comes the hard part, right? We got to close actual stores. We got to fire actual people, pay those restructuring costs. This one in particular is $1 billion of restructuring costs. That takes time. That doesn't really tend to resonate with customers. In fact, it's bad press often when, you shut a store down and people lose their jobs. And so a lot of this is the hard part, but is impeccable and important to get this company, operating as it should be.
I want to finally ask you about CarMax. I know it's very different business than Starbucks, but you cover
we do it all. We do it all here at
global
Bloomberg.
business, and you sit next to Rick Clough, who's our our autos team leader here in the Americas. I thought that people were going to be buying more used cars because, new cars are so expensive and people are trying to save money, and yet they missed on the top and bottom line at CarMax.
You're not wrong. People are buying more used cars, but this is an instance where you saw a lot of pull forward because of the tariffs. You saw a big frenzy of buying back in April after the Liberation Day and the tariff announcements. And so we're lapping some of those things. And also, as a lot of people, went into new cars, some of the used car business fell down a little bit.
Yeah, shares getting smashed this morning, down 16%, adding to a 30% year-to-date decline. Shelley, thank you so much for joining. That is Bloomberg's Shelley Banjo. Now, all of those things would seem to suggest that this is an economy in trouble. Not so, according to the economic data released in the last hour. It showed the U.S. economy growing at the fastest pace in nearly 2 years, thanks to consumer spending, though apparently not on used cars. Fed Governor Stephen Miron spoke to Bloomberg ahead of that data on the next steps for the Fed.
My view is not one of enormous economic pessimism. I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
I wonder if you would still call it as restrictive with this latest batch of data in hand. Joining us now is Michael McKee, Bloomberg International Economics and Policy Correspondent. Mike, can we talk about the data? Jobless claims, GDP, what did it show?
Basically, it shows it's a tough day for the Trump administration because on the one hand, they want you to believe that the interest rate should be cut significantly. But the data are telling a totally different story, one that the administration could embrace, because, as you mentioned, we get strong GDP growth and we have this odd situation that the Fed's been talking about, low hiring but low firing, with jobless claims falling to 218,000. Durable goods orders were up 2.9%, and as part of GDP, the increase in GDP, we saw an increase in business spending overall. Now, durable goods is interesting. You're talking about Intel, but computers and computer chip orders were down during the month. Even though we saw a big increase in durables, it was mostly airplanes. The trade good balance shows the effect of tariffs, $85.5 billion, because imports fell by a huge amount, over 4% in July, after rising significantly because basically we saw people pulling forward expenses. As you mentioned, GDP up 3.8%, revised up from 3.3%. Consumer spending pushing that higher, business spending pushing that higher. So where do we go from here? Well, we know where Governor Myron is, and now we're beginning to see where more members of the Fed are. We have a lot of Fed speak today, and the first three have been out. You heard from Myron. Austin Goolsbee a few minutes ago saying he's not sure they should front load rate cuts given where the economy is. And Jeff Schmidt, who is perhaps the most hawkish of all the Fed governors, just out with a speech this morning saying that inflation's too high. The labor market, though cooling, still remains largely in balance, and he views the current stance of policy as only slightly restrictive, which I think is the right place to be. So he's not calling for rate cuts either. Mr. Myron, I think, is on his own island at this point.
All right, Mike, thanks very much. Michael McKee there in Washington, D.C. Let's get a quick check on futures. Just about 20 minutes to go until the start of trading. Looking at red arrows across the board. S&P futures down about 0.5%. NASDAQ futures off even more, 0.75%. And Russell futures down by more than 1%. So we have some pretty significant declines in futures after what has already been a couple days in a row of losses.
Yeah, and that is also being fueled by what we're seeing in this bond market. Yields are higher across the board. The 2-year yield goes up by 3 basis points, 10-year also 3 basis points. We are trading at around the highest in about 3 weeks. So that causing the pain, especially in the small cap index that you pointed out.
Yeah, absolutely. They need those rate cuts that Myron is pushing for, because a lot of the small caps
are unprofitable.
Don't make any money
Correct.
at all. Coming up, the U.S. lowers tariffs on auto imports from the EU, not to a level that you may not have expected, but to the level that they had already promised, and prepares for levies on medical devices. Your trade roundup next. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment. Check in on the state of the movie business. Get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles.
타점 보면서 시장을 나가도록 하겠습니다. 좀 더 지켜보고.
Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los
예상
Angeles
7
October 8th and 9th.
근접시에 사인드리도록 하겠습니다.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Former French President Nicolas Sarkozy has been sentenced to 5 years in jail for criminal conspiracy after judges found his 2007 campaign was secretly bankrolled by Gaddafi's regime. Sarkozy, who denies wrongdoing, was cleared of more serious corruption charges, but must begin serving his term within a month. The White House Budget Office is ordering federal agencies to draft plans for mass firings if Congress doesn't fund the government by October 1st. That's a sharp break from past shutdowns when most non-essential workers were only furloughed and later paid back. Democrats call it intimidation, and Senate Minority Leader Chuck Schumer is warning the move will end up reversed in court. And Jimmy Kimmel's late night return earlier this week pulled in 6.3 million viewers. That's the biggest audience ever in his regular slot, quadruple this year's average, despite the fact that Sinclair and Nexstar stations didn't air the show in major markets. The spike follows Kimmel's suspension over remarks about conservative activist Charlie Kirk. His opening monologue has racked up over 26 million views online. Joe Matthew yesterday was talking a lot on Balance of Power about the fact that they couldn't see it in Washington. And I wanted to call up Joe and tell him about this thing called streaming or YouTube. You don't have to have cable to watch it. You can just have Disney Plus.
Does Disney get the same amount of revenue, though, if you're just watching a video on YouTube? Probably not, right?
I don't think so. But the point is, you don't need the normal linear television setup. You don't need bunny ears to watch ABC, NBC, and CBS. They all have streaming content that you could watch anywhere, whether or not Sinclair decides to broadcast in your region.
Which is like kind of bad for Sinclair and Nexstar, for people to be like, we don't need you. We can just go look at this stuff online.
Apparently not everyone's figured it out yet, but a lot of people have figured it out.
That they have, and a lot of people clearly watched on cable too, of those that could. Elsewhere, Matt, there are a number of developments on the trade front. The U.S. has officially lowered tariffs on European Union auto imports to 15%, a win for the bloc. Meanwhile, the Trump administration launched investigations into imports of robotics, industrial machinery, and medical devices. Let's discuss with Bloomberg's global trade czar, Brendan Murray. Brendan, a reminder that none of this is settled. Let's start with the 15% tariff on autos from the EU. It's something that the bloc had wanted. They'd wanted relief. How big of a win is this for them?
Yeah, exactly. It's not exactly a win if you pay 15% more for your exports to go to another country, but it's a relief because the previous level was 27.5%. So this is something that European automakers have been waiting 2 months for. It's backdated to August 1st, so there's a sense that that they can deal with 15%. It's not exactly a best case scenario, but it's something they can absorb and we'll just have to deal with. The big question now between the U.S. and the EU is, can they address the 50% steel and aluminum tariffs? Those sky-high rates are hurting the exports of European steel and aluminum to the U.S. They're the largest suppliers to the U.S. market, so that's a big issue that still needs to be addressed. They're going to try to work out some sort of quota arrangement where some quantity could be imported into the U.S. At low or zero tariffs, but that's still an issue that needs to be worked out. It's going to be a thorny one because the Trump administration really wants to put a tariff wall around their steel and aluminum industries.
Well, and this is a benefit in a couple of ways for European, Japanese, and South Korean automakers, Brendan, in that they have certainty, first off, but also, that 15% tariff doesn't look so bad if you're looking at Ford, Tesla, and GM that are paying those 50% tariffs on steel, 50% on aluminum, 25% on components made overseas, like 80% on anything you get out of China, which is a lot of stuff. So, you know, Ford says, for instance, the cars that they make, when they go head-to-head with cars out of Japan or South Korea, are still far more expensive, like $10,000 more compared to $5,000 for those that only have to pay a 15% flat tax.
Yeah, exactly. I mean, I think what you're describing there is just the complexity of this tariff policy that the Trump administration is rolling out. For every industry that you help, that you protect, you hit another one over the head. And this is just going to continue to happen. We now have 12 sectoral investigations ongoing, which could lead to tariffs, these so-called 232 cases. These are the ones that are coming on pharmaceuticals and chips and critical minerals. We just got word yesterday about the robotics and the medical equipment are subject to these investigations now. So this is Plan B if the administration loses the Supreme Court case on these broader country-by-country reciprocal tariffs, that they can hit these industries pretty hard and with a legally solid authority to use these tariffs. But when you start mixing them all together, it gets very complicated to pick winners and losers. Eventually, you just create this massive bureaucracy that hurts a lot of companies.
Yeah, it really has a feeling of one step forward, two steps back. Brendan, thank you so much for joining us on that. That is Bloomberg's Brendan Murray. And speaking of cars, we talk the ultimate car. It is McLaren Racing's team, which is now valued at over $4 billion in its latest stake sale. We're going to speak to the CEO, Zach Brown, a conversation that we are excited for. Will Piastri win the Drivers' Championship? Will they finally get the Constructors' win? That looks to be on the docket in their next race. All of that, stay with us. This is Bloomberg Open Interest.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Stocks may not be in bubble territory. That is according to strategists at Bank of America. The team led by Savita Subramanian told clients that, quote, the S&P 500 index has changed significantly from the 80s, 90s, and 2000s. Perhaps we should anchor to today's multiples as the new normal rather than expecting mean reversion to a bygone era. That is a stark difference from many on Wall Street who have compared AI stocks to the dot-com bubble. Joining us now around the desk is Alpine Saxon Woods Chief Market Strategist Sarah Hunt. Sarah, this time is different. We always say it every time we think times are different, and then it's not. But the thing is that if this is a bubble, it can run a whole lot longer before something bursts. Just how are you thinking about this environment and the huge run-up we've had specifically in AI-related stocks?
Well, not to date myself, but I was around for some of the changes that happened in those marketplaces. And the parallel between now and the dot-com bubble, for me, is a little bit disingenuous, only because at that point in time, you were seeing a lot of customers being financed by their vendors. So a lot of the sales, now this is the argument.
You mean like NVIDIA?
I was going to say that.
And I was just about to say, and now we have a round robin of one, but it is one where the cash actually exists. This isn't something where people are giving you credit for buying something because you want the sale. There's actually a lot of cash being generated by these companies, so that the customers have the cash to do it. The question will be when that spending uptake starts to slow down, because even if you don't stop spending, any acceleration that decelerates, markets don't like that, investors don't like that, and that's where you start to see cracks in the margin, and that's where you keep seeing these little moments in the tech sector where the stocks have a problem because people are starting to worry about that cadence of spending.
But are we really going to see a return on these investments? I mean, so far, I haven't seen many practical use cases. HSBC was pretty cool today with their bond pricing.
That's the other.
That's not even AI. That's quantum.
That's quantum computing, and that's the other issue. But if you think also about all that money that was spent on dark fiber, how long did it take to get absorbed? But then you started to have fiber shortages again. So I don't know what the answer is in the near term, but I think from right now, people are much more worried, as I think Facebook put it, than of underspending than overspending.
All right, we're going to keep you here with us because we have a lot more to talk about than just this, one question. Although I think it's pretty fair to say that's been a huge market driver. Sarah Hunt staying with us. Check on futures as we head to the opening bell. We're down for a third session in a row. If we open this way, and it looks like, of course, we will, because there are only 4 minutes to go. Down 0.5% on S&P futures, down 0.2% on NASDAQ futures, and the Russell down more than 1%. We'll be right back with your market open. This is Bloomberg.
For Trump to win, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good educations, and latest technology. That's the only way to go. Education not contribute much profit for everything, but from the country point of view, that's most useful contribution, what FPT should do. And today we're thinking about every kids not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging.
Yes, exactly.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burton outside Windsor Castle, England, and this is Bloomberg.
본장 시작되었습니다. 모두들
We are moments away from the start of trading. I'm Matt Miller. This is Bloomberg Open Interest, looking at a real drop in futures here, 0.5% on S&P futures. We're down 2/3 on NASDAQ futures, and Russell 2000 small cap futures down more than 1% because, at least in part, we have really strong economic data out, and that doesn't bode well for the Stephen Byron camp. Why would we need 100, 150 basis points of rate cuts by the end of the year if the economy is growing at 3.8% and jobless claims are coming in at a low? Ringing the bell, the New York Stock Exchange, you've got Lee Jae-myung, His Excellency Lee Jae-myung, the president of South Korea, to celebrate the 80th anniversary of the UN at the UN General Assembly. I'm sure he was just electrified by President Trump's speech the other day. Down at the NASDAQ, you've got Kodiak, which is, I'm going to say it's like some kind of AI autonomous vehicle SPAC. In any case, I'm sure we'll hear much more about that in the months and years to come. Danny, what stocks are you watching?
I am watching Starbucks this morning, Matt. Sure, it's not the biggest mover, but it is noteworthy what they're doing. They're down just about 0.3%, and they say that they're going to be closing several stores. They're also going to be cutting 900 jobs. All of this is part of a $1 billion restructuring plan. Overall store count for them, that drops by 1% during its 2025 fiscal year. And Matt, that also comes off the back of all the changes they've tried to make, like you can pour your own milk now. They tried to put things like boba in the stores and cut down on the complexity of drinks. But I guess those are all just cute things, and you actually need to start firing people and closing stores to make change.
I mean, they have over 18,000 stores, and the ones that I've been in aren't so impressive. So maybe,
you can't sit in them anymore. Have you noticed that they've like taken out seating in so many Starbucks? I'm trying to sit, drink a coffee, and relax.
It's just not chill. But maybe it will become chiller. Intel is set to extend Wednesday's rally after Bloomberg reported it approached Apple about securing an investment. You know, hey, Tim, you can do this the easy way or you can do this the hard way, you know? That follows a $5 billion partnership with NVIDIA and, of course, the 10% stake from the U.S. government. Right now, those shares are up 1%. But to me, this is something we can talk just briefly with Alpine Saxon Woods chief market strategist Sarah Hunt about. I feel like if the government is buying these companies, right, and you want to get on the good side of the president in order so that your business goes more smoothly and you don't have regulatory problems down the line, maybe you chip in a little bit, right?
Well, it's an interesting confluence of events because if the idea is we want strategic items made in the United States, then Intel makes sense in terms of you can actually produce chips here because one of the biggest concerns about that post the pandemic was a shortage of things and then tensions between China and Taiwan.
So it's a good point, and that's not safe, right? I mean, we need to be able to make chips for national security.
We need that. If it was a different kind of investment, then I think the questions would also be different. So this is one of those things where it's an and, where the government is doing it and it makes sense strategically for companies that are here to be doing it as well. Is that the case in all industries? That's a different question, and I'm not sure I would answer it that way. But I would make the argument that similar to chips, pharma would make sense to have more stuff produced here because you don't want to be dependent on other countries for ingredients. There are a lot of things that you could argue we gave away strategically that we want to now pull back. Is that going to work? I don't know. We're in the process of trying to find out.
So, Sarah, is it time to brush out the list of companies, look through each individual one, say maybe who's got a loan from the U.S. government, who looks to be crucial for security, and just start buying up those companies, assuming the government's going to buy a stake in them?
Well, interestingly, even the defense companies have rallied, but there was a period of time where the defense companies, where you would argue we're still going to need a lot of defense, were looked at as we don't really want to own these right now. So I think that there is a yes to that, but there is a fashion that goes through, a momentum and a fashion that goes through investing themes, and whether or not those themes can stay forever is really the question. And I think you're getting a look at that now because some of the quantum computing, to your point earlier, is one of those areas where the valuations aren't really there, but the theme is driving them so strongly. So I think that there is a point to that, but it doesn't always guarantee the things.
What's your take on the Fed? It's such an interesting, we all love the kind of macro chat here, but it's such an interesting day to watch Stephen Myron do the rounds on cable news and say, like, the economy's in a difficult position. Everything's slowing down. Rates are excessively restrictive, right? And then you see GDP come out at 3.8%.
So I think that there are a couple of different factors going on there as well. The first one is we still don't really understand the pull through, how strong that's been, whether or not that's going to come to be a problem. I think
tariffs.
Right. So I think that the idea that we are going to need some stimulus may be coming from the idea that the tariffs are finally going to hit, things are going to slow down. I don't know the answer to that. The employment numbers, I mean, this is one of those instances where the futures changed very rapidly because now good news is bad news because it means the Fed doesn't necessarily have to cut, and bad news has been bad news because bad news has been good news. So we're back in that area where it's all about monetary policy. But the question really is, does monetary policy, can it fix the things that we think are going to be the problem? And I'm not sure the answer to that is yes, but that's the argument that you're going to have because that's the argument that you can have.
Right. By the way, Myron's argument isn't necessarily that the economy is really bad. It's just that it could get really bad because we're too restrictive. So maybe he would look at today's data
well, because we're too restrictive and because we're putting massive tariffs on all of these companies, right?
Well, and because of immigration, he thinks so too. But Sarah, this underscores the point is that there's a lot unknown.
Hang on, so Myron's saying the economy could get really bad because we're doing mass deportations and we're putting massive tariffs on our trading partners.
No,
so let's use the Fed as a tool to make this policy a little bit more
not exactly
digestible.
His argument is that less immigration and tariffs, all else equal, lowers the neutral rate. And the neutral rate is much lower than where the Fed is. Not that the economy is bad, but just that the neutral rate is lower. But Sarah, I mean, this is a concept that people really struggle to understand what the neutral rate actually is. Could we be in an environment where next year the Fed is making policy over something that's really squishy and difficult to understand? Really gets over their skis and rate cuts to get to this philosophical level that, again, we don't know what it is.
I think that the inflation data is going to be the guide on that because I think that it is harder and harder to make that argument if you see inflation going in the wrong direction. If inflation is quiescent or stays less problematic, that's going to be the debate. If inflation picks its head up, that debate is going off the table, and the debate that you're going to have is it doesn't matter right now what the neutral rate is. Inflation is so bad that we have to do something about it. And if the labor market is where it is right now, it's looking not nearly as scary as people keep thinking it was. And this is very similar to the scare that we had last year, where the numbers were really bad in August. September created a big 50 basis point change, and then this year was sort of like, well, we don't know, but we should do something. And you could argue that the Fed funds rate was a little on the elevated side. Now it's going to be a different debate each time, depending on where the data shakes out.
By the way, to their credit, at least so far, tariffs don't seem to have destroyed the economy, and inflation hasn't really picked up. I mean, I know the Fed says 2%, but we all know they don't mean that, right? 3% is really where they feel comfortable. If we stay here, is it a surprise to you that we've done so well keeping inflation in check and, continuing to grow with these massive tariffs?
So this is the big question about what tariff rates are actually hitting whom at what time. How much pull forward is there? Is that one of the reasons that GDP is up so much because people pulled forward? What was the import? What does it look like? It changed in July, but you had a massive move higher in June because people were bringing goods in. When does that run out? And I would argue that if you can keep moving the tariff rates around like we have been doing, you pull forward and it continues to look good, and then people say the economy is really great. Is there a point where it falls off a cliff? I don't know. Does it slow down a lot? Do people just go, here's to CarMax's point, right? I bought a new car because I was afraid it was going to cost too much, and now I didn't buy a used car, but now I have a car. So to what level are we front-running our own economic activity?
By the way, does the equity market keep trading higher if we keep getting good news, or do we get more days like today if that happens?
I think that if you keep getting good news on the hard data front like GDP and sales, yes, because that's earnings, right? It's all about earnings, and it's all about that change in direction. If that direction looks higher, the market keeps going. If that direction starts to wobble, the market starts to wobble. And if people start baking in, third quarter numbers are going to be really important. The commentary is going to be important because that's going to be where the rubber may be hitting the road on tariffs and or what's going to happen in the next couple of quarters. I don't think you're going to get a lot of forward guidance in the third quarter, but people are going to be parsing through what companies say because it's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
Sarah, this has been so excellent. A masterclass. Sarah Hunt, Alpine Saxon Woods Chief Market Strategist. Please come join us again soon. All right, let's get a check on your equity market this morning. About 10 minutes into your trade, we're lower by 0.7%. What is leading us there? Let's go straight to the decliner column. It is NVIDIA, Broadcom, Tesla, Oracle. It is all the very highly valued stocks with a little bit of jitters in this market. Oracle down after a downgrade this morning. Actually was Redburn initiating coverage saying that they are trading on headlines, not fundamentals. When it comes to the price action for the individual sectors, by the way, IBM,
주문 청산이 완료되었습니다.
energy at the top as oil has been continuing to gain at the bottom. Communications, infotech. So Matt, it seems to be a market where the most expensive things are the ones leading the declines this morning.
Yeah, very interesting stuff. I'm a little bit distracted because I just keep thinking about Formula One, and I know we need to stay focused.
I'm excited about that too, Matt.
On markets, and we just opened up, so we are continuing to watch these markets. The S&P 500 down 0.8%. Coming up, Oracle under pressure after it gets a rare sell rating on Wall Street, but they were successful in selling like $1 gazillion worth of bonds. So we'll talk about that, and Zach Brown is going to join us after Top Calls. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Let's get you some top calls. Some of the analyst action that we are watching this morning. First up, Oracle gets initiated with a rare sell rating. That's at Rothschild and Redburn. The firm is warning that the cloud boom, that is just overstated. Its price target is $175. That would imply a 43% decrease from the last close. Shares down nearly 6%. Next up, Lululemon. That gets downgraded at Needham because the competitive environment is too challenging. Needham recommends moving to the sidelines until Lululemon can, quote, right the ship. Those shares down almost 3%. Meanwhile, Wendy's, that gets downgraded at North Coast Research. The analysts say the fast food chain lacks leadership, market direction, and momentum, and warns that 100 stores could be at risk. Matt, those shares down 1.5%.
My favorite store was closed
확인 바랍니다.
Wall Street in Columbus,
I
Ohio.
honestly can't remember the last time I've had Wendy's, so I can't participate in this.
Yeah, well, I grew up in Columbus, so it's an important restaurant. Here, coming up, speaking of important, investors pile into F1 as the popularity of the sport continues to speed ahead. We'll talk with Zach Brown, McLaren Racing CEO, next. This is Bloomberg Open Interest.
충분히 시세는 매도를 잡고 있다고 판단되어서 매도인이 사인드렸습니다. 좀 더 지켜보고 실시간 대응 이어나가도록 하겠습니다. 자, 그리고 잠시 후 약 15분 뒤에는 부동산 관련 지표 8월 기존주택 판매 데이터가 발표됩니다.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The team currently at the top of the F1 championship standings is winning in more ways than one. McLaren Racing was valued this month at over $4.1 billion in a stake sale, the valuation underscoring the increased investor interest in a growing sport. Joining us now is Zach Brown, McLaren Racing CEO. He's also the author of the upcoming book, 7/10 of a Second, which will hit shelves later this year. Danny is very excited to read this book. I mean, I want to read it too, but she's the bigger F1 fan.
I will be the first buyer.
Well, I hope you enjoy it.
Thank you,
I hope you enjoy it.
Tell us first about the valuations. Did that stake sale go through? Is that
We're all done. We're all done and dusted.
So, man, these valuations continue to just fly. I mean, that's double what it was last time I spoke with you.
The sport is on fire. You know, every metric, demand for teams. You know, it wasn't long ago before Liberty acquired the sport and put a cost cap in place, which kind of ensured everyone's financial stability and on-track stability and competitiveness. So it's been a wonderful thing. The fans are coming out in the tens and hundreds of millions. sponsors, partners in the sport, unlike we've ever seen before. So the sport is on fire, and long may it continue.
There's always calls out there when sport valuations pick up that it's a bubble. Redburn's and the Milan owner, for example, has been calling out sports valuations are in a bubble. How do you think about it? Because you are at the top of your game right now. You are in serious race to have both the constructors and championship victory, but also you're going to get regulation changes coming in next year. So have we kind of hit a ceiling in how high valuations can go?
I don't think so. I think if you look at sports in general, and I wouldn't say I'm an expert in all sports by any means, but they've only been going north forever. And, you know, every time there's a kind of record deal in whatever sport it is, everyone goes, oh, that was crazy. And then you look back and in 5 years, they've still gone up. So I think our sport in particular has a lot of room for growth. We have 24 races. We have demand for probably 30 Grand Prix, so the demand is strong. Our car is, has the best brands in the world, the MasterCards, the Googles, et cetera. The competition is amazing. Last year, 4 teams won, 7 different drivers won multiple races. It's the first time I've seen that in my 30 years of following the sport. So the on-track competition is great. The off-track drama, as captured by Netflix, is fantastic. The demand for Grand Prix has never been stronger. So I think the sport, in many ways, is just getting going.
You have also, I think, 53, or last I checked earlier this year, 53 commercial partners, and you've generated the most revenue of any team in F1 history. How do you go about that? Since you're so focused on cars and racing, and you're dealing with Norris and Piastri, and you're focused on aero, like how do you take off the sports hat and put on the business hat?
Well, fortunately, we're a big organization, and Andrea Stella has done a wonderful job running our racing team. So he focuses on the on-track performance, and I focus on running the business. And of course, we're about 1,400 people inside McLaren, so it's definitely not the two of us. We just have our leadership roles, and we're very focused on our partners. We're very focused on our fans, because you need to have every part of your racing team, not just the technical side, operating as we call world championship material. So whether it's your CFO around your cost cap, or your head of HR around culture, which is what's made our team so strong, our commercial team, everything has to be firing on all cylinders. Sorry to use the pun.
Yeah, I wish there were more cylinders.
Maybe the regulations in 2026 will get there. But Zach, I mean, this is kind of where like the drama bleeds into the sport and the business of the sport, right? Especially with a more diverse viewership coming in. I know you've been very open in saying Christian Horner leaving F1 is good for the sport, or at least it's in a healthier place. There have been rumors that he's going to be able to come back now, and maybe will next year. What do you make of that for the sport if he does come back?
I mean, he's had a stellar career in Formula One. His results are lots of driver championships, world championships. So I think when you get into sport, not everyone's best friends. There's different characters. So while we may not have too many cups of tea in England, as we say,
체결되었습니다. 확인 바랍니다.
and I think that's what makes the sport very exciting. You know, that's that kind of Netflix effect is what happens off the track. And I think our sport's unique in that not only is the competition on the field of play extremely exciting, there's a lot of competition off the field of play, and it's a small group of team bosses and drivers, so I think the fans can kind of get to know us all. And yeah, so I've got my friends in pit lane and some that aren't, but I think that's what makes it exciting, and it's authentic and genuine.
It's very fun. I will say that we now have Gunter Steiner in MotoGP. So my family, we watch the motorcycles, and it's awesome to see Gunter come over from Haas.
He's a great personality.
He's definitely a character.
He's so much fun, and that makes it all the more fun to follow. Like, we've been able to get into that because of the Netflix documentary. Do you think, on balance, that's, I mean, is that only good for F1?
It's only good. If we look at what Formula One, where we needed to continue to grow the sport, kind of pre-Netflix, pre-Liberty, it was North America, right? The sport's huge everywhere, but North America, we had one race, and it was kind of a second-tier sport. Now we have 3 races, and it is a major sport in North America. Tick. Youth, because that's all of our future, and we've brought in a lot of youth, and then women in diversity. So the sport over the last 5-6 years under Liberty's ownership has really modernized and become a very inclusive sport versus what was a very exclusive sport. And you saw it took a little bit of change when Netflix came out. two teams didn't participate because it wasn't we're not going to open our doors. And then when we did, we saw the fandom that came and the exposure it brought for our sponsors. I think they went, uh-oh, I think we need to be in this next time. And so it's been wonderful. And I think the sport now recognizes that without taking care of our fans, we don't have a sport. And I very much believe sport is entertainment. Anytime you're buying a ticket, whether it's for a movie, a sporting event, a rock concert, that's entertainment. So we need to put on a good show for our fans.
But it's beyond athletics, right? I mean, because now Lando and Oscar and you, and you've got to deal with this intrusion into your personal life as well.
Yeah, but you know what? We're in the public spotlight, and that's how our sport works. So if you're not comfortable with that, maybe you should pick a different job. And so I remember my first ever Grand Prix, 1981 Long Beach Grand Prix. I met my first Formula One driver. I saw the cars, and the impression it left on me. So at McLaren, there's not a photo or an autograph that we don't stop for, whether it's a driver or myself or Andrea, because you want to leave that lasting impression that I have from 1981 of I
청산이 완료되었습니다.
And we've all met athletes over the years that you were a bit disappointed once you met them. And so therefore, it was a St. Louis Cardinal. I'm a Cardinals guy. But, being good 95% of the time isn't enough, because those 5%, it's kind of a heartbreaker. So, you got to be on your A game all the time. And whether it's a restaurant, you can't control when people see you and they want to talk to you. They're excited. They want to learn about the sport. And so I enjoy it.
So you still like going out to restaurants?
100%, 100%.
Zach, we can't let you go with just asking about the rest of the season, because you've essentially got the Constructors' Championship essentially wrapped up. How much of your attention now is shifting to the drivers? And how much of a threat do you think someone like Verstappen could come up and really threaten, be it Lando or
a disruptor?
Oscars? A disruptor, yes.
I think you got to pay attention to Max. We got to keep doing what we're doing. The Constructors is looking very good. We had a chance to wrap it up in Baku, but let's not talk about Baku. Hopefully we can get the job done in Singapore. And what we want to do is we want our two drivers and Max, but we'd like to kind of get them out of there, to fight for the championship and just give them equal opportunity, equal equipment, which is what we're doing, and kind of may the best man win. That's what we want to do. We'd like to not play a role if at all possible, but you get into, Lando had a mechanical and things can happen and safety cars and things of that nature. But I think our goal is to just set Lando and Oscar up to be competing for the championship down to Abu Dhabi, and may the best driver win.
All right, well, that is an excellent way to put it, and great place to end it. Zach, thanks so much for joining us. Zach Brown, they're the CEO of McLaren Racing. Coming up in the next hour, Morgan Stanley's Caterina Simonetti joins us on the FOMO that's emboldened retail traders, and the CEO of Nutrabolt, the company behind C4, plus the Prime Minister of Holland. This is Bloomberg.
자, 다시 한번 매도 진입 사인드립니다. 매도 진입
체결되었습니다.
사인드립니다.
확인 바랍니다.
투자정보방입니다. 매도 진입 사인드립니다. 자, 약 3분 뒤에는 금일의 중요 지표, 마지막 중요 지표 중 하나인 8월 기존 주택 판매 발표됩니다. 그리고 보험원 부의장의 연준회, 보험원 부의장 연설도 예정되어 있고요. 자, 시장 상황 지켜보고 사인 드리도록 하겠습니다. 현재 매도 진입권 실시간 대응 중에 있습니다.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2% and inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're cheating.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
데이터 발표 한번 확인해 보도록 하겠습니다.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. A dramatic upgrade on growth. The Commerce Department's revised reading shows the economy expanded at a surprising rate of 3.8% from April through June. Economist Gus Fauché.
So the economy looks even stronger in the spring, early summer of 2020-25 than we initially thought. There was an upward revision, particularly to consumer spending. So we continue to see consumers increase their spending, at least through the middle of this year.
Palestinian leader Mahmoud Abbas is addressing the UN General Assembly via video right now. He called on all countries to recognize a Palestinian state and assured through an interpreter.
We are ready to
체결되었습니다. 확인 바랍니다.
Hamas will not have a role to play in governance.
He condemned the October 7th attack against Israel. Sources tell CBS News federal prosecutors will make a decision on whether to comply with an order from President Trump to indict former FBI Director James Comey before the statute of limitations expires next week. Former Justice Department official Tom Dupree.
What is different about this case is that there clearly has been significant presidential pressure brought to bear, and you don't want a universe in which that pressure distorts the prosecutorial judgment.
Trump allies have accused Comey of lying to Congress 5 years ago when he testified about Russian interference in the 2016 election. 2 students at Syracuse University have been charged with a hate crime for disrupting a holiday observance at a Jewish frat.
Witnesses say one suspect entered the Jewish fraternity house and threw an open bag of pork inside during Rosh Hashanah observances for the Jewish New Year. A second suspect is accused of driving a getaway car. Brian Raphael is president of the group End Anti-Semitism Now.
It's really upsetting and very frightening for the whole community that this can happen.
The DA says the religious implications of pork being thrown into a Jewish fraternity house make this a hate crime, not a college prank. The 2 suspects are Syracuse University sophomores. Peter King, CBS News, Canastota, New York.
In Paris,
Je suis donc condamné.
70-year-old former French President Nicolas Sarkozy says he'll sleep in prison with his head held high after he was convicted of receiving millions of euros for an early 2000s political campaign from Muammar Gaddafi's Libyan regime. The BBC's Hugh Schofield was in the courtroom.
Not only was the former president sent to jail, but the particularly harsh terms of the sentence mean he should now be incarcerated even if he lodges an appeal.
And he says he will. Dow down 200. This is CBS News.
조금 더 지켜보고 사인 드리도록 하겠습니다.
The number of measles cases is still rising in the Southwest.
A month after health officials declared a major measles outbreak in West Texas over, infections continue to rise in parts of Arizona and Utah. As of this week, 52 cases have been reported in Arizona, mostly in the northern part of the state, and 42 have been confirmed in Utah, mostly in the southwestern portion near the Arizona line. The CDC says the number of known measles cases in the U.S. this year now tops 1,500, the most since 1992, with 3 deaths reported. Steve Kathan, CBS News.
Starbucks is set to make big cuts. CEO Brian Nichols says the coffee chain will lay off more than 900 corporate workers tomorrow and eliminate many open positions. It'll also close about 1% of its locations in North America. He says it's in order to trim costs and plow money into improving cafes. Deborah Rodriguez,
손절 사인
CBS
드리겠습니다.
News.
손절 후에 재진입하도록 하겠습니다. 손절 사인 드립니다.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed
주문
is looking
청산이
at tariffs, the
완료되었습니다.
uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Scarlett Fu, Paul Sweeney, live here in New York. We're streaming live on YouTube as well. This is the Bloomberg Intelligence program. Lots of economic data. We'll get to that later. But boy, the GDP numbers, Scarlett, were really good.
Which is a surprise. It was a third read of this data point.
And personal consumption was up. So it looks like the economy's kind of hanging in there.
No need to cut rates, right?
No need to cut rates. That's what I would say, but who knows? All right, we're going to check in with Ed Ludlow. He's our B-Tech co-anchor. He does all the technology stuff. I want to ask him about this Intel talking to Apple. That would be something.
That's a Bloomberg scoop, by the way.
That is a Bloomberg scoop. That is a green B. That is right on the Bloomberg terminal. And Starbucks, yet again, another restructuring. Scarlett and I were just saying, don't they always kind of restructuring here? But Michael Halen, he's the restaurant analyst of Bloomberg Intelligence. He'll break it down for us. Dana Dioria, co-CIO and group president at InvestNet Solutions, give us her market outlook. It is Environment Week here in New York City. Jessica Roswell, European Commissioner for Environment, Water Resilience, and Competitive Circular Economy. She's going to talk to us in studio on the link between environmental protection and economic growth there. So we'll have a interesting conversation there. So a lot coming up in the next 2 hours. Let's kick it off with John Tucker and a Bloomberg Business Flash.
All right, guys, and this Bloomberg Business Flash being brought to you by IBKR will December 2025 CME E-mini S&P Index Futures settle above $6,200 on September 30th of 2025. At IBKR Forecast Trader, the yes was recently at 80%. You can start predicting today at ibkr.com/forecast, a last trading day for this contract, September 30th. All right, the major stock averages are lower as rates push higher, and a lot of economic data. One that was just out, it actually came out a little early. It was supposed to come out at the top of the hour. August existing home sales, used home sales, I like to call them, falling to a 4 million rate. That's actually better than expectations. Home sales edging down. The high costs seem to be stymieing buyers at this point. The other data we had today, the economy growing in the second quarter at a revised 3.8% annualized pace. The latest revision, fastest in about 2 years. You can credit large part resilient consumer spending. We also saw evidence of some strength in the job market. Initial applications for unemployment benefits falling to the lowest since mid-July. So as a result of that, rates go up. The 2-year up 4 basis points, 364. 10-year up 3 basis points, 418. Who hates higher rates? That would be tech stocks. So NASDAQ 100 down 190 points, down about 0.8%. Now, meantime, Fed Governor Stephen Miron made his case for more rate cuts earlier today on Bloomberg.
My view is that policy is quite restrictive, and so I'd like to adjust quickly to get back to a more neutral area, right? That just means a series of 50s until you get much closer to zero.
And this breaking news to bring to you: private equity strikes again in the sports world. The Patriots selling an 8% stake. This according to Sportico. So this would value the team at what?
More than $9 billion.
More than $9 billion for the Patriot, the dreaded Patriots.
You made it sound like private equity was the evil empire here. It strikes again.
Did I really?
Well, there's that new rule passed a year or so ago.
There's no commentary on this end.
No.
Well, there's that new rule about a year ago that private equity could buy up to 10% stake in these franchises. And we've seen 4 or 5 of these deals, I think, so far.
Yeah, Sixth Street is one of the approved firms that can do that.
That's right, approved firm. Excellent.
Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. Scarlett, Paul Sweeney, we're live here in our
체결되었습니다.
studio in
확인 바랍니다.
Midtown Manhattan, streaming live on YouTube as well. As John was just reporting, we got some selling out there in the marketplace. But let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu, and we're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at?
Yeah, let's start with Eli Lilly, the drug maker, down about 1%, so modestly underperforming the S&P 500, though not one of the worst performers. This comes after news that the company halted a study of an experimental drug that would be done in combination with one of its weight loss drugs to help prevent obese patients from losing too much muscle. This has been a long debate for these companies. Eli Lilly, Novo Nordisk leading the charge there with patients who are going on Zepbound, Mounjaro, or Ozempic and are actually eating less and consuming less, but therefore losing not only fat, but muscle and other weight. So this coming a bit surprising, according to some analysts, that the company would halt its trial, though a spokesperson pointed to the fact that they reevaluate these drugs trials on a regular basis. So ticker LLY down again about 1% right now in the morning session. Not a sharp move lower, though, really only trading at the lowest level in a few weeks.
I'm also looking at the auto sector doing pretty badly this morning. And of course, if within the S&P 500, you're really talking about Ford, Tesla, and General Motors. But you've got a car or auto adjacent company that's given some disappointing results.
Yeah, worst performer in the S&P 500 this morning by a large margin is CarMax, ticker KMX. Scarlett, this coming after earnings that significantly missed analyst estimates. Truist describing it as, quote, miss across the board with nothing good to see here. Ooh, which is brutal from the sell side. You're supposed to be playing and currying favor to the companies. Unless you're hold rated, though. Scott Ciccarelli maybe reevaluate that price target of $74 because the stock is below 44. Trading, Scarlett and Paul, at the lowest level since the pandemic, March 2020. So CarMax under pressure. We're keeping an eye on AutoNation, Carvana, pretty much anything in the ecosystem again after not only did total used units come in well below estimates, analysts really saying that those weaker trends have continued so far into this current quarter. So it does seem pretty dire out there.
You know, speaking of things being dire, Robert Bosch over in Germany cutting about 13,000 additional jobs at its auto parts business because you've got a sluggish European car market as well. So not good across the world.
But hey, the markets are trading near all-time highs, so it's all totally fine. Just ignore the consumer. And want to wrap up with Jabil, ticker JBL, the second worst performer, only down 7% to CarMax's 24%, though that is the worst drop for that company since the summer. Jabil is a company in the supply chain ecosystem within tech, so some of their big clients are Amazon, Apple, Tesla, you name it. So they reported results that mostly missed analyst expectations. We had Vital Knowledge calling out pressure on margins in their AI segment. So certainly something to keep an eye on. But broadly speaking, when you look at their forecast for first quarter net revenue, better than expected, as was core EPS. So this could be just one of those moves for a company that's moved pretty sharp to the upside in the last little bit. Right now, trading around $209 a share. A year ago was closer to $113. So giving back some of those gains, but still pretty ugly performance on a one-day kind of basis for Jabil. Again, ticker JBL.
All right, Bailey, thank you so much. Appreciate that. Bailey Lipschultz, Bloomberg News, covers all the equity markets for us. If you want more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Intel, they're talking to anybody. I mean, talking to everybody. The U.S. government who invested. NVIDIA, they invested. Now there's some reporting that they
SoftBank too. Don't forget SoftBank.
That's right. Exactly. Masa-san. Talking to maybe Apple. That would really be interesting. So let's check on somebody who does this tech stuff full time. Ed Ludlow, Bloomberg Tech co-host. Not sure where he is, somewhere probably out there in the valley somewhere. Ed, talk to us about Intel and their strategy. And is there a play here for Apple to maybe invest in Intel?
Maybe. I think you summed it up perfectly. I mean, Intel is talking to anyone and everyone that makes sense if they could save them, right, and help them get back on track. That's the way that sources frame it, at least, right? This is Intel approaching Apple and saying, would you like to invest in us? And then after that, we could talk about how we work together. I know that you guys don't necessarily always need the history lesson, but remember, for many, many years, Intel Silicon went inside many Apple products, including phones until 2019. When Apple bought Intel's modem business and started doing that itself in-house. So just like the NVIDIA scenario, they have a mixed history of cooperation, rivalry, tension. But I think that, the market's looking at very much at this like Intel's trying to do something proactive.
Right, and Intel is part of the national fabric no matter what, even though they have given up a ton of market share and have struggled in the last 10 years or so. Lip-Bu Tan is the CEO of Intel, and originally he drew President Trump's ire for not doing enough, and certainly there were questions about perhaps his potential conflict of interest because of his board seats at Chinese companies and all of that. And I might have gotten that detail wrong, but that's something that was pointed out. Yet, the president now loves him, and he's kind of returning that by being the ultimate deal maker, or trying to be at least.
Well, on paper, as you say, Intel is what this administration in particular seeks. American companies that are trying to do more of their operational footprint in country, onshoring, call it what you will. And the meeting that took place between the president and Lip-Bu clearly changed the trajectory of things. But let's be very clear. The reporting about Intel approaching Apple is our reporting citing sources. The deal for NVIDIA to invest $5 billion into Intel and work on products, both of those CEOs, when I spoke to them, were unequivocal. The administration played no part in that. And what I would say is that Lip-Bu Tan is a known entity in Silicon Valley. He has decades of experience and relationships. He's also very close with Jensen Huang anyway. He knows people in Silicon Valley well, and that's something to bear in mind.
Why would Apple make an investment here? Would it be simply being a cynical Wall Street guy that I am, that it's just to ingratiate them with the government?
Why indeed? Yeah, why indeed? People I spoke to overnight are like, doesn't make a ton of sense because of the progress that Apple has made on its in-house silicon, be it the main processor or other components. Right now, Apple in lower level handsets has relied on Qualcomm for modem, right? Or for RF chip, and in other cases they're using their own. Intel's not really involved in that process. One idea might be like Intel could help them with packaging. So a part of Intel's business is like, they manufacture semiconductors, but they also just package stuff up, which is like low margin and not as exciting. So one hypothesis is that Apple might want to do some of its own stuff around servers, or like even on the Mac side, and Intel could help them with that kind of more mundane stuff.
Or they're being strategic and, just spreading the word and getting people excited. Paul is nodding.
Yeah.
Yep. All right, Ed, thanks so much for that. Always appreciate getting your reporting here. Ed Ludlow, Bloomberg Tech co-host out there in Silicon Valley. Again, the news that, Intel may have approached Apple, maybe making an investment in Intel. And that certainly seems to be a good strategy for the company. Stock's up over 50% this year, and that is Intel. Over the last 5 years, it's declined on a per annual basis of like 8-9%. So this has been a real turnaround for Intel, getting some of those AI tailwinds. A lot more coming up.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We are being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the latest economic reports, got a few of them this morning. They show resilience in the economy. So that is pushing Treasury yields higher. The 2-year, which is more policy reactive, we'll say, is up close to 5 basis points, 365 in the twos. And the 10-year yield right now is up close to 4 basis points, 418. And that is pushing tech stocks lower. The Bloomberg Magnificent 7 total return index falling right now 0.9%. Intel approaching Apple about securing an investment in the chip maker. You just heard Ed talk about that. A deal would follow the $5 billion investment last week from NVIDIA. And Intel shares in the early going right now, they're up close to 6%. Then you had earnings from CarMax reporting a significant earnings per share and sales shortfall. That's for the second quarter. As a result of that, CarMax, one of the standouts to the downside, right now down over 24%. And then Starbucks, they're going to close stores, eliminate 900 jobs. This is a $1 billion restructuring effort. And just crossing the tape, Health and Human Services Secretary Robert F. Kennedy Jr. opening an investigation into the safety of the abortion pill, mifepristone. I believe that's made by Danco, which is, if I'm not mistaken, a privately held company. So no equity exposure there. We check the markets view. I should say the S&P 500 down 24, the Dow down 42, the NASDAQ 100 113 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg. Almost forgot the stocks. Scarlet.
Third day of losses. How can you forget about it?
Yeah, well.
It's a sea change here.
Oh my goodness, a sell-off.
Right, for now. Okay, John Tucker, thank you so much. Paul Sweeney and Scarlett Fu here for Bloomberg Intelligence at the Interactive Broker Studio. John mentioned Starbucks, and this is round 2 of layoffs under new CEO Brian Niccol. Although, can we still call him new?
No, I don't know. No, he's
been
in
like
there.
1 year,
He
right?
owns it.
Okay, he owns it. So let's bring in Michael Halen, who owns the restaurant news coverage for us here at Bloomberg Intelligence. He is our senior research and food service analyst. Michael, when you hear the news about Starbucks closing stores, cutting jobs, 900 jobs, $1 billion restructuring effort, it feels like deja vu.
Yeah, but you know what? This was very clearly communicated to the street back in April on their fiscal 2Q call. Management said that, we expect more restructuring charges. We're going to continue to evaluate our store base. Really, management wanted new CFO, Kathy Smith, to be involved in the process. So this was not a surprise. If we hear about some more store closures and restructuring, then maybe you'll see a bigger reaction in the stock.
All right, a shout out to my Starbucks on Route 35 in Wall Township, New Jersey. They do a great job, great folks, very efficient, very good. Mike, what does this company need to do? What do they say is on their to-do list to turn this company around? What are you looking for?
Yeah, it's more operations and marketing, and we're starting to see things kind of inflect here. We think fiscal 26 should be a nice bounce back year. So. First it's with the operations, right? So it's eliminating menu items, increasing labor, which baristas were very happy about, creating a smart queue for mobile orders, right? So the stores aren't as chaotic and baristas aren't serving, mobile orders for somebody 30 miles away before helping someone inside the store. And then service standards, right? They're rolling out these green apron service standards this year. It's a big investment on training and really nailing the consumer experience in the store. And then from there, it's the marketing, and marketing seems to be working. They pulled back on discounts, and what they're doing is more marketing. You'll see some TV ads, right? They're doing more digital marketing. And we think that's a smart move. It seems to be paying early dividends. Starbucks non-rewards member transactions are up. Non-discounted rewards members transactions are up. And we think these are a sign that sales are going to inflect higher in the coming months.
Okay, but this is taking a while. Paul and I were just saying that Brian Niccol owns this now. He's been CEO for a year, and they're still in turnaround mode. They're still in kind of like, let's figure out our path forward. Investors, please be patient. Are investors going to continue to be patient for another 6 months to 1 year?
I don't think they're going to be patient for 6 months to 1 year in terms of the stock price. I think Brian Niccol's job is very much safe. You know, you can't turn around an aircraft carrier on a dime, right? This is a massive organization, 18,000 stores just here in North America, over 40,000 globally. So yes, this is taking longer than a lot anticipated, you know, myself included. Are investors going to be happy if they don't see same-store sales inflect here in the first quarter of fiscal 26? No, they're not going to be happy, and you're going to see it reflected in the share price, right? So, yeah, I mean, I think they're making the right moves. This has been a longer turnaround than most had expected, but I think Brian Niccol's pressing all the right buttons right now.
Yeah, I just got back from some vacation time in Italy. I don't think I saw too many Starbucks in Italy.
I think they have a Starbucks Reserve somewhere. It looks different than the regular Starbucks store.
All right. So, Mike, I mean, you said they have 40,000 stores on this planet. Is that enough, or are they still going to be putting more out there?
They're still going to be building. I think they need to, they're going to have to nail this U.S. operation and remodel, and they're going to spend a little bit less on building stores in the U.S., a little bit more on renovating them.
Okay.
And then China, they really want to get that market nailed before they accelerate growth. So those are their two main markets for growth. They've been the company's two major markets for growth for a long time. But management's doing the right thing. They pulled back on growth to kind of nail the operations, the marketing. Once they get same-store sales and traffic trending back up strongly again, you'll see them reaccelerate development.
Yeah, but the thing is, it's taking time, and other competitors can kind of step into the void in the meantime, right?
Yep.
All right. Michael Halen, always appreciate your joining us. Michael Halen is our senior research and food service analyst over at Bloomberg Intelligence. Paul and I are looking at the markets here, and it's a third day of losses for equities.
Goodness.
I know. What happened to the bull run? I mean, it's still intact, of course, because we're still near record highs, but we're starting to see some weakness here. So I wonder if this foretells anything more. Let's bring in Dana Dioria right now. She is co-chief investment officer, so co-CIO over at Envestnet. Dana, we got some data this morning that shows the economy is holding up just fine for the second quarter, and I know that is backwards looking. The economy actually grew faster than anticipated, 3.8%, and faster than what was previously reported. Jobless claims also coming in low, which is what you want to see if you're looking for a strong labor market. Do we need to rethink whether the Fed is going to cut rates at the pace that the market expects?
Well, that's probably the question of the day, because certainly we're seeing that the Fed is not necessarily aligned on this, right? And coming off of the FOMC meeting, where it was actually pretty smooth sailing, right? You had one dissenter who wanted to go 50, but other than that, we didn't get this sort of three-way split where, no, 25, 50. It was really pretty aligned around the 25. And now, of course, as Powell said, right, it's inflation and it's employment. And if employment is still looking strong and inflation is looking, kind of bumpy, there is a chance, right, that we get a few less cuts than everybody's anticipating. But there's a lot on the other side of that. I mean, we're sitting right now in a period where markets are, they're losing their footing a little. I don't think it's anything big. I actually think with valuations where they are, you should expect some kind of pullback. But I think there's a lot, to happen before they make the next set of decisions. I still think 2 this year is probably the base case.
Hey, Dana, if in fact the Fed is in a rate cutting mode, is this maybe a time where small and mid cap stocks can actually work?
Yes. I mean, if you're a proponent of diversification into small caps, it's been a long dry run, right? We're finally past the high that we set years ago in the Russell 2000, which is great to see. I do think that is the case. I think, as we know, small caps are much more interest rate sensitive. They're more reliant on capital markets. They do tend to have more floating rate debt. So and whether the rate cuts are a little slimmer than we thought or not, we should be entering a period that's more positive for small caps and just from a fundamentals perspective, easier on them. But, we've had these conversations before. I mean, a lot of the problems with small caps, of course, is, profitability. And there's a lot of empirical research suggesting that, no to low probability small cap stocks are, kind of underperformers on a long-term secular basis. So when you're doing small caps, it does make some sense to have kind of a quality overlay or a small value overlay, pay low for it, basically.
Dana, including today, we've got 4 days until the end of the third quarter. And, typically at the end of the quarter, there's some portfolio rebalancing. It kind of changes things up a little bit. Is that a factor this time around, especially since we've got this possible government shutdown looming?
Yeah, I mean, I don't know how much I think the shutdown, it's a sad, sorry state that we're just kind of used to this. I don't think it moves markets tremendously. I think your point is valid on the rebalancing. And this time of year tends to be a little bit of a speed bump for markets, as we know, September, October timeframe. But at the same time, there's a lot solid. I mean, you started the segment, mentioning it, right? Economic growth is solid. Unemployment still looks pretty good. So I think to the extent you're seeing some rebalancing, there might be some efforts to kind of buy in on, some of the missteps that the market may have. So I don't see it as being anything, kind of fundamental to the market. It's not to say that we don't, have some difficult times to weather at some point coming. But if you're a standard average retail investor, this is probably more of an opportunity to do exactly what you just said. Rebalance, make sure you're at the right risk tolerance. It's not a get out of the market kind of situation.
Dana, what's the conversation you have with your clients about alternative investments, something in hedge funds, private equity, private credit? Those kinds of things?
It has grown dramatically in the last year or so. I would say the last few years, but really this last year, what you're seeing is just kind of a sea change in how the retail investor, and I'll say advisor base, is looking at these. We get questions all the time now around how to use these types of vehicles. And largely it's because these alts managers and traditional managers getting into the alts game are creating, new products, new vehicles that are much more accessible to the standard advisor and investor. So, it used to be obviously ultra high net worth endowments, LPs, private placements, you're locked up, you have committed capital, you have capital calls you have to manage. Now you have interval funds, right? Where they look and smell like a mutual fund. You have to wait for liquidity windows to get out. And then, you also have other fund types like tender offers, right? Private PDCs, private REITs. These are opening up a whole new swath of investors for alternative investing. And it really, it's an educational challenge for our industry, but it's also an opportunity for everyone to kind of get in the game on some of these asset classes that they just couldn't get access to before.
Yeah, it definitely feels like an opportunity because it would feel like every Tom, Dick, and Harry is out there talking about private credit, trying to sell private credit, talking about the democratization of alternative assets. We hear it over and over again. All right, Dana, thank you so much for joining us. Dana Dioria, she is co-CIO of Investnet, joining us from Hartford, Connecticut. John Tucker, we're looking at markets that have pared their losses. Equities still in the red, but not as much as before.
Yeah, it's got a more bullish feel to it, at least right now. But they are lower.
Less bearish? More bullish?
But yeah, something like that. With tech on the downside is the latest economic data that is pushing Treasury yields higher at this point. Let's do 8 of the 11 major index groups in the S&P 500 lower right now. Let's do the worst performing stock in the index. That belongs to CarMax, down over 24% after the earnings report. We got that after the close of regular trading yesterday. Best performer, you want to guess? Intel, 6% higher. Scott Kroner, meantime, at Citigroup Global Markets, tells investors, don't worry too much about these lofty valuations.
You don't have to wig out on the valuation. And that's where we kind of go back and forth with, gosh, is the market rich? The market's rich if you don't think the earnings are going to grow. The market's fine if you think you're going to continue to see this earnings tailwind, which I think, increasingly we're very comfortable predicating a view on.
So the S&P 500, 26 points lower, down 0.4%, 6611. The Dow Jones Industrial Average, 36 points lower. That's down less than 0.1%. And the NASDAQ 100 is down 119 points, down just about 0.5%. 2-year yield up 5 basis points. And again, that's weighing on tech. 10-year yield up just about 4 basis points right now. And just to bring you that at the intersection of sports and business, the Patriots set to sell a stake to 6th Street Partners, and the billionaire Dean Metropoulos set a valuation above $9 billion.
Baby.
6th Street's going to buy 3%. Metropoulos will buy 5%. By the way, that Greek billionaire, you know what we know him for?
What?
He was the owner of Pabst Brewing.
Ribbon?
Yeah.
Nice PBRs.
So the valuation would make the Patriots the second highest valued NFL team, surpassed only by our New York Giants at $10 billion. And if only they could find an offensive line to protect the quarterback,
If only.
they might be worth more. Anyway, we check the market.
Do you think PBRs are going to be available then at Patriots games?
Darn right they are.
Yeah.
Well, he used to own.
Okay, he's a seller.
Okay.
Anyway,
Big distinction.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. And of course, it is UN General Assembly Week here in New York. That means there's a lot of diplomats. There's a lot of government officials from different countries, different regions in town. Traffic is crazy, but it is great if you want to people watch and you want to talk to policymakers. So I'm pleased to say that we have Jessica Roswell here with us. She is the Commissioner for Environment, Water Resilience, and Competitive Circular Economy with the European Commission. Jessica, welcome to Bloomberg.
Thank you very much for having me.
So tell me a little bit first, before we get started, on what you're aiming to accomplish here in New York. What is a competitive circular economy?
Well, we have talked about circular economy for a long time. Actually, since the 70s, we have regulation in Europe on circular or waste management and other things. But we have not really gotten circular. So what we have tried now to do is to get it competitive. I think that is the key to actually go circular, because we need to be circular of many, many reasons in Europe and in the world. So that is, I think that the competitive word is important for actually getting it circular.
From your perspective, Jessica, what is the link between the environment, proper care for the environment, and industrial policy? What is kind of the real focus? How should we think about that link?
I would say that green transition that we are in now, that we are doing in Europe and the world, is the growth part. And I've always come back to that green transition and competitiveness is the two sides of the same coin. And investing in green technology and going green and clean, that is the growth strategy for Europe and for the world. And that is what we see that the industries in Europe is investing in. So I would say it's a must, but it's also something that is a possibility and opportunity for our industries.
A lot of people would look at your title, a lot of people here in the US, I should say, will look at your title, look at environment, water resilience, competitive circular economy, and think that means a lot of regulation. That means a lot of a slowdown in how things get done, and not necessarily something that creates jobs and creates a competitive environment. Talk a little bit to us about how your portfolio can create jobs while reducing risks at the same time, and therefore be supportive to economic growth.
Yeah, absolutely. I know I have a very long title, but I'm very proud of all the parts of my title, and even I could say I lack some words. But if we go back to circular economy again, I mean, as I said, for us it's really important of many reasons. We are focusing on security in Europe at the moment, and competitiveness. Security of obvious reasons. We have war in our country, in our region, but we also face we know we are dependent on a lot of other regions around the world when going to digitalization, going to green transition, and also investing in security. So we need to be more circular, and that's why I see a competitiveness advantage for our industries to actually gain money for being more circular. So that is what we're trying to do at the moment. But I mean, then I have water. Water is also something that we have taken for granted in Europe and probably in many other places in the world. There's also a competitive link in this. We know that the businesses in Europe are dependent on water. We all are, of course, farming, all you and me also. But also our industries are really dependent on water. That is why we're trying to focus on water. And I would also say that sometimes people say to me that invest in nature is the cost. I would disagree. I would say that investing in nature is it's an investment. And just to have one figure, you talked about a lot of figures before, that the industries in Europe within the Eurozone that has corporate loans are at 75% of these companies are dependent on at least one ecosystem. Water is the obvious one, but also others. So, I mean, for me, there is this link, and the awareness of investing in nature has become bigger and bigger. But I'm also working on to make that awareness even bigger, because I think this is it's not good to have. It's something that it's a must for our industry to be prosperous.
So what does it mean for your industry, for people who are really trying to link industrial policy with the environment, when the President of the United States gets in front of the UN General Assembly and effectively says that climate change, energy transition, it is a, quote, hoax? What does that mean? How do people like you react to that?
No, but for me, it's obvious that we need, and also when I talk with the industry in Europe and in other places in the world, they are doing the green transition because they know, and it is not. It is of a lot of reasons, because we need to protect our environment against the climate change, but also because they see a possibility for growth here. So I would say that this is why we invest in this, and also that this is the green transition is the future, and there is no turning back on that, and that is what I hear from industries.
Moving forward, despite whatever the U.S. president is saying, publicly. So you mentioned climate change. I want to come back to that for a moment here, because when it comes to water, what does Europe's water resilience look like today in this era of super hot summers where heat waves and droughts are now very, very common?
No, and I mean the link with water is obvious. I mean, why we have put forward a water resilience strategy in June, of many reasons. We have put water as a priority, as I said, because it's important for all of us. But of course, we're also about the quantity of water. Europe, all parts of Europe, is facing droughts, water scarcity. I'm coming from Sweden. We have a lot of water, but also Sweden and Finland and other countries are facing scarcity. So that is why we need to focus on this and be both seeing for the future, and because the floods cost, of course, severe damages and people's lives, but also the cost is very heavy for us, but also the cost of doing nothing is very heavy. So that is why we're talking about the water. But also I want to add, it's quality, not quantity of water, sometimes too much and too little, but it's also the quality of water. We have polluted water in Europe and also in the rest of the world. So we need also to focus on clean water. And that is something that costs a lot of money, but it is about people's health and the environment, of course. And this is something that people are very worried about. If we can take the forever chemicals, the PFAS, and so forth. So it's a lot of things on doing on water, but the good thing is that we are prioritizing this. But as I said, we have taken it for granted for too long.
Jessica, thank you so much for joining us. We really appreciate it. Jessica Roswell, Commissioner for the Environment, Water Resilience, and Competitive Circular Economy at the European Commission. We appreciate you coming into our studios here in New York City. As you said, Scarlett, we benefit from the United Nations Week because a lot of smart people come through town,
Absolutely.
a lot of interesting people, and we get to chat with some of them here on Bloomberg
Yeah,
Radio
very exciting. Thank you so much for coming in. Jessica Roswell in our interactive broker studio here in Midtown Manhattan. John Tucker, you and I were talking a little bit earlier about the NFL's Patriots selling an 8% stake at over $9 billion.
Oh, is it 8% or 9%?
Just over 8%, maybe?
You sent me the story, and I, of course, didn't read it.
John, is that how you do things around here?
You should know this by now. Wait, $9 billion. Yes, you're
8,
right.
9, the numbers get confusing. Numbers are hard sometimes,
But it's amazing because it's a great franchise, as we all know.
Yes.
A, it's the NFL. B, it's the Patriots.
That's the valuation we're putting on it based on this deal.
Yes.
3% for the billionaire, the Greek billionaire, and 5% for private equity. So that's what we got.
Yep.
Again, second behind our New York Giants.
Yeah, I wonder what the Cowboys are worth. Have we seen a deal? I don't know if they've done a deal
They don't
yet.
want to sell anything.
They don't want to sell
Yeah,
anything.
Jerry Jones has been really firm about that.
Because I would think that would be the most highly valued.
Yeah.
Although New York's the
and
bigger
it's so
market.
interesting that the Cowboys are the most highly valued when on the field they don't necessarily have the performance to back that up.
Yeah, I don't know. They're America's team. So, but again, the Patriots right there with all their winning. And again, I think we're going to see more of this because of this rule change that allows private equity. That's because it's gotten as you know, with the business of sports, Scarlett, the values here are just so huge. It's not a millionaires game business anymore. It's a billionaires
And a
game.
select group of billionaires, too, right? I mean,
And
how
sort
many
of-
billionaires can pony up this kind of cash?
And sort of tangential to this, you have the NFL commissioner talking about an international team as well in football. So it's going to be
Well, they got to
interesting.
strike while the iron's hot, right? The NFL now resonates around the world, and no one else has anything close to it. So,
Oh, the English Premier League. I mean, some of those franchises that their followings, like Manchester United in Asia, is huge.
yes.
I mean, those are global brands.
But the game itself is not anything like the NFL.
I don't know. I mean, I
Careful.
think, I'm trying to think.
Them's fighting
I
words.
can't quote the economics here, but I think that in terms of a global game, English Premier, European soccer is a global brand much more than the NFL. And that's what the NFL is trying to get to.
Yeah,
but maybe
yeah.
the total economics of the NFL versus English Premier League, I'm not sure the difference there. But again, it's just, we're seeing the numbers have just gotten so huge for all of these franchises that it's, you got to think about different ways to get ownership here. So no longer can, some local millionaire who owned a bunch of car dealerships, own a team anymore.
That's why everyone's going into lesser known sports,
Yes, exactly.
lower profile teams,
Yep.
and hoping to get to that point, right?
Yep. So, a lot of people are investing in women's soccer's been an area of huge growth.
Lacrosse?
Yep. Lacrosse.
Pickleball?
Yep. My friend Joe Tsai, who owns the Brooklyn Nets, he owns 2 or 3 lacrosse teams.
You're friends with Josai?
High school.
Really?
Yeah.
Oh my gosh.
So I always get good tickets to the Nets, although I'm a Knicks fan.
Paul
so
hangs
it's
out
kinda-
with a different crowd.
I know. I did see Paul once at a Yankees game, and he was maybe 15 rows ahead of me.
Well, yeah, we have good seats for the Yankees. Yeah, we invested. I've had those for 40 years, and I'm still like the junior partner of that syndicate, 40 years on. So we got a lot coming up. So coming up right here, we're going to be talking with some more interesting people coming here. Now I lost my little thing.
Well, we have the president of Turkey meeting with the president of the U.S. at some point over the next hour. That's definitely going to be on the calendar. And of course, they're going to be talking about, potential trade deals. This is a trade relationship that's actually more balanced between Turkey and the U.S. than the U.S. with other countries. So there's going to be potentially deals involving Boeing, involving Lockheed Martin. But also we've got the former New York governor, Andrew Cuomo, coming in as well, speaking with our David Gura. And before that, our Tyler Kendall will be speaking with the Dutch Prime Minister, Dick Schoof. So we go back to that idea about all these global leaders descending on Midtown Manhattan at a time when there's so much change going on. Everyone's just trying to catch up.
Absolutely, and we have the good fortune here at Bloomberg News, Bloomberg Radio, Bloomberg Television to speak to a lot of them, including Dutch Prime Minister Dick Schoof, speaking with Bloomberg Television anchor Tyler Kendall. Let's go to that right now and take a listen.
Thanks so much, and a big welcome to our global Bloomberg television and radio audiences. I'm Tyler Kendall here on the sidelines of the UN General Assembly, and I'm pleased to say I'm joined now by the Dutch Prime Minister Dick Schoof. Mr. Prime Minister, thanks so much for joining Bloomberg. And I want to start by asking you about a topic that's really dominated the conversation here at the UN, the recent violations of NATO airspace.
Yeah.
President Trump says that NATO allies should shoot down Russian aircraft if it happens again. Do you agree with that assessment?
Well, the Russians should be aware that's a possibility. I mean, if they enter NATO airspace, that's a violation. It's a big violation. But of course, we will take care in a way that we think is appropriate, like we did with the drones earlier in Poland.
Well, on those drones, actually, the Netherlands provided the fighter jets, the F-35s. Do you have any plans to provide additional military equipment to our NATO allies, particularly those on the eastern flank?
Yeah, we are also delivering Patriot systems to Poland in the coming weeks. And of course, we are in constant discussions with our NATO allies on how we can protect the eastern border better than due to the Russian aggression war in Ukraine, and the fact that they are entering via Ukraine or Belarus airspace, NATO airspace.
So would the Netherlands be prepared to act if this did happen, if there were an aircraft that violated your airspace?
Well, it begins with the reckless actions of the Russians, and of course, I mean, they take the risk. And of course, it's up to NATO command on how to react, and it's minutes work. The pilots have to decide. They have the command lines within NATO, but Putin should realize that there's always that risk.
And part of this conversation is that the U.S. really wants our allies to tamp down on the imports of Russian energy supplies. And you have a really unique perspective into this because the port of Rotterdam is the largest in Europe. Now, the EU is proposing a full ban on Russian oil to take place earlier than expected, January 1st of 2027. Is this feasible? How would this actually work in practice?
Well, I think it's feasible, and we already brought down oil and gas imports from Russia in Europe by 80%. It's always also the chair of the European Commission, Ursula von der Leyen, is stating also to President Trump. So we have to deal with the last 20%, but it's mainly Hungary and Slovakia. And I think also President Trump can put a lot of pressure on these countries to stop using oil from Russia.
But then we did hear from the Hungarian foreign minister here at the UN that they don't have plans to actually stop that oil, even if they got a direct call from President Trump. Is there any other mechanism that can be used to really force this drawdown?
Well, make sure that they can get oil somewhere else. I mean, so that's very important because they're highly dependent on Russian oil, but they should stop Russian oil because I think it's right. I mean, when we support Ukraine to fight the Russian aggression war, it's very strange that we finance actually Russia by importing their oil and gas.
And part of this conversation, of course, also has to do with China. And your country is home to one of the largest chip equipment firms, ASML. China is ASML's largest market. I'm wondering if you've gotten any indication from Washington about the direction of export controls. Is there any indication about perhaps the possibility of relief when it comes to export controls?
Well, we have constant discussions with the Trump administration and before that on the American administration in general about exporting to ASML products to China. And we are very keen also from our perspective because we think economic security and national security goes hand in hand. So we take our own export controls, also relating to China, and we are in constant discussion with the American administration.
So you agree with the White House's national security concerns when it comes to the export of this type of very sophisticated equipment to China?
We see the risk, and that's why we put our own export controls, but it's our own decision that we make, and we want also to make sure that ASML can produce and can deliver because it's a crown jewel. It's very necessary for the whole chip industry and the developments of AI. So we want ASML to flourish as well.
Well, you said that you're in constant contact with the administration. I'm wondering if you've pressured this White House at all for any sort of exemption when it comes to chip-making equipment once that Section 232 investigation wraps up and likely leads to tariffs down the road.
Well, we had a lot of discussion about the import tariffs. And then we said that from a Dutch perspective, we'd be very keen on some special products, but particularly high-tech and med-tech was very important for us to get some carves out on that. And the Article 232, right, is of course a different issue because that's related to national security. So that's just a little bit different, and we are in constant discussion.
Okay, but it could perhaps be a carve-out could be on the table.
Well, I just stick to the word. We are in constant discussion with the American administration on this.
In those discussions, how much pressure is there to invest in the U.S. versus at home?
Well, we invest a lot in the U.S., actually, in general. And I think that we invest, that relates to about 1 million workers in the United States, so that's quite impressive. And we import a lot from the US as well, so there's another balance between the Netherlands and the US than there is probably between Europe and the US, and that gives us a special position.
In the final minute I have with you, Mr. Prime Minister, I'm wondering how concerned you are about Dutch companies and public agencies using American cloud providers. Are you considering any legislation that would require agencies to buy European cloud or tech services?
Well, we think that the European development is very important because we don't want to be dependent on anybody else, and that not necessarily refer to America, but we want to make sure that the development in Europe is a real European development.
All right, a fascinating conversation will continue to follow. Dutch Prime Minister Dick Schoof, thank you so much for joining Bloomberg. This has been a conversation on the sidelines of the UN General Assembly. I'm Tyler Kendall, and I'll send it back to you.
All right, very good. That was Bloomberg's Tyler Kendall. Speaking with Dutch Prime Minister Dick Schoof, there at the United Nations. Good getting a discussion there. Let's get back to the markets here and stories on the Bloomberg terminal. One of the really cool ones is Sportico. Our good friends at Sportico reporting that the NFL Patriots selling an 8% stake at a valuation north of $9 billion. Kurt Badenhausen joins us here, sports valuation reporter at Sportico. Kurt, what's happening here? Who are the buyers here? Is this valuation surprise anyone?
I think the valuation is probably on par with what most people would expect. Sportico values the Patriots at $8.8 billion, so it's a little bit above that. Sixth Street, the private equity giant that manages over $100 billion, is buying 3% of the franchise, and they've been leaning in very hard into sports this year. We're part of the Boston Celtics consortium with Bill Chisholm, leading the way, as well as bought into the San Francisco Giants in Major League Baseball. The other buyer is Dean Metropoulos. He's a Greek billionaire, Boston roots, went to Babson College, and is probably best known for buying Twinkies and Hostess brands back in 2013. So he's worth over $4 billion, and this is his first investment in the major professional sports leagues in North America.
Kurt, I'm so glad that you mentioned Sixth Street because it's one of the firms approved for NFL ownership, one of the private equity firms. And you mentioned that it has some exposure to MLB teams, for instance. But in terms of its NFL ambitions, is that it for Sixth Street? It can only invest in one team, and that would be the Patriots, or can it, sprinkle its investments across different teams?
No, they can invest in a handful of teams. As you mentioned, they were one of the institutional investors that was approved last year when the NFL opened up to private equity. And so this will be the fourth deal done by a private equity firm. Arctos has already done 2 deals, one 10% of the Buffalo Bills and 8% of the Los Angeles Chargers. Ares bought 10% of the Miami Dolphins. This is the first, this will be, assuming it's approved next month at the NFL owner meetings, this will be the first by Sixth Street, and I would expect them to add more to the portfolio. And the most you can buy is 10% of a franchise.
So as these franchise owners sell to these private equity folks, what do they do with the cash? Do they go buy another yacht? Do they reinvest in the team? What do they do?
They count it at home.
Yes, exactly.
Well, we've been told that the Patriots are planning on really putting this money back into the franchise. The Kraft family, led by Robert Kraft, Jonathan Kraft, owned 100% of the team before this, and will maintain more than 90% of the franchise before this. And so this is, again, a way to create some liquidity that can be, again, some people take it and use it for personal use. We've been told the Patriots are going to put this back into the franchise. And for the Patriots are more than just an NFL team. They have, of course, Patriot Place around them, 1.3 million square feet, mixed-use residential development that has dining and retail, shopping, entertainment district that really set the model for other teams to follow in the NFL in terms of mixed-use development. So they also own a Major League Soccer team, which is not part of this deal, New England Revolution. They've been searching for a new stadium for a long time and are trying to do something in the Boston area.
Okay, and in the Boston area, and I bring that up because the Kraft family, Paul and I were reading your reporting, has owned the Patriots since 1994, and they paid they paid what was a record at the time, $172 million for the team, which is mind-boggling given the valuation that we're talking about right now. But there was a period of time, Kurt, when they were toying with the idea of moving the team out of Massachusetts.
That's right. That's right. The Patriots were not the Patriots in 1994, but still, just because NFL franchises don't come on the market very much, Robert Kraft was comfortable spending $172 million, lifelong fan, had been to games as a child a lot. But yeah, that didn't stop him from looking at doing a deal in Connecticut. And listen, it was close. They were basically as good as gone.
Yeah.
And then Robert Kraft stepped up and decided to keep the team in Massachusetts. It was a completely privately financed building when they opened what is now Gillette Stadium.
Right.
And the timing could not have worked out better because the Patriots became the Patriots of today as the stadium was open. Just started winning Super Bowls. Tom Brady had just joined the team and taken over for Drew Bledsoe.
Right.
And
Rest is history.
It just sent them into, created one of a financial juggernaut there.
All right, Kurt, we're going to leave it there. That's great reporting. Appreciate you taking the time to join us. That's Kurt Badenhausen, sports evaluations reporter for Sportico. Sportico reporting that the Patriots selling about an 8% stake at a valuation north of $9 billion. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market and industry research. The next hour of Bloomberg Intelligence starts right now. Let's go to John Tucker for a Bloomberg Business Flash.
All right, guys, the S&P 500 dropping for a third straight day, although we're kind of pairing the earlier declines, the major indexes. The latest data shows the economy holding up, and that has the effect of pushing yields higher. The 2-year, which is more policy reactive, up 5 basis points at 365, and then the benchmark, the 10-year, that's just about 4 basis points higher. That's 418. So that is the thing that weighs especially on tech stocks. And then you have Intel. It's actually the best performing stock right now in the S&P 500. It is up close to 6% right now. The company has approached Apple about securing an investment. Then CarMax shares, they're tanking. Worst performer after its earnings results. CarMax shares 22% lower. Meantime, the Fed Governor Stephen Byron, the lone dissenter at the last Fed meeting, he was on the air with Bloomberg this morning making his case for more rate cuts. This exclusive interview with Bloomberg this morning.
You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
Right now, the S&P 500, 28 points lower. That is down about 0.4%, 66.09 on the index. Dow Jones Industrial Average, 40 points lower, and the NASDAQ 100 down 117 points. And casino news. MGM Resorts International, their proposal for a $2.3 billion expansion of its Empire City Casino in Yonkers, which is just north of Manhattan.
I drive past that all the time.
Yeah, well, they have slots up there. Well, this means it could advance to a state board. They've cleared a key vote by a local advisory committee. So in addition to the slots that they have up there in Yonkers, they could soon add like the board stuff, like, you know, the spinny thing, the spinny wheel thing.
What do they call those? The actual games? The
what? Table games.
Table games. Thank you.
That's
Thank you,
what
Paul.
I'm trying to think
The craps
of.
table. I play the 6 and the 8, the point with the full odds.
And
Okay,
you
that was
win?
foreign to me.
That's what I do is I'll start
a winning strategy.
I'll start with $1,000, and 8 nights out of 10 I can play for as long as I want. Hours.
What's the best odds? Is it blackjack?
I don't know.
Okay.
I don't know. I'm
Well,
not one of
whatever.
those people.
Anyway,
If you know how to count cards, yes.
that's your gaming room. Easy, Scarlett. We check
Yes.
the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul. She's a card shark, apparently.
No, I'm not. I'm saying if.
Oh,
I don't know how to
okay.
count cards.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. Coming up, we're going to have a discussion, an interview. Former New York Governor Andrew Cuomo speaks with Bloomberg Television's anchor David Gurr. That's coming up in minutes. When that starts, we will bring that to you as simulcast with Bloomberg Television. But right now, let's go to Norma Linda, and we'll see what's happening in stock movers in the equity markets today.
Well, quite a few things to look at today. Market is lower, of course, but looking at shares of Starbucks, that's ticker SBUX, also lower in trading today, down as much as 1%. The big news of the day here for this company is the fact that it will be closing 1% of its stores in the U.S. and Canada. But I mean, this is really a big cosmetic change. They're doing a $1 billion restructuring here. Brian Niccol, who we know was a CEO that came in last year from Chipotle, he's really been trying to change the vibe of Starbucks. He wants it to be a more inviting space. So they're closing down some of these stores, hoping to right size the company here and really just make an integral shift here in terms of how inviting it is and how people feel comfortable with being here in this store. But I mean, as I mentioned, it's only about 1% of stores that are being closed, but this is definitely pressuring shares right now as we're kind of digesting the news.
All right, I'm looking at the S&P 500's best performer today, and it is Intel, up by more than 5.5%.
Yeah, Intel is doing well today, as you mentioned, the best performing stock in the S&P 500. That's ticker INTC here. I mean, this is a name that's really been in the news for quite some time, week after week here. I mean, right now what's going on is the fact that it's going to be seeking investments from Apple, essentially in a comeback bid. I mean, we know the U.S. just took a 10% stake just weeks ago, and we're really seeing a lot of people running back toward this company as we're really trying to invest in U.S. homegrown manufacturing here when it comes to semiconductors. So we are seeing shares up, now up about 6%, as you were calling out there, Scarlett. a lot to digest there. I mean, Seaport Research, they upgraded the stock to neutral from sell. They'd had a sell rating on the stock previously, but they're essentially assuming that there should be some near-term upside here for the company, especially if it receives even more direct investments here.
You know, it's interesting. I'm just looking at, what does it mean for Apple? And Apple stock this year, it's kind of flattish on the year, but since that April low, it's up 46%.
Wow.
It's starting to get a little bit of AI wind to maybe at its back, because this is a name.
What AI does it have to offer?
Well, I think the AI wind is, we'll talk to anybody. We'll talk to people. We'll make acquisitions. We'll make maybe an acqui-hire type of thing, as opposed to, we got nothing for you. Which is kind of what we were.
Their balance sheet makes them nimble.
Yes.
That's a great point.
And I just think the winds have kind of changed a little bit here for Apple. Maybe they're getting a little bit of that tailwind for AI maybe here. And this, I guess, an investment in Intel, like everybody else is doing it. Why not?
Why not, right? Well, I also wanted to keep an idea of people taking stakes here. I mean, we talked about this yesterday on the closing bell, but Lithium Americas has been a name that's also been in focus. That's ticker LAC, based in Vancouver, but focuses on a lot of lithium-based products here. Essentially, they soared yesterday and are continuing a lot of those gains. They closed higher by 96% yesterday, nearly doubling. But the U.S. is saying there's some conversations ongoing about the U.S. potentially taking a stake here in this company. It wants to take equity specifically. This is coming during a renegotiation of the terms of its $2.3 billion loan that was extended by the Energy Department. But it seems as though the U.S. government is making a lot of moves right now, taking a lot of stakes as they really want to bet on U.S. production here.
All right, very good. Norma Linda, thanks so much. Appreciate that. Norma Linda, Equities Report. Actually, what's your new title now, dude?
Bloomberg Television Markets Correspondent.
Yes.
Is that a promotion?
It is, in fact.
Yay.
Day 4.
So she'll be
Nora's a regular presence on Bloomberg Television, and she's already a regular presence on Bloomberg Radio.
Exactly
so we get to see more of her.
So very good.
Looking forward.
Norma Linda. So for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. I want to get back to that casino story, because there are apparently 3 downstate, and we're downstate as opposed to upstate New York.
What is downstate, by the way?
I learned from reading Robert Moses' book, Downstate, and all the various regions of the country, we're downstate. Like the Metro of New York is downstate.
Okay.
And then there's upstate, which is kind of like Buffalo and all that area. And then there's centers. I don't know.
Buffalo's Canada, basically.
Yes. So, but we're downstate, apparently. So there's going to be 3 licenses.
Okay.
Manhattan not getting one. We learned that a couple of days ago.
That was next. And then there was Stevie Cohen over at Citi Field would like to have one.
Which is going to be big. I think that would be in Queens. So that would be very interesting, because, again, these mixed use
It would be next to the stadium, right?
Next to Citi
Field. So where the
Field.
auto body shops used to be.
Chop
Yes,
shops.
okay.
Yeah,
Those have all been cleared out now.
A lot of them, yeah, a lot of them. So this will really take it up another notch if he gets it. But so I guess that's still in the running. And now this Yonkers license looks like it's getting some traction there. I saw these mixed use around sports stadiums. The first one I really saw in detail was the Atlanta Braves, because it's owned by Liberty Media. Liberty Media. So it was one of those investor
John
days
Malone,
we were down there. And boy, was that a success. And they were really one of the first, they were the first people in baseball to do it. And they kind of set the blueprint for, you put a stadium there, and it doesn't have to be downtown, which a lot of cities are really good, Camden Yards in Baltimore. You can still put it out kind of in the burbs, but you got to build around it a whole ecosystem of restaurants and residential areas and, you know, all that kind of stuff. And so it's not just on game night that you're generating revenue there.
Yeah, you need to create a destination for young people and have them go out there and stay there and spend a lot of money. Nora, Melinda, do you go to any of these games and kind of stay there for the entire day to go gamble and to go eat? And
see, you lost me. Eating, I do. I am a foodie, so that I can jump in on. Gambling, not my thing so much. But I mean, wasn't there something that was supposed to be happening in Times Square? There was supposed to be a casino that was coming in there.
And that didn't go.
That got nixed.
It got nixed. It got axed.
Which I think was the kind of right decision. Do we not have enough in Times Square?
I was just going to say,
a little too crowded.
Do we need more people concentrated within Times Square?
Oh, please no.
No. So I kind of
like a New Yorker.
I avoid it like the plague.
To Penn Station, I'll walk through Times Square, and I'm like, people, just here, leave here, go to the High Line, walk down the High Line, have a nice walk, get off the bottom, go to one of the best restaurants you're ever going to go to. You don't have, you just have to walk down any street, and you're going to stop at a nice little restaurant. Go there. That's a New York experience.
Well, let me throw this in sort of parenthetically. What has happened to gaming since it was first introduced in our home state, specifically in Atlantic City, where it's by some measures, a complete disaster.
Yeah, I mean, it was great for me in high school and college. We went down there and saw Sinatra 16 times in Atlantic City, 16 times. We had a great time, but no, it never took off. It never took off.
And it didn't make Atlantic City more of a destination, did it?
My advice to people who want to visit Atlantic City is just keep going and go down to Cape May.
Yeah. But I mean, there's still great beaches in Atlantic City, but the areas right around the casinos are, that's great. They did a good job there, and they incorporated it into the boardwalk. That's fine. The problem is if you cross the street, then it becomes.
Yeah.
So.
I mean, there's only one Vegas when it comes down to it.
There's only one Vegas. And
only one.
All this stuff, you talk to Brian Egger at Bloomberg Intelligence, who covers this industry, says it really has impacted Vegas. All the casinos all over the country, the riverboat stuff, all that stuff. Because Vegas, they just keep giving you more and more reasons to come to Vegas.
Yeah, they've turned it into a family's destination, right? It's not just about gaming. Yeah, absolutely.
Well, they've tiered it, they've segmented it really well. They went probably too far overboard with, doing a little bit family stuff, and they lost some of the edge. So now they've kind of have something for everybody. They have something for everybody.
But the arrival of professional sports teams also made a big change, made a big difference, because now people go and see their team play in Vegas and then make a whole week out of it, or a weekend if you're on a budget trip.
Oh, for sure.
But I mean, you can't have a budget when you go to Vegas. That's kind
never
of the
that. You blow through it if you do.
$1,000 a night on the tables. That's the budget.
Now, the people in Vegas, the workers, I would say that they're far friendlier than any other place in terms of the casinos.
Well, they got the hospitality thing.
The hospitality they have got down.
Exactly.
Absolutely.
Yeah. Have you guys seen The Last Showgirl?
No.
That was with Kim Basinger?
Break it down for me.
Oh, it was so good.
We're killing time until Governor Cuomo gets seated and we can start that interview.
No. It was just very good, and it was about this showgirl who's in this reverie and the last of her kind, and she's kind of coming to terms with this changing Las Vegas that doesn't have room for artists like her.
Oh, wow.
All right.
A lot of talk about Oscar awards.
Very good. All right. Looking at these markets here, we've got some selling still out there in the marketplace, but as John was reporting earlier, kind of off the lows here. The S&P's off 29 points, the Dow's off 70, and the Nasdaq's off 98 points. Looking at gold here, it's had such a huge run really for the longest times here, and it's kind of pulling back a little bit, just kind of stable right here off a couple of bucks, but still $3,730 an ounce for gold. It's just been an extraordinary run. It seems like everybody and their mother wants to own gold here, including central banks, including individuals, consumers, and speculators, and ETFs, and everybody. From your mouth to God's ears there, buddy. So that's why it's continuing to hold.
Up until this 3-day sell-off, you had an S&P 500 that was kind of defying historical trends, because September is said to be the worst month for equities and not very good for bonds either. But September, when the market does climb, has then gone on to gain on average about 19%. So if we can eke out a gain here for the month.
That's right. Strong finish into the end of the year. And again, just a little bit of selling here on the screen with the S&P off 28 points, 0.4%. 10-year Treasury yields up about 4 basis points here, 4.18%. Remember, we were down at 4% just a couple of weeks ago. So a little bit of a lift here coming in recently over the last couple of weeks here. And looking at the Bloomberg Dollar Index, a little bit higher here. And I'm going to call the dollar kind of stable after that 8-9% kind of sell-off earlier in the year. The dollar's kind of stabilized here, not recovered, but certainly stabilized here. So that's a little break there. All right, right now, let's go to Bloomberg Television's David Gura. He's sitting down with former New York City governor and New York City mayor candidate Andrew Cuomo. Let's take a listen right now.
Governor Cuomo, thank you very much for being here. I appreciate it. And I'd love to start with the state of this race. I look at all of the polling. You're not leading in any of them. The most recent one is a Fox News poll. Zohran Mamdani is ahead of you by 18 points. That's on the heels of a Suffolk poll that shows him up 25 points to you. Of course, it's a 4-candidate race. How do you see the path forward here, given the polling and sort of where things stand? I should note that the polling hasn't changed a tremendous amount in recent weeks.
Yeah, it will change dramatically. What you see in the polls is Mamdani is always at about 40%. That leaves 60%. As you accurately pointed out, you have a multi-candidate field, so 4 people or 3 people are breaking up that 60%. I don't think you're going to wind up ultimately with that larger field. I think the field is going to collapse. I think it's going to come down to me versus Mr. Mamdani. And as I said, Mamdani has 40%. He has his very radical ideas, which are exciting to one group of the population, especially young people, but are polarizing to many other people. And I think it's going to come down to a one-on-one, and then it is a totally different race, David.
Curtis Sliwa, the Republican candidate, says he's not dropping out. The incumbent mayor, Eric Adams, says he's not dropping out. We've passed the ballot deadline. If we were to have a race where it's you against Zoran Mamdani, polls still show him leading you by a substantial amount. What do you see in the electorate that the data aren't showing when it comes to that particular configuration?
Yeah, well, polls are historically wrong, especially this year, especially in New York. On your first point, you can stay in the race. First of all, technically, nobody can get off the ballot, right? The question is, are you viable in the race? And you can have people who are in the race, but the voters just think they're not really competitive. They can't win. I'm not going to waste my vote. And I think that's what happens here. I think it comes down to me and Mamdani. I think when people understand what Mamdani stands for, besides what he has said on TikTok, you know, he's anti-police, disband the police, legalize prostitution, legalize the drug trade, abolish jails. You know, this would be anarchy in New York. Socialism does not work in New York City. It's antithetical. We're the business capital, right? We're pro-business. Business is the engine that drives the train. So none of that has been communicated yet. And when it does, I can tell you the minds will change.
Is there an effort by you and your campaign to try to convince Eric Adams or Curtis Sliwa to drop out of this race? Are there conversations that are happening behind the scenes to make what I imagine you see as a compelling case for them to step aside to make this more of a one-on-one race?
No, I'm sure they're making their own decisions. Look, I've been in elections where I have dropped out because I thought it was the right thing to do. They have a decision to make. There is no apparent path to victory for them. They, in essence, would act as a spoiler, and that's a decision they have to make. They have to make it personally, and that's their business. But again, I think it's going to come down to a two-person race no matter what, because that's what the polls are going to say, and that is the choice. I am a Democrat. My father was a Democrat. I worked for Bill Clinton. Zoran is a socialist. They call themselves democratic socialists, right? Didn't support Democrats, said Barack Obama was a liar and evil, and didn't support Kamala Harris against Trump, right? So this is a very different, this is apples and oranges between the two of us.
I want to ask you about some comments that Curtis Sliwa made yesterday. I'm sure you heard them. He was campaigning and suggested that you or affiliates of your campaign had reached out to him and offered him money to the tune of $10 million to drop out of this race. And I'm going to quote from what he said during that campaign event. He called these classic Andrew Cuomo tactics. Why don't you strap up Cuomo to a lie detection machine and ask him, and we'll all be blown to kingdom come because he's behind it. I don't have a polygraph machine with me here, but how do you respond to what he's alleging in those comments?
Look, you have to take Sliwa with a grain of salt, right? He is a known con man. He's lied about being victims of crime before. But it's very simple, David. When he said that, someone should have said, who? Who offered you the money? Let him answer the question, because it would happen to be a crime, right? Who offered you money? He never said who, which sort of tells you, right, that it's all malarkey. There was no person who did it.
I want to ask you, last, we've talked about the state of the race, where you hope that it's headed, and if we can, I'd like to look back to 1977, so a ways. You were 19, you were a student at Fordham University, your dad was making a run for mayor, and you were helping out on the campaign. He didn't win the Democratic primary and decided to run on an independent line for mayor. He ended up losing that race by 9 points. They say that history doesn't repeat itself, but it rhymes, and I know that you don't want history to repeat itself here. You'd like to win this race in a way that he wasn't able to back then 50 years ago. I'm not the first to point out this historical parallel, but I imagine you've thought about it. And I wonder how that experience has informed your outlook on this race. There was introspection after the primaries. You didn't do as well as you wanted to do. You decided to make this run. What can you learn about that race that your dad waged, and how does that inform the way that you're running this run?
My father was an extraordinary individual on many levels. Highly principled, frankly atypical for a politician. And he did, quote unquote, the right thing, whatever he thought the right thing was. For me, I believe in the Democratic Party. I believe in what my father stood for, what John F. Kennedy stood for, and Robert F. Kennedy stood for, and Bill Clinton, and what Mamdani represents, and this Democratic Socialists of America, DSA, socialists, call them whatever you want, is repugnant to the Democratic Party, I know. And that's what's really going on here. This is a civil war within the Democratic Party, right? Where the extreme left is pulling the Democratic Party. And the moderates are afraid of the extreme left. It's the inverse of the Republican Party when they had the Tea Party, and the Tea Party was pulling the Republican moderates too far to the right because they were afraid of them in a primary. That's what's happening here. It's a battle for the soul of the Democratic Party. And the Democratic Party is not anti-business. It's not anti-police. That's not who we are. We're not about redistributing income as a policy, right? You tax to provide a service. You don't tax to take money from the rich to give it to the poor, right? That's why Donald Trump calls him a communist. So this is not the Democratic Party that I believe I represent, and traditionally has served this nation well. He has zero experience in the position, never managed anything, 5 employees, never had a real job. And when you're willing to consider chief executive of New York City, no management experience, ran 5 people, now he's going to run 300,000 employees, $115 billion budget. You wake up any morning, you could have a terrorist attack, you could have another COVID. It just demeans government and demeans public service in a way that I just find abhorrent, and I'm going to do everything I can to stop it.
Governor Cuomo, thank you very much. Appreciate it.
Thank you.
I'll send it back to you.
All right, that was Bloomberg Television's David Gurr speaking with former NY Governor Andrew Cuomo on the upcoming mayoral race there. It's good to hear his comments there. Let's get a little bit of a reset in the market here, and we can do that with Mr. John Tucker and a Bloomberg Business Flash.
All right, guys, this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. A renewed slide in some of the tech mega caps hitting the overall market. The Bloomberg Mag 7 index down just about 0.75%. Is paring some of the earlier losses, though. S&P 500 32 points lower, 6604 on the index. The Dow Jones Industrial Average is down 101 points. The NASDAQ 100, 122 points lower, and that's down 0.5%. I just want to bring this headline to you. Amazon going to pay $2.5 billion to settle the Federal Trade Commission allegations it duped customers into enrolling in its Prime membership program. Kind of a drop in a bucket. Among the most active, Tesla shares falling down over 3%. European sales of the electric vehicle giant falling 22% in August. So now it has a market share of just 1.9% there. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. Let's take a deeper dive into the fixed income market right now and bring in Priya Misra. She's a fixed income portfolio manager at JP Morgan Asset Management. And Priya, I look at bond yields in the Treasury market, and they are rising, more so at the short end of the curve. And we're now looking at 3-week highs for yields. I guess the question that comes to mind now is, are we rethinking the pace of rate cuts that markets had been pricing in?
Thanks for having me. It's a great question, because a lot of the moves into the Fed meeting was the market saying maybe the labor market is weakening, maybe the Fed here does need to reduce the level of restriction. And then we see the Fed come out with a little more dovish dot plot, the Fed actually cutting rates. And so what's happened since then is, I think the market's saying, well, let's look at the data. We haven't had really forward-looking data. I guess you could look at claims and see that the low higher economy is continuing. We're not seeing a pickup in claims. That's good. We still have that big jobs report, next week. So second-tier data and the division at the Fed, I think, has become very clear, as we've heard all the Fed officials this week, and there's more today and the rest of the week. And there's a clear divide at the Fed about the dual mandate, and we know that the dual mandate is in tension because inflation's above target. The unemployment rate has ticked up a little bit. So to answer your question, yes, the market's reassessing. We had priced in a lot of cuts, but I don't think we've had data that should really reduce those level of cuts beyond the cutting to neutral. There's a big debate on what neutral is. We're in the 3% camp. Maybe it's 2.5 to 3.5. I think those cuts are sort of baked in. So we didn't change our view based on the data today in terms of we do expect the Fed to cut in October, December, and really continue that path as long as the data suggests that inflation is not re-accelerating beyond tariff effects. And as long as the labor market remains in this, I think it is in a bit of a fragile position as companies are not hiring a lot. And does that change with OBBB? All of that, I think, is what will drive the market going forward. But right now, no, we think the Fed remains on their easing path.
Priya, do your clients at JP Morgan, do they ask you about Fed independence? Do a lot of folks, particularly maybe outside of the U.S., are folks still, or should they be concerned about Fed independence?
So it is the number one question I get from investors, domestic as well as international. There's a lot of hand-wringing, if you may, going on about Fed independence. And it is the holy grail, right, of, I would say, central banks anywhere, the US, developing economies. You want a central bank that is independent, that has the ability to do what's right for the economy. So it comes up a lot. We've seen unprecedented attacks on Fed Chair Powell, on Governor Cook. And so I think people are nervous. The biggest question I get is it priced in? And I would say no. And most people agree with that. And then they say, should we price it in? And this is where I have a slightly different view. I don't think we've seen enough. We've seen enough to be worried. Is that a tail risk? Yes. But I don't think we should price it in because there are institutional guardrails at the Fed. Chair Powell is the chair up until middle of next year. It's a committee. We saw the committee powerfully at work last week, where there's a dispersion in the dot plot. I don't think because of political views. I think because the data is pointing in different directions and people are weighting two sides of the mandate differently. So I think, the way the Fed has been set up, those guardrails are in place. I think President Trump, Secretary Bessent understand that. So, of course, we're waiting for the next Fed chair to be announced. I think it's going to be a credible person because, nobody wants the Fed to be viewed as being not credible or not independent. The bond market will absolutely react. Mm-hmm. And we've seen that the President and the Treasury Secretary are focused on the bond market. So it's not being priced. Is it a concern? Yes. But I would still say our baseline view is the Fed is trying to do the right thing. They're going to be data dependent. And I think the committee will protect, even if you get a political Fed chair. It's a committee-based decision rather than just the Fed chair.
So Priya, one final question to you. Given all of that, and these are some big existential issues that are not going to be resolved in the next week or even month, where do you want to be in fixed income? Where do you want to be on the curve? How do you want to be positioned when you look at, say, corporate credit?
Sure. So first thing I would say is you want to be in fixed income because you're getting yields. Fixed income, I joke, didn't have income for the longest time. And now we have income and we have diversification. The Fed's telling you if the economy slows down, those risk assets start to struggle, the Fed's going to cut more aggressively than what is priced in or what they have talked about. So I think you should be in fixed income, not to talk my book, but I think fixed income has value. Then where in fixed income? I think high quality corporate credit and owning some duration. That's how we've positioned the Core Plus Bond Fund. Because I think companies are strong and they're able to handle tariffs. So owning some spread risk and owning some duration.
Very good. Priya, thank you so much for joining us. We always appreciate getting some of your time. Priya Misra, fixed income portfolio manager, J.P. Morgan Asset Management. A pretty big story in the world of airplanes, jets. Boeing and Lockheed Martin are poised to win aircraft orders from Turkey as soon as next week for as many as 250 commercial planes and additional F-16 fighter jets, with a possible resolution of a long-running F-35 dispute. So let's break it all down here. We know the President Erdogan is meeting with President Trump today in the White House, so maybe we'll get some news of a deal. George Ferguson joins us. He covers all the airlines and aerospace companies here. Some good days for Boeing, George. It just seems like orders are kind of flowing in here. Talk to us about what you might hear from Turkey.
Yeah, so I would imagine that Turkey could probably top up with some orders for both narrow body and wide body aircraft, right? Turkey's pretty well positioned, between Europe and Asia. I kind of think of them as a mini Gulf region carrier, like a mini Emirates or a mini Qatar that has both short haul, so a fair amount of those narrow body airplanes, 737s, A320s, and a sizable long haul business between Europe and Asia, right? There's I think Turkey is one of those places you're willing to traverse if you live on either side of the east-west divide. I think I put that correctly. But, it's a place where I think a lot of people that may be concerned about sanctions or problems, they're willing to pass through there. So I think Turkey has a lot of connecting capacity and fast-growing airlines, so opportunities there.
Opportunities there. I want to talk a little bit about Turkey maybe making some purchases from Lockheed Martin. We're talking F-16 fighters. There's also talk about F-35s as well. My understanding, though, was that there's some controversy tied to Turkey's purchases of Russian air defense systems, and that plays into what it's going to do with these Lockheed Martin jets.
Yeah, so as I was mentioning there in the commercial side, yeah, Turkey really straddles, I think, between East and West, right? They have decent relations with Russia, and they've got good relations with the West, and so they do buy Russian anti-aircraft radar type systems, and those are systems that we don't want the Russians or other folks. We don't want them sort of testing against the F-35 for detection. So that's been a hang-up in selling Turkey the F-35. The 16 sounds like the F-16, an interesting compromise. It's not a stealth fighter. It is a very capable single-engine fighter. But again, I think for Turkey, the 35 will be the prize because that's a fifth-generation stealth aircraft and something I'm sure they'd love to have in their portfolio. So the 16 sounds like a bit of a compromise to me.
Hey, George, it seems like Boeing's turned the corner here from several years ago. But I know getting orders is one thing. Actually cranking the planes out of production, out of the assembly line, that's the important metric you've always told us about. Where is Boeing these days on their 737 order deliveries?
Yeah, it's a funny thing, right? You got to deliver the airplane to get the cash to flow. And so, what we've seen in the last couple of months is that Boeing deliveries have been rising, especially for the 737. I think in August we were up in the 40s. They're all not coming off the production line. We're kind of tracking 5, 6, 7 of these per month coming out of inventory. Airplanes they've already built. There's been a hang-up for getting deliveries into China since the pandemic. They're starting to get some of those airplanes into China. India bought some of the Chinese airplanes that maybe the Chinese didn't want, getting some of them out. As they get that inventory whittled down, their costs are going to fall as well because they're not taking care of airplanes on the ramp that are already built. That's just that's just something that sidetracks you from the work you want to be doing. So, what we think we see is a 30s-ish rate out of the factory, and again, we're delivering the inventory. So right now, I'd say they've made some really nice progress. We're looking for a good finish to the year. Seems like they have their quality control issues squared away. Recently had a little bit of a setback with 777X getting delayed to 2027. We have something on the Bloomberg terminal. We don't think it'll be that major of an issue, but it looks like the corner is sustainably being turned.
I like that. The corner is sustainably being turned. It's still kind of making that turn, not quite there yet. the long-term picture for Boeing, George, is still very positive because at the end of the day, you have you have a duopoly. You have Airbus, you have Boeing, and commercial airliners need aircraft, and they can only buy it from one of two places.
You got it. The duopoly, I think, definitely helped Boeing through these travails. But yeah, the backlog for the 737 is close to 10 years. It's the same for the Airbus A320. Supply chains have really kept Airbus from being able to capitalize heavily on Boeing's missteps here. The other important airplane, 787, 350, A350 on the Airbus side. Those both have 6-7-ish years of backlog. The 787 outsells the A350, so I think you could argue it's a more successful product. And on the defense side, we saw Boeing win the F-47 contract for a 6th-generation fighter. It'll do a lot for their teams that are working on stealth, working on what we say combat cooperative aircraft, CCAs, where you have drones accompanying crewed fighters. And they have a nice defense portfolio. So I think there are a lot better days ahead for Boeing. And like we said, looks like the corner's been turned and they're moving the right direction for sure.
All right, George, thanks so much. Always appreciate getting a few minutes of your time. George Ferguson, he's a senior aerospace, defense, and airlines analyst. If it flies, he covers it. Bloomberg Intelligence safely ensconced down there in Princeton, New Jersey. He forgot about the train that actually brings you into New York. So he's going to stay down there in Princeton. I know.
I'd like that. If it flies, then he covers it. I remember that.
I mean, yep, that's his thing. That's George Ferguson. All right, now let's get a Bloomberg data check with Mr. John Tucker.
All right, major stock averages, they're all lower, but they have paired their earlier losses. The U.S. economy growing in the second quarter. This is the fastest pace in about 2 years. And the government, this is because the government revised up the previous estimate of consumer spending. You just can't keep the American consumer down. The news has actually pushed up Treasury yields, and higher yields are what's weighing on stocks, especially tech stocks. That's where you pay a lot of times for the projected future earnings for tech. Intel, actually the best performing stock in the S&P 500 right now. That's because they're seeking an investment from Apple, all part of their turnaround plan. And shares of Intel right now up 6.5%. Meantime, Rayanne Mitrione at Callan Family Office says, you know what, investors are taking a bit of a break after a series of record highs.
I think it's not unexpected at this point for the market to take a little bit of a breather. We're up over 30% from the April lows and have had really strong performance kind of leading up to that rate cut we finally saw last week.
Oh, and I did the best performer, the CarMax right now. That's the worst performer in the S&P 500. That comes after their earnings report. Those shares right now down over 20%. And here's one for you. According to Bloomberg Intelligence's fast growth scenario, if the Fed's interest rate cuts fuel strong economic gains, stocks, specifically the S&P 500, can crack 7,000 by year end. We check the markets for you all day long right here on Bloomberg Radio.
Nothing is stopping this equities train. I mean, aside from the last 3 days being down, but pause.
That's a bearish signal. I don't know what is.
Exactly.
You want my stock picks too?
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg business source. I didn't mean to dish you.
That's
I'm
okay.
Just saying.
I shouldn't be recommending anything.
Exactly. All right. John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. The government shutdown October 1st, folks. The White House Budget Office telling federal agencies to prepare plans for mass firings, not furloughs, firings during a possible government shutdown. That's new. So I'm going to blame all this on Nathan Dean. He's down there in Washington, D.C., senior policy analyst for Bloomberg Intelligence. He talks to everybody. He knows what's going on here. Nathan, where are we on this shutdown here? There's some crazy rhetoric going back and forth.
Yeah, and that rhetoric was anticipated and expected. Obviously, Congress is not here this week. The House is actually not going to come back until after October 1st, or at least that's the plan. And so the rhetoric is only going to increase as we get closer to Sunday night when these senators come back into town. And as a reminder, the government would shut down Tuesday night at midnight. So that only leaves us 2 days for Congress and essentially the Senate to come together and come up with a solution. Now, I'm at a 40% chance of a shutdown, and I'm probably out of consensus on this. Polymarket and the betting markets have it around a 62% chance. But the reason why I don't think that there's going to be a shutdown is I just don't see how this plays well politically for the Democrats. And my one thing that I would call out is that, yes, the Democrats want to be seen fighting President Trump, but this idea of a threat of firing government workers is a very valid threat. And so if you're one of the Democratic senators from Virginia or Maryland, you're certainly going to be wanting to protect those government workers going into this. And kicking the can 7 weeks to have this fight in November is something that's pretty easy to do when it's a clean CR.
Okay, so you see the Senate Democrats coming in and blinking, essentially.
Yeah, and the reason being is that when the Republicans offered a clean CR through November 20th, it's really hard for Democrats to play the message and say that we are not going to accept
All right, Nathan.
that.
Nathan, unfortunately, we got to jump here. The president is speaking. You can understand that. Nathan Dean, senior policy analyst at Bloomberg Intelligence. Right now, let's go down to Washington, D.C. The president is participating in a bilateral meeting with the president of the Republic of Turkey. Let's listen in.
Rigged election, he knows about rigged elections better than anybody. But when I was in exile, we were still friends. That's always a good way to find out, test a friendship. But he's a highly respected man. He's respected very much in his country and all throughout Europe and throughout the world where they know him. He's built a tremendous military, powerful military, uses a lot of our equipment. And it's an honor to have him at the White House. We're going to have a lunch together. We're going to have a discussion, big discussion. We do a lot of trade with Turkey, and we're going to continue. We're going to do some additional trade. They want to buy F-16s, F-35s, and some other things, and we're going to talk to them about that. And we're just going to have, I think, a very interesting couple of hours. We're going to get a lot done. But I have great respect for this man, and we've had a very good relationship for a long time. If you remember, he led Pastor Brunson. He freed Pastor Brunson. Pastor Brunson was put in jail for 35 years before I got there. This was a group that should have stopped it, and the president, after I called him, released him, which was a great thing for our Christian community, our evangelical community. The evangelicals really wanted that. It was very important to him, so I always remembered that. But he released him from 35 years in prison. And Pastor Brunson now is healthy, happy, and well. And we're very happy about that. But it's a great honor to have the president of Turkey with us. And how are you?
Fine.
Say a few words.
And you?
Great guy.
Öncelikle bu ziyaretimizi Birleşmiş Milletler Genel Kurulu'yla iç içe olan bir dönemde gerçekleştirdiğimizden dolayı arkadaşlarımla beraber çok mutluyuz. Gerek Sayın Trump'ın birinci döneminde...
Okay, so we are listening to President Erdogan of Turkey, President Trump speaking at a bilateral meeting in the Oval Office of the White House. President Erdogan is speaking now. We'll get a translation after he makes his comments here. But then presumably they will also take Q&A, and that could be, as it typically is, something to pay attention to.
Absolutely, because you never know what's going to happen. What we do expect to happen is that Erdogan, the president of Turkey, and President Trump will come to some kind of trade deals. And there's a lot of talk, and we talked about this with George Ferguson of Bloomberg Intelligence, about Turkey's plan to buy up to $50 billion of commercial jets from Boeing, fighter jets from Lockheed Martin, also LNG, liquefied natural gas, from companies including Woodside Energy and Mercuria Energy. I was reading the Bloomberg News story on this, Paul, and it's fascinating because I did not realize that the U.S.-Turkey trade balance is roughly balanced.
Okay.
That's why Turkey faces only a fairly minimal 15% U.S. tariffs on its exports.
Very good. And again, President Trump calling out the return of an evangelical person, that American that was taken or in jail in Turkey for many years, and he called that out as a positive development in the relationships. But again, it comes down to, as often does with President Trump, is let's put the money where the mouth is in terms of either investing in the U.S., making large commitments to invest in the U.S., or buying U.S. products directly. One way to really ring up a big bill with the U.S. government is to buy aircraft.
Yeah.
They're expensive, so...
goes right to the president's heart and right to his mission.
And then the other one would be energy for his for our good friends down in Texas and Louisiana and that part of the world that liquefied natural gas is such a big part of the energy business down there. So again, those are two areas that have been typically used by countries if they want to buy American products. Two ways to go about it. So again, we'll keep in touch with this conversation when they get to the Q&A session. We will bring that to you as well.
This will be the easy part of the meeting where they discuss trade deals and they talk about what's to come. I think the more complicated part of it is Turkey's position here, especially when it comes to geopolitics and Turkey perhaps needing U.S. help to engineer some kind of deal in Syria. We know that Turkey is also a very outspoken critic of Israel, which does not mesh well with the president's stance on Israel as well. So these are all things that may be brought up in the Q&A. And certainly there will be other issues given that the UN General Assembly meeting is taking place in New York right now. Lots of global leaders in New York at the moment that could come up. And I'm expecting, Paul, for the president to be asked about the possibility of a government shutdown. He was supposed to have a meeting with Senate Democrats and House Democrats, and he canceled that this week. So
exactly.
It's not clear whether there's going to be any further talks right now.
No, and it doesn't. And as we learned earlier that the Congress is still on break here. Nathan Dean told us they're not coming back until.
I'm sorry. Why are they always on break?
I don't know. They have lots of breaks there. So anyway,
I guess they have to go back to their home districts, but still.
Yep, absolutely. All right. Regulatory news coming out for our friends at Amazon. Amazon and the Federal Trade Commission. They reached a $2.5 billion deal in that Prime subscription case. Let's bring in Spencer Soper. He is a Bloomberg tech reporter. Spencer, can you remind us of what this case is and then what the settlement does?
Yeah, so this is about Amazon making, kind of duping consumers into paying for Prime memberships. So the FTC alleged that, they tricked people into signing up through free trials and then made it difficult for them to cancel their Prime memberships if they wanted to. Internally, at Amazon, they even had a term for this cancellation process called the Iliad, which kind of referred to Homer's epic Odyssey. So there was some pretty damning findings about how Amazon handled this. The settlement is $2.5 billion. $1 billion will go to the U.S. Treasury, and $1.5 billion is for consumer refunds. People will be refunded automatically if it was found they were affected by this case, and you're looking at about $50 per affected consumer. So it's no huge windfall for consumers, and even for Amazon, $2.5 billion is probably like a parking ticket for you and me. But it puts this thing to bed and prevents Amazon from going to a trial, which probably would have been pretty embarrassing.
Okay, so that's what they want to avoid. Just give us some context here about how valuable the Prime program, Prime membership is to Amazon. I know that they don't always give a lot of numbers. The numbers that we do get have to do with how much it costs members, but in terms of the actual number of members and the amount that they spend, aside from knowing that they spend more than regular Amazon customers, we don't have a sense of how much they contribute to margins, for instance.
Well, it's a huge part of Amazon, and the financial nitty gritty I really don't have. But you're talking huge penetration in the U.S. More people live in a home that has a Prime membership that don't. So they've got a majority of the country, and then to your point, if you have a Prime membership, you're paying Amazon $140 a year or $15 a month, and so you're more likely to buy things on Amazon. And so Prime members spend about twice as much on Amazon as non-Prime members. So it's a critical part of the success. It's also very sticky. People tend not to cancel, which is why this I don't see this as being a huge deal, this settlement. It's kind of like Amazon puts it to bed, but by and large, most people who join Prime are happy with it and stay with it. This was just kind of more of an embarrassment for them.
Yeah, I think we find it of huge value in our home. President Trump is still speaking with President Erdogan in their bilateral meeting there in the Oval Office of the White House. We will bring you headlines, and the red headline just crossed the Bloomberg terminal here. According to President Trump, we want Erdogan to stop buying oil from Russia. So that's consistent with what the president has said, and we'll bring you more reporting on that. Spencer, what's the what else is in front of Amazon, just in terms of some of the regulatory issues facing it? It's really hard to keep track of what's going on with some of these big tech companies and the regulator headwinds.
Yeah, that's a, that's a good point, and people should know this is an FTC case against Amazon that was specifically against Prime membership. There's still this whole question, this big antitrust lawsuit against Amazon, which is basically saying, you know what, this company is so big and has so much control and so much power that it's impossible for other companies to compete. That's still pending, and that's really the big threat to Amazon, and that's a holdover from the Biden administration. So in terms of the regulatory framework, the significance of this Prime settlement is largely, like, a lot of people are wondering, okay, President Trump took office and there were a lot of these FTC cases pending against big tech companies like Amazon, you know, from the Biden administration. What does the new administration mean for these cases? And so that's really the big question here that we're still wondering about is Amazon was able to put this kind of smaller Prime investigation to bed and pay a little fine, but what is the what is the outlook on these bigger cases that are more of an existential threat to Amazon?
So what is kind of what's the feeling out there out there in the West there with Silicon Valley and up there in Seattle area about this administration? Is this administration that can ultimately continue the light regulatory touch that the tech industry has always enjoyed, or maybe they won't be able to deliver on that? How concerned is greater technology, greater Silicon Valley about the regulatory environment?
Well, I think that they're all trying to very delicately figure out how to finesse their way through this administration. I guess I think if Trump is anything, he's unpredictable.
Right.
So I don't think that they take anything for granted. And that is a good question, and I wish I had a nice simple answer for you. I just don't think that.
Yeah,
it exists.
I don't think anybody does at the moment. But I guess try to stay in the good graces of this administration is probably not a bad strategy. Spencer Soper, thank you so much for joining us. Spencer, he covers all the technology for Bloomberg. He's based out there in Seattle, right smack in the middle of the old Microsoft Amazon thing as well. Boy, some big news today if you're in the used car business. CarMax, Richmond, Virginia-based company, stock down 20% today. Some disappointing results and guidance here. Let's get the bottom line here, what's going on. Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst, joins us here. Steve, just tell us what's going on with CarMax. The stock down 20% today. What's the news?
Yeah, it's significantly down today for a couple of reasons. One is the auto sales, used car sales wasn't as good as expected in the second quarter. And then secondly, it's really on the write down on some of their loans. And the first item is actually it's not that surprising because there's been a lot of pull forward demand. Remember in the first quarter when Trump announced these tariffs on autos, a lot of the consumers actually went ahead and bought a lot of cars in concern that prices will go up. So the pull forward demand really dented second quarter sales.
Talk to us about the other side of the equation, kind of the write-off of some of these auto loans here. Is that unusual for CarMax?
Well, I mean, this is because this is on the back of the Tricolor Holdings bankruptcy, if you remember. They actually went bankrupt because they wrote a lot of subprime loans that on potentially undocumented, allegedly undocumented buyers. But this seems to be more of a unique case for Tricolor Holdings. So the write down is a little bit kind of special given the coincidence that's with the Tricolor, but it's not really out of the ordinary for these auto companies to actually write down some of the loans. The interest rate has been high, right? I think the bright spot now is that the interest rates are coming down. So we don't actually see that is an industry issue, but it does cause for concern. It's not a red flag. I would say it's more of a yellow flag.
Talk to us, let's step back a little bit. Talk to us about where we are in the auto business with just how many cars are being produced these days in the U.S., and what does that mean for the used car market, like the CarMaxes of the world? Where are we today?
Yeah, I mean, it's about the annual sales in the auto industry today in the U.S. It's around 16 million. If you include Canada, Mexico, it's around 18, 19 million. The used car market is actually bigger than the new car market. It's a very vibrant market. And look, it's an interesting market. There are a lot of used cars that's coming back from leases. I remember during the COVID era, we had quite a bit of vehicle sales, and prices were really high. And so there's quite a few used cars coming back in the market, and that's impacting prices as well. So even with lower prices, used car sales was down in the second quarter. But then again, it's a function of the pre-buy that happened in the first quarter. So I actually feel that we're probably near the trough, given that interest rates are actually coming down.
So, we talk about the SAR, the seasonally adjusted rate of 16 million. I remember back in the day, 17 million was kind of the norm here. Is this a new lower normal level of production from the U.S. OEMs?
Yeah, you're absolutely right. We haven't really gotten back to the pre-COVID days of 17 million SARs. But I think this is a new normal of 16 million. Look, the average price for a vehicle has actually gone up quite a bit. Yep. Today, it's about $48,000 per vehicle. Before COVID, I think we were, around 40. So a significant increase since then. So there is some concerns about affordability. You've seen financing terms being extended. Car buyers actually can get loans for 72-month loans up to 84-month loans just to make the vehicles more affordable. So I do believe this is a new normal. I don't see prices coming back down. Prices don't usually come back down once they're increased. So I think this is going to be the new normal.
So does that mean people are staying in their cars longer because the affordability of getting a new car is that much more difficult?
Yeah, that's a great question. I think they are going to stay in their cars a little bit longer. Look, the cars today are much more reliable, much more durable than they have in the past. So they do last a little bit longer. And if you throw in EVs, right? EVs, it's probably around 4 or 5% of the total fleet today. Those those last also a lot longer with less moving parts. So who really benefits are actually the aftermarket retailers like O'Reilly and AutoZone. As people keep their cars a little bit longer, they're probably gonna either go get it repaired by the dealer or the mom and pop shop, or they do it themselves. So when they do that, they're gonna have to go shop at companies like O'Reilly and AutoZone, which is gonna benefit from the older
All right,
vehicles.
Steve. Great stuff. Thanks so much for your time there, Steve. Steve Mann, he covers the autos and the industrial companies for Bloomberg Intelligence. He is based there in Princeton. Again, CarMax down about 20% today on some disappointing results. For our listeners in the U.S., a reminder, you can listen to us via satellite radio and Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Radio begins in just moments. S&P 500 down 24 points. The Dow down 80. The NASDAQ down 56 points. That's about 0.25%. More Bloomberg Radio coming up. This is Bloomberg Good Morning.
This is CBS News on the Hour, sponsored by ZipRecruiter. I'm Steve Kathan. The White House has threatened mass firings instead of temporary furloughs if there's a government shutdown next week, according to a memo. Democrats are sticking to their demand for a rollback of Medicaid cuts. CBS's Willie James Inman at the White House.
President Trump is essentially blasting Democrats because he's saying that he reviewed their plans and calls it unserious and ridiculous demands. Now, I'll note that Democrats had proposed a counter-proposal of sorts that would have continued government funding for at least a month, and on top of that, it would have rolled back some of the cuts to Medicaid funding that we saw in the so-called One Big Beautiful Bill.
The government's revised its numbers for economic growth in the second quarter of the year, up at an annual rate of 3.8% instead of 3.3%. CBS's Jason Brooks.
The increase in GDP is credited to lower imports and stronger consumer spending, helping offset weaker investment activity. In addition to that, orders for big-ticket items like appliances and electronics unexpectedly rose 2.9% in August, rebounding from a decline the previous month.
Authorities say the exact motive for yesterday's deadly shooting at an ICE facility in Dallas remains unclear. One detainee was killed, 2 critically wounded. CBS's Camilo Montoya Galvez spoke with the acting ICE director, Todd Lyons.
Director Lyons told us that this shooting in Dallas could have been even deadlier had the shooter been more successful in targeting ICE officials and others who were in the vicinity of that ICE field office in that area.
Well, there's word Amazon has reached a $2.5 billion settlement with the Federal Trade Commission, which accused it of tricking people into signing up for Prime memberships and making it hard to cancel. Delta Airlines is making changes to its Airbus jets to stop toxic fumes from leaking into the cabin.
Last week, the Wall Street Journal reported about thousands of cases where fumes from an Airbus jet's engines have given passengers and crew concussion-like brain injuries. Dr. Robert Harrison has treated more than 100 flight crew members.
And it gets into their brain and can affect the other parts of the nervous system.
Now, the journal reports Delta is replacing the auxiliary power units in the tails of its Airbus jets. Those units can pump the toxic air into the cabin when the plane's 2 main engines aren't running. Michael Wallace, CBS News.
What a baseball season it's been for Cal Raleigh of the Seattle Mariners. Fly ball to right field! Number 60! Last night, he became just the 7th major leaguer to reach 60 home runs in a season. He's the first catcher to do it. Wall Street, right now the Dow is down 71 points. The S&P is down 20. This is CBS News. From the world of music, a special delivery.
Rihanna has given birth to her 3rd child with rapper A$AP Rocky. This one's a girl. The couple posted an announcement to Instagram with pictures of Rihanna holding her newborn swaddled in pink, along with a pair of tiny pink satin boxing gloves. Rocky Irish Mares is named for her famous dad. She joins big brothers RZA, who's 3, and Riot, age 2. Deborah Rodriguez, CBS News.
President Trump complains on social media he was a victim of triple sabotage, noting the failure of a teleprompter and escalator this week at the UN. And he said the sound during his speech to the General Assembly was off for some, including the First Lady. Trump insists it all was not a coincidence and says there should be arrests. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
It's all in the memo. Welcome to the Thursday edition as President Trump's budget director lays out plans for massive federal layoffs if the government shuts down in less than a week. We'll tell you what's inside when Mike Dorning from Bloomberg's Capital Influence team joins us. Michael Shepard as well with us in Washington here as we cover what could happen just less than a week from now. The CBC is holding its annual meetings in Washington. We're going to talk about the agenda with Nicole Austin Hillary, President, CEO of the Congressional Black Caucus Foundation, with analysis from our political panel. Bloomberg Politics contributor Rick Davis, our Republican strategist, with us alongside Ophira Yeskel from the Democratic Governors Association. It's all after a look at Wall Street. We start there now with Charlie Pellet in New York. Charlie, how's the market?
Hi, thank you very much. Good day, Joe Matthew. A down day for the Dow, the S&P, NASDAQ. Just getting word from President Trump. Headlines right now on the Bloomberg Professional Service. The president saying, quote, "We will take some tariff money and distribute it to farmers." The Dow, the S&P, NASDAQ, all in the red right now, with the S&P down 22 at 66.15. That is a gain of just about 0.3%. We've got the Dow lower by 76, down 0.2%, while the NASDAQ Composite Index down now by just about 0.2%. The 10-year is currently yielding 4.18%, with the 2-year 3.65%. Gold up $2 the ounce, 37.38, up just under 0.1%, while West Texas Intermediate crude oil down 0.2%, 64.84 right now for a barrel of WTI. Bitcoin down 1.7%, 111,660 right now on Bitcoin. David Katz is the president and chief investment officer of Matrix Asset Advisors, and this morning on Surveillance he told us he has been looking at Washington and sees better market opportunities ahead.
We think now is not the time to jump on the bandwagon and get more aggressive. We think you want to be a little bit more cautious. You have the possible government shutdown in the next week or so. That could cause any sort of a sell-off. We would not chase the rally. We'd buy on any sort of dip in excess of 5%.
David Katz of Matrix, and yes, a whole lot more coming up on a potential shutdown right here on Balance of Power. Amazon has agreed to pay $2.5 billion in penalties and refunds and change its process for how to cancel its Prime subscription to settle a lawsuit by the Federal Trade Commission. Amazon up right now by 0.1%. I mentioned crude oil down 0.3%. BP says oil demand is going to keep growing for the rest of the decade, rolling back its prior projection, but the high point could come as soon as this year. Again, we've got shares of BP up by 0.2%, ExxonMobil up 0.8%, Chevron up by 1.1%. Recapping stocks lower, S&P down 0.4%, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Mario Parker.
All right, Charlie, many thanks. Live from World Headquarters in New York, Charlie Pellet on the markets, and he'll have more in about 15 minutes as we track the Thursday trade. Welcome to Little Friday and the Thursday edition of Balance of Power on Bloomberg Radio, on satellite radio, channel 121, and on YouTube, where you can watch the radio show on TV. Find us by searching Bloomberg Business News Live, as well on Bloomberg Originals. With breaking news to start at high noon here on the East Coast, coming from the White House, and a potential deal in the works with the president of Turkey in the Oval Office with President Trump. They just wrapped their conversation. And indeed, as Charlie mentions, Mario Parker back at my side again today. Mario, a lot of headlines coming out of here, and we've got the potential for a deal if Erdogan can help Donald Trump when it comes to Russia, maybe buy less oil, maybe influence Vladimir Putin. He might get some fighter jets from the United States that he's had his eyes on. And how about Donald Trump with an F-35 lapel pin, just to lay it on a little bit thicker in the meeting?
We know these Oval Office sprays are so theatrical and well just choreographed by the White House, right, to be on theme and on message. What's striking, I think, so far from what we've seen is that even as Trump and Erdogan have this really warm relationship that goes back for a while now, this is Erdogan's first visit back here to the U.S., or at least to the White House in about 6 years. He and Biden had strained relations, but you still see, even with that warm relationship that I mentioned, you still see Trump applying pressure on this Russia-Ukraine war.
That's right. We do have a couple of headlines to share with you. Trump says, as far as Turkey is concerned, urging Erdogan to cut Russian oil buys, floating an F-35 deal, as we mentioned, remembering that Turkey was removed from the F-35 program many years ago. The president says the U.S. could lift sanctions against Turkey soon, so something could be dislodged. They're going to have a working lunch. He's going to be here for a couple of hours before the president meets with the leader of Pakistan. Michael Shepard is with us in our studio in Washington, watching all of this unfold. Bloomberg senior editor. Michael, you've seen a lot of state visits. Since Donald Trump came back into the White House, there does seem to be a certain cadence that they follow. But instead of, in this case, the visiting world leader showering Donald Trump with compliments, it was the other way around. The president kept talking about what a tough man President Erdogan is.
Trump was clearly trying to get something out of his counterpart from Turkey there. As Mario was just noting, he really does want some help with Vladimir Putin. He wants to get Turkey, which has a more proximate relationship with Moscow, to try to exert some influence. And it's not just in purchasing oil. Erdogan has engaged with Putin frequently over the years, and perhaps that personal suasion could be applied in this case. It's unclear whether any of that will work. Vladimir Putin has given no indication whatsoever that he has any desire to pull back on his invasion of Ukraine and his intention to keep prosecuting the war there for the foreseeable future. But his call on Turkey to stop buying Russian oil really echoed what he had said at the United Nations earlier this week, a general call really to some of the other big buyers, including China and India as well.
And Mike, just how just delicate or how enticing, I should say, is the carrot of the reinstatement to the F-35 program? I mean, how strong is Trump's hand here?
Well, that's a great question because, you know, Turkey really was a founding member, that, you know, as a NATO member country, but really on the ground floor of the F-35 program for many years. But it was removed and denied access to purchasing these advanced jets because it had acquired Russian air defense missiles. And the mixture of the two in the same, because when you acquire those missile systems, you also bring Russian personnel. And the last thing you want to do is have a sensitive U.S. jet next to a sensitive Russian missile defense system in the same country. And it really also, just in terms of look and appearances for many U.S. officials, crossed the line. And that prompted Congress to prohibit Turkey from being part of the F-35 program. So whether Trump can actually just simply sign something and give Turkey access to these F-35s is an open question. Lawmakers may have something to say about it. But in the meantime, we may see some deal-making when it comes to Boeing jets, perhaps an order of up to 250 commercial passenger planes. And there may also be some F-16s thrown in there, too. But we didn't see anything signed. There was no paper released at the top of the visit. So they've got a lot to talk about right now.
Interesting language coming from the president, sort of the polar opposite of the Biden administration when it comes to Turkey. Not only could lift sanctions, but he said Erdogan will be successful in buying what he wants. Presumably, and shortly after that, said that he will discuss Patriot systems and mentioned that Turkey wants to buy F-35s and F-16s. We will talk about it. Is this deal as good as done as far as the president's concerned? Congress would be the roadblock?
Well, in many ways, Congress could stand in the way of the president on a number of things, but we have not seen them demonstrate the wherewithal to do so. Another example is something we may see later today on this, Joe, and that, of course, is the president perhaps signing an order related to the TikTok deal. Many lawmakers have expressed their misgivings over what they've seen about the transaction so far, concerned that it doesn't comport with the 2024 law that on a bipartisan basis they got together to pass. Now, what are they going to do about it? That is the other question. And is there some legal mechanism or step that they could exercise in this case on the F-35 to truly stop the president? So we will have to see how that unfolds. And lawmakers are out this week. They will be back next week to hash through and try to avert a shutdown. But this will be yet another thing for them to tangle with for sure.
And another important topic that I guess we would expect to come up as well is just the Middle East as well, right? I mean, Trump has been stymied on two fronts. If he's just as stymied on Russia, Ukraine, he's also been stymied with Israel, Gaza, of course, and Erdogan is quite essential there as well.
Well, he could be a key player to Trump trying to get through this agreement that he presented earlier this week to regional leaders. Steve Witkoff, his key negotiator, indicated that perhaps we really were on the cusp of getting something. The other parties have been less enthusiastic. Not only the U.S. allies in the Gulf, including Saudi Arabia and Qatar, but even the Israelis have been wary about jumping aboard this as well. And so it remains to be seen whether, even if Erdogan does exert some influence, whether that would be the decisive factor. And Trump indicated today, as he often does, a deal is just around the corner, but it's unclear whether they are actually that close to the goal line today.
Is there more than oil that President Erdogan could do to influence Vladimir Putin? To what extent does their relationship allow a difficult conversation?
You know, that is a good question, and it's unclear whether any leader in the world, perhaps say Xi Jinping, really has that kind of sway over Putin, because he is it's hard to call it a fixation, but he really is determined with the war in Ukraine to continue prosecuting that.
You could call it a fixation.
And I guess we could, for the purposes of this conversation at least. And when it comes to China, we have seen China previously express its own version of misgivings about what's happened in Ukraine and Putin's responsibility, but they've since moved on, because in terms of geopolitics, it's better for them to really approximate themselves closer to Moscow than to the U.S. right now in this moment, when we do see tensions over trade and geopolitics and technology heightening between Washington and Beijing.
And you mentioned trade, Mike. I mean, this has just been so crucial to Trump's geopolitical policy, not only with the Boeing jets, of course, and then the F-16 program that or F-35 program that he's dangling out there, but just LNG, liquefied natural gas, and maybe trying to fill the void in Europe if Europe is able to wean itself off of Russian energy. How crucial is that?
Well, he sees that as a win-win, because if we're the U.S. able to sell a lot more of the LNG that is being produced increasingly here, that'll be a stopgap for Europe, which has been reliant for years on Russian supplies, and it'll certainly be a boon to producers here. You brought up trade. I heard something interesting in the Oval Office remarks from the president, and he was promising perhaps a cut of the tariff income for U.S. farmers until they start to see more benefits from the tariffs themselves, including the idea that tariffs would pressure China into purchasing or following through on its agreement to purchase more U.S. grain. So this idea of, payments directly to farmers certainly would take aim at a base that he has cultivated for years.
Sort of the newest version of the rebate check idea that they were floating a couple of weeks ago. We'll see if that goes anywhere. Sometimes we say things and we don't follow up. Michael Shepard, always a pleasure to have Shep with us in Washington to get the ball rolling, and thank you for walking us through that. Alongside Mario Parker, I'm Joe Matthew. I need to get one of those F-35 pins, but we'll do that another day. Stay with us. Mike Dorning from our Capital Influence team is coming in next. We're less than a week out from a possible shutdown on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all trading lower. Traders are driving stocks down as concern about stretch valuations overshadows data showing that the economy is holding up. S&P right now down another 26, down 0.4%, had 66.11. The Dow down 98 right now. The Dow dropping 0.2%, while NASDAQ, the composite index, down 0.3%. The NASDAQ 100 index also down 0.3. Russell 2000 down 0.9, and our Mag 7 index down 0.5%. 10-year at 4.17%. Spot gold up $2.50 the ounce, 37.38, up by about 0.1%. And West Texas Intermediate crude down 0.4, 64.72 a barrel. Kimmel's return to ABC, a rating success. He got 6.26 million viewers, the most ever in the show's regular time slot. That total, by the way, significantly higher than the 1.55 million viewers that Jimmy Kimmel Live has averaged this year. This all according to Nielsen data. Kimmel is on ABC. ABC, a part of Disney, and shares of the Walt Disney Company right now, they are trading little change, down by about 0.1%. So recapping here, we are looking at a down Thursday. The Dow, the S&P, NASDAQ, all in the red. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back, we go to Washington. Balance of Power continues right now. Your hosts, Joe Matthew and Mario Parker.
All right, Charlie Pellet, the voice of Wall Street and the New York subway. If you get up to New York and you're on the train, just listen for him. I'm Joe Matthew in Washington. Thanks for being with us on the Thursday edition of Balance of Power. Mario Parker at my side, and the memo is out. We've been talking about this for weeks on this program. We've had a number of lawmakers weigh in on the idea that Russ Vought can't wait for a shutdown. Remember, Mick Mulvaney was at this very desk. He said he was jealous of Vought for this moment because there's a plan somewhere in a black book, and well, it just came out in the form of a memo. Mario, the White House directing federal agencies to come up with a list of reductions in force layoffs. Many federal workers would be deemed unessential and lose their job and likely not get it back if the government were to shut down. This is pretty remarkable. As I read from the memo, once fiscal year 26 appropriations are enacted, agencies should revise their RIFs as needed to retain the minimal number of employees necessary to carry out statutory functions. This is like Doge on steroids.
It is Doge on steroids, for sure. That's a great way to put it, Joe. I mean, this harkens back to March, right? The White House here is acknowledging the fears that Schumer had earlier this year when he essentially decided to forego a shutdown fight in order to preserve federal employees, their jobs, essentially, right? So this is the White House up in the ante. Schumer's up the ante in some ways with his rhetoric this time around. He's more itching for a fight, at least that's what it seems to be publicly. The White House is saying, essentially with this move, show me your conviction.
Yeah, well, you know what? Hakeem Jeffries showed him something on social media last night. He picked up the story from Politico. White House to agencies prepare mass firing plans. Hakeem Jeffries, listen, Russ, to Mr. Vought. You are a malignant political hack. We will not be intimidated by your threat to engage in mass firings. Get lost. Here's the Democratic leader from earlier in the House.
Republicans have clearly demonstrated they want to shut the government down. Throughout this process, an intentional decision was made by Republican leadership in the House and the Senate not to have a single conversation with Democrats. They're not even pretending as if they want to find common ground.
Now, Mike Dorning doesn't use the word shut down lightly. He's been through this too many times. Deputy team leader of our Capital Influence team. He's with us at the table right now. Mike Dorning, we're 6 days out. Did it just get more difficult to avoid a shutdown?
I think it did get more difficult. They've really ratcheted up the tensions here. In some ways, it makes it harder for the Democratic leaders to back down. And Trump has seized the main character protagonist role here. He's now the one who's driving the action. So that makes it A, harder for Democrats to back down, and B, more likely that they can blame it on Trump if the government does shut down. That said, it could potentially fracture parts of the Democratic coalition. Some of those federal employees, don't like the idea of being permanently dismissed, for instance.
And Mike, are you surprised at how quickly the White House played this card? I mean, we have been speaking all week just about how Donald Trump kind of seized on the messaging fight here. I mean, and to your point now, he becomes the protagonist as well. Are you surprised that they went essentially to the nuclear option this quickly?
I was a little surprised by that. We started to see that, though. He had initially signaled he would have that, traditional meeting where the president tries to negotiate with the other side and the other side tries to negotiate, and they all at least pretend like they're trying to do something, and that this would more be something that happened late in the day. But first he canceled that, showy meeting of like, we're all going to try, and then he ratcheted this up. So it was two steps. First, cancel the efforts to look reasonable. Second, just raise the temperature a lot. That probably helps him with his own constituency. We'll see how this gambit plays out.
What about the DMV effect here? District, Maryland, Virginia. Well, maybe it's just the MV effect. The senators from Maryland and Virginia, Tim Kaine, Mark Warner, right, Chris Van Hollen, thinking about the thousands, the tens of thousands of federal workers in their states. There is a thought that Republican leaders are looking across the aisle at those specific senators, knowing that they would be more reluctant to let the government shut down, to let those paychecks stop.
Well, we saw a response from one of the Maryland senators, Chris Van Hollen, that was essentially like, this is mafioso blackmail, we're not going to give in to this. So that's one where we think it's probably not going to have an impact on his vote, at least from what he's shown so far.
Okay.
But I would look at some of the unions to see that sort of disparity. You had the Federation of Government Employees, which mainly represents federal employees, and they're like, hey, let's try to negotiate, guys. But then the AFL-CIO, which is the broader labor movement, was like, no, this is about health care, don't back down. And there you see the different pieces of the Democratic coalition maybe migrating in slightly different directions.
Well, I bring that up in part, Mario. Tom Emmer was on the program a few days back, and he said if Democrats let the government shut down, they just lost the Virginia gubernatorial race. There is a connection here somehow to that race, or at least one they're trying to draw on both sides of the aisle. Is that real for you?
I'm not sure that I would agree with that analysis. We'll see how it plays out.
That anger against Democrats might be a problem for Abigail Spanberger would be the idea here.
That could be a problem. But again, Trump has seized the protagonist role, and he's the one who's setting the agenda. In order to blame it all on the Democrats, he would kind of have to look like the secondary character in this drama, where Schumer was the main character. Schumer was driving the action, but he's seized that role of driving the drama to be Trump as the hero, Trump as the one who's saying, bring it on, I'll fire all these workers if you go through with it. So he's the one who's setting the agenda. He's the one who's driving the action. It makes it a little harder, but he looks strong this way instead of looking weak.
Mike, I want to ask you, just to piggyback off of something you and Joe just mentioned, in terms of the health care that's at stake here, right? Democrats have planted as a heel to essentially fight on this. How salient is that message, especially when we look at the Obamacare subsidies?
Yeah, I mean, that is something that will be very salient going into the midterm elections. In some ways, the timing of this doesn't work to the Democrats' advantage on the Obamacare element because the notices of all the premium increases don't go out till November 1st, and they don't kick in till January 1st. So were this drama to happen later on, people might be more aware of how much their premiums might increase, and it would seem like something that's happening sooner, at the end of the year. But they've chosen to fight now. I was sort of thinking in the beginning they might delay and have the fight in November.
You got
a
it.
meeting tomorrow.
Yeah, this
at
is
4
Charlie
p.m.
Pellet in the Bloomberg Newsroom. We have got the Dow, the S&P,
Democrats
NASDAQ.
are
We're all
together
trading
for
lower right
last
now with the
week.
S&P 500 index down 27, looking at a loss right now of just about 0.4%. The S&P at 66.10. We have got the Dow Jones Industrial Average down 88 on the Dow, decline there of just about 0.3%, while NASDAQ is down 83. For NASDAQ, a decline there of just about 0.3%. Our 10-year currently yielding 4.17%, with a 2-year right now 3.64%. We do have gold flat on the day, 36.33 the ounce, and West Texas Intermediate crude down 0.4%. WTI right now 64.76 a barrel. Bitcoin right now down 2%, 111,268. Some of the other stories that we're following for you: Starbucks plans to close stores and eliminate 900 jobs in a $1 billion restructuring effort under CEO Brian Nichol. Company's overall store count in the U.S. and Canada will drop by 1% to 18,300, and then it plans to grow the number of stores it operates and refurbish another 1,000 restaurants. Changes all part of Nichol's plan to make its restaurants a more inviting place to visit, with early results showing customers visiting more often, staying longer, and sharing positive feedback.
SIM cards.
Starbucks shares today, they are down now by just about 0.5%. Some of the other stories that we continue to follow here at Bloomberg: we do have BP saying oil demand is going to keep growing for the rest of this decade, rolling back its prior projection that the high point could come as soon as this year. Among some of the oil names today, the oil majors: BP up 0.2%, ExxonMobil trading higher by 0.7, and Chevron up now by 1%. CoreWeave, keeping an eye on that stock. A little change
the only
on
ones
the day,
who really
up now
didn't
by
sign,
about
John
0.1%.
Snow, who was
It is
under
expanding its
George
agreements
W.
to
Bush,
supply
and
data
Steve
center
Mnuchin, who
capacity
was
to
Donald
open
Trump's
AI
first
by
Treasury
as much as
Secretary, perhaps
$6.5
understandable,
billion
that he didn't
to
sign. It's a heavyweight group,
$22.4 billion.
and they're making the case that any ability by the president to just fire Fed governors at will would expose the bank to the possibility of political manipulation, and that would lead to worse economic outcomes, higher inflation, greater debt, and a lot of very bad things. So we don't know how much weight this will carry with the Supreme Court.
CoreWeave shares, they're up now.
Decide very soon on whether to let the president go.
Elsewhere in the tech world, keeping an eye on Intel, got an upgrade today to neutral from sell at Seaport Global, which sees near-term upside for the chipmaker if it receives more direct investments. Also, Intel shares, they're up now, surging by 6.9%. Eli Lilly has halted a study of an experimental drug designed to prevent obesity patients from losing too much muscle, citing strategic business reasons it does not disclose. CarMax shares, they're trading lower. This after the company reported a surprise drop in comparable sales as buyers had rushed to buy vehicles in the previous quarter ahead of a tariff on imported vehicles. CarMax shares, KMX on the ticker. Right now we are looking at CarMax shares. They are trading down. We've got CarMax right now down $11.27. In terms of the percentage on CarMax, that is a drop right now of 19.8.
Quick ruling, but this is also, Scarlett, we should note, just about a stay in the issue of whether she can be fired while the case works its way through the courts. The Supreme Court has not officially taken up the case yet. So they could rule that she can stay in her job. They could rule she gets fired, and they could also rule that she keeps her job or gets fired, and they'll take the case and decide later. So we don't exactly know how this is going to play out, but we should, we think, get at least the interim decision reasonably quickly.
All right, and of course, the minute that we do, of course, we're going straight to you, Michael McKee, Bloomberg's international economics and policy correspondent, joining us from Washington. Coming up on Bloomberg Markets, shares of CarMax are plunging and dragging down the auto retailers. This after the company reported significant sales shortfalls for the second quarter. And it's not the only news in the auto sector today. We're going to break it all down for you next. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Markets. I'm Scarlett Fu. South Korea says that investment projects in the U.S. will remain in limbo until visa issues of its Korean employees are resolved. Seoul is urging Washington to act quickly. And this comes after hundreds of South Koreans were taken into custody in a raid this month on a Hyundai and LG Energy battery plant that's currently under construction in Georgia. South Korea's Prime Minister Kim Min-seok sat down with Bloomberg television anchor Sherry Ahn in Seoul for an exclusive interview on the state of U.S.-Korea relations. Take a listen.
Before discussing what kind of solution there is, realistically, without a solution, it's difficult to invest in the United States and carry out the various joint projects currently planned between South Korea and the U.S. We absolutely must find a solution. Several projects are underway between South Korea and the U.S. Without resolving the visa issue, meaningful progress remains virtually impossible. The detention incident dealt a severe blow not only to the general Korean public, but especially to the workers who were actually detained. In the absence of firm assurances regarding their safety, both they and their families are understandably reluctant to enter the U.S. again while this matter remains unresolved.
Are investment projects right now halted until some resolution is acquired on the visa issue?
Although the projects have not been entirely halted or formally placed on hold, it will be very difficult for a large number of workers to enter or re-enter the U.S. until this problem is resolved.
That was an excerpt of Sherry Ahn's conversation with South Korean Prime Minister Kim Min-seok. For the entire interview, go to Bloomberg Terminal or to Bloomberg.com. All right, we're going to stick with autos here for our stock of the hour because looking at shares of CarMax, they are plunging after the company reported a surprise drop in comparable sales. We're also learning that there's a bankruptcy filing from a group of companies related to the ailing First Brands Group. That move triggering another drop in the value of the auto parts suppliers' loans. For more details, we want to bring in Bloomberg's Detroit Bureau Chief David Welsh and Bloomberg's distressed debt reporter Eliza Ronalds-Hannon. Eliza, let me start with you here. Tell us a little bit more about First Brands Group and the companies related to that and the bankruptcy filing that they're experiencing.
Right. Well, First Brands Group is, as we've reported, in line to file for bankruptcy itself. We've reported that that will happen in the coming days or about a week. And the cause of its filing, or the proximate cause, seems to be the its heavy reliance on short-term working capital financing that was based on assets receivable and assets payable. So it was stretching out terms to suppliers and also selling its invoices from buyers. And so it had a whole lot of cash on the books, but investors didn't realize the extent to which all of that working capital, or much of it, was financed by short-term loans, which are risky in two ways. One, they come with high interest rates, and two, they can be pulled if lenders get skittish. And that seems to be what has happened. Liquidity is certainly getting tight, as indicated by the plans for a bankruptcy filing, and that drop has come as the company was looking to refinance last month its $6 billion worth of debt, and investors noticed some red flags in the earnings and in the financial statements and asked for a lot more info and for a quality of earnings report.
Okay, so it's racing against the clock here, First Brands, that is. What we should mention, of course, is that First Brands basically sells parts like windshield wipers under different brands, water pumps, and filters. David, let me bring you into the conversation. Where does
into what is now a clean CR. Then on the other side is the administration ratcheting it up with this threat to fire a lot of non-essential personnel. It's not to lay them off like a traditional shutdown where you get back pay and you get back on the payroll when the shutdown is averted. No, this is a permanent firing of non-essential personnel that could gut agencies that, frankly, the administration's had their eye on trying to figure out how to do, over the last 9 months. So now it's actually very clear that, different from March, where we faced this and nobody wanted a shutdown. This is a situation where I think everybody wants a shutdown. And I think that raises the potential for government to really go into a significant flux right now.
And Ophira, this is, to Rick's point, this has been hanging over this entire saga for the better part of the year, right? This was Chuck Schumer's worry back in March when he decided to not follow through with the shutdown fight. Does this change the calculus at all on the side of the Democrats? Would Democrats want to see this fight now, or do Chuck Schumer and Jeffries back down because of Rush vote?
Well, I think let's back up here. President Trump and Republicans in Congress who control Congress own this, and they made a promise on day one that they were going to lower costs for the American people. I think Democrats are reasonably asking Republicans to come to the table and honor that, to protect people's health care and to make sure that their health care costs don't continue to skyrocket by protecting these ACA subsidies. And we should also remind people that this one big beautiful budget that they just passed is going to rip away health care from countless other people and is putting our health care system, I think, at risk. And sending people's costs through the roof. So I think Democrats are the ones right now who are showing their work and fighting for the American people on an issue that they care about.
Does this memo change the game for you, though? Does this codify what you feared? And do you think it might cause some Democrats to vote yes to avoid a shutdown, to avoid the layoffs?
Well, I think President Trump's taking an interesting approach here, laying off people when he said more people were going to be put to work, and sending, again, people's health care costs through the roof.
You also saw what he did with the Doge, though, and as we mentioned earlier, this would be Doge on steroids.
Doge on steroids, and I think
the budget director can fire whoever he wants in that world. So do they want to shut down?
Well, I think that approach has proven really unpopular with the American people. Laying off countless people for indiscriminate reasons just to make a point has not proved popular. And again, President Trump said on day one, people's health care costs are going to be people's costs were going to be lowered. He's not living up to that, and I think every item or action that he takes, that Republicans in Congress take, seems designed to send prices through the roof and to not serve the American people. So I think that's a really tough contrast for them.
And Rick, what of this economic gambit that the president is taking right now? Obviously, the economy is strong, but it's in a tenuous spot right now as well. What's the risk here that there's some type of economic blowback that the president ends up owning? I mean, what if we tip into a recession or some such?
Yeah, I don't think anybody's predicting a recession off of a government shutdown. One of the things you got to remember, Mario, is that when you did reconciliation a few months ago, you pounded hundreds of billions of dollars of new spending into the federal government. I mean, over 150 billion into DoD alone. None of that is affected by this. I mean, in essence, you prepaid the priorities that you want before the potential for a government shutdown. I don't think anybody was actually saying that that was the strategy in that additional spending in the reconciliation bill, but it's turning out to be a plus. So there's a lot of people now sort of handicapping this in Washington and saying, well, you know, DoD's already covered, ICE is already covered, you know, a lot of the critical national security components are covered. They can function for quite some time with the cash they now have because, you know, we've never really done a spending bill like this. I really think we can't look at this traditionally. I mean, like, I think that the idea that anybody can handicap who the winners and who the losers are in this have not even seen really the beginning of this process. You know, if we were we'd be having a totally different conversation today if that OMB memo didn't go out, that, you know, Schumer's holding up a clean CR that all the Democrats voted for under the Biden administration. It's all Biden administration spending that all the Democrats in the Senate voted for. And that would be the storyline, right? Is that all Republicans are trying to do is give them back what they had already approved once before and buy more time to do appropriations, which is the proper place to talk about, you know, renewing spending like the ACA subsidies. And yet now we're talking about a full-on collapse of the federal government at the hands of Russ Vought. I mean, like, Russ has put himself in the middle of this. If you handicap it on a political purposes, you don't want Russ Vought to be the face of the Trump administration, but he is today. And in a shutdown, if he actually does permanently fire hundreds of thousands of employees, which would be the threat he's making today, he will be the face of the Trump administration.
Wow. Well, Fiora, what do you make of the different reactions, the nuances between Chuck Schumer and Hakeem Jeffries in dealing with this moment? Chuck Schumer's been out doing some interviews. He said following the release of the memo, he called it an attempt at intimidation, said unnecessary firings will either be overturned in court or the administration will end up hiring the workers back. Sort of a matter-of-fact reply. Hakeem Jeffries on X, listen, Russ, you're a malignant political hack. We will not be intimidated by your threat to engage in mass firings. Get lost. Which approach works?
I think they're both united on fighting for the American people. I hear fight in both those statements, and I think that's what people want to see right now. And I would push back at Rick on the timing here. People are going to do open enrollment soon. Their premiums are going to jump if we don't see Republicans in Congress take some action to preserve these ACA subsidies. And I think, again, Republicans seem really committed on running on their healthcare, your healthcare costs skyrocketing through the roof, on costs going up. Right now, people want to see costs going down, and I don't think Republicans have a good story to tell on that. It's a huge liability for them.
And Rick, what of the terrain of health care that the Democrats have sought to kind of fight this battle on? I mean, how salient do you think that will be with voters, especially, particularly given that you see some moderate Republicans, swing district Republicans, even express at least in some ways some tepid interest in the ACA subsidies being renewed or extended?
Yeah, if you're a Republican in a Trump plus 10 district or below, probably 30 Republicans today are just sweating bullets because they're looking at the midterms going, oh my God, you're going to have the debate is now going to swing to healthcare. You know, we've already cut $1 trillion out of Medicaid, Medicare, and now we're going to do something on this ACA subsidy. So look, those 30 guys are sweating, but like, this administration has not been running with a strategy of retaining Congress, right? I mean, like, you could not write a script today that says the Trump administration is doing all these things to ensure that they still have at least a 1-vote margin after the midterms, right? They are running an administration that is an ideological administration, really inspired by Russ Vought and Stephen Miller, and it's kind of, you know, politics is at risk, right? You try to make the best out of it you can. And so, by the way, I mean, like, I think that if Republicans lose the midterms, which is, you know, potentially the case, that the White House will see that as, okay, we don't really care because we're we've assembled all this power now. We have all this capability to just act alone. This has not been a mistake. This is something they've been planning on doing. And I think they're sitting around the table going, well, it'd be nice to have the House and we can set the agenda, but it's not critical to the Trump administration in the function of the power that they've already accumulated.
So then it becomes a question of what the off-ramps are. How long does the government stay closed if it does, in fact, close? This might not be a 2 or 3 day affair. The president already can show off the record longest ever government shutdown. Will he top it again?
I think that remains to be seen, but I think what people do want to see is Republicans come to the table. I think, again, healthcare costs in general are a huge liability for Republicans right now, and every single day they take action to send those costs through the roof. And Democrats, I think, are really having a story to tell right now of how they're fighting for the American people, especially on healthcare. And I think that's really personal to people right now. And we're already seeing the effects of the one big, beautiful budget in a place like Virginia, where 3 healthcare clinics have closed, citing specifically the action that Republicans just took to cut healthcare and to fund a tax cut for billionaires.
So why not call the bluff? Shut the government down, see how that plays out in the midterms.
Well, I think people are asking to come to the table. I think we're at the place where Democrats are at the table.
You're still trying to be productive.
I think that's what the American people would like, is to see people come together to the table to address the items that they asked for. Again, in the last election, people were very clear. They want to see their costs come down. President Trump said that was his day one priority. Every single thing he and Republicans do seems designed to do the exact opposite.
I don't mean to be too cute, that's not the most common angle here in Washington. Everybody's trying to get something for themselves, even if it means shutting the government down, right?
Well, I think
everyone minus one.
Well, Democrats, I think, are trying to get something for the American people. I don't think that President Trump and Republicans can say the same. Threatening to lay off countless people when they've already done that in a place like Virginia, where disproportionately there are a lot of federal workers. I think we're starting to see people really do not like that, have raised their voices against that. And I don't think a shutdown would really be popular, from Republicans at least, to show that they're not the ones who are able to come to the table and deliver for the American people.
And Rick, you mentioned, you invoked the midterms and the risk that's there. We know that the midterms have been front and center on the president's mind, especially throughout the summer, his redistricting push, et cetera. This seems to kind of fly in the face of those worries, right?
Well, Mario, I think it's actually kind of a twist to that, right? In other words, I do think the president is worried about the midterms, but he's worried about it because he doesn't think he can win them with the deck of with the cards that he has in his deck right now. So the whole idea behind restructuring the congressional districts in these 5 states is actually to give them new cards, is to actually say, you know what, I don't think we can win, with the members we have, so we got to go create some new districts that we can have a better chance of actually holding our majority. I think the whole redistricting initiative is because of a clear understanding that left today with the process they have in place, they're not going to win the midterms. And so why not try to just change the whole game? And I think it's a very good tactical plan. It's just, I'm not sure it actually builds confidence with American voters. And this is where the construct is always troubling with a lame duck president. His name's not going to be on any ballots anymore. He doesn't have to run for re-election in 2026 or 2028. And they are very ideological driven administration, where it's like, if we have to burn down even Republican seats in the process of winning what we're doing, then so be it. That's what we're going to do. The rest of Republicans in Congress, they're not going to be happy with that, but they're also not likely to complain because they've become captive of that strategy.
We're talking about a lot of the posturing here. Just to give us a sense, just to reset what Democrats are actually looking for in our remaining moments, would an extension of Obamacare subsidies and a promise to have no more rescissions bring Democrats to a yes?
I think Leader Jeffries and Leader Schumer have been very clear.
Those two are done, and the government doesn't close.
I think Leader Schumer and Jeffries have been very clear. They want Republicans to come to the table to protect people's health care and to make sure that their costs don't continue skyrocketing. I think that should hopefully be enough.
But the rescissions promise is also part of this as well, right? I can't claw back funding from something that we've agreed on. I'm just trying to set the baseline for our audience again, because we talk about this a lot. These are really the sticking points for your party.
And I think for both Leader Jeffries and Leader Schumer, they want to see Republicans come to the table in good faith and talk about both those things. So I think that would be a starting place.
And then you mentioned the story that Democrats have to tell as well. I mean, for earlier this year, a lot of the story was that the Democrats didn't have a story to tell. I mean, how do you see this story on health care, on Medicaid, on just a potential shutdown, even with workers at stake? Do you see that galvanizing both parts of the party? I mean, the progressive and the centrist parts of the party?
Well, I think President Trump made a promise to the American people that he's not living up to, that their costs were going to go down, that America was going to have more jobs coming into it. I think every day people don't feel that in their everyday lives, right? We're talking about healthcare, and your AC premium maybe will go up when you open enroll in a couple of months. That's not something I think the American people want to hear right now. And I think Republicans made very clear that their priority is not working people. It was billionaires in this country when they passed that tax cut. And it was funded by ripping away Medicaid, and I think they thought they were being cute by making the effective date of that after the midterms, but it's not, and I think the American people are feeling that every day. So I think Democrats are showing right now in the way that they're fighting for people and working really hard to not just lower their cost, but to protect their freedoms, that we're the folks that people should put their faith in, and I think that kind of fight is something the American people will appreciate.
Just about a minute, Rick. Was it a mistake or a smart strategy for Speaker Johnson to send everybody home until after the 1st of October?
Well, I certainly think that it put all the onus on the Senate, which was part of his strategy, and it put all the onus on the Democrats. In other words, you can't actually amend this now without a government shutdown. So if you actually did cut a deal, you still can't, unless he brought them back, you still can't actually avert a shutdown. And so the reality of it is, normally it's the Senate jamming the House. Now, in this case, it was really the House jamming the Democrats in the Senate, saying, if you get what you want, you're going to still have a shutdown. And so, and by the way, that still can trigger Russ Vought's efforts to try and gut some of the personnel in the administration. So I actually thought it was a pretty interesting gambit. And notice, nobody's really attacking him for it. I mean, I haven't seen the Democrats go after him on it. I mean, Hakeem Jeffries is attacking Russ Vogt.
Just stand by, because Debbie Wasserman Schultz is coming up in our next hour. Rick Davis, Ophelia Heskell, thank you. Our great panel will be back in our second hour here on Balance of Power. Many thanks as well to Mario Parker here in Washington. I'm Joe Matthew. Stay with us as we welcome our global television audience to the conversation right here on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Consumers bring the fastest growth in 2 years. Welcome to the Thursday edition with the latest reading on GDP growth resonating in Washington with less than a week to a possible government shutdown. We'll be joined in a moment by Stuart Paul at Bloomberg Economics. He's with us on the data, and we'll talk shutdown politics with Democratic Congresswoman Debbie Wasserman Schultz of Florida. Analysis from our political panel today. Bloomberg Politics contributor, Republican strategist Rick Davis is with us alongside Ophelia Heskell from the Democratic Governors Association. We start, as always, on Wall Street. Let's get to the markets first with Charlie Pellet in New York. Charlie, how's it?
Thank you very much, and we're looking just the same as our last update, Joe Matthew. The Dow, the S&P, NASDAQ, they're all in the red right now. It is a down Thursday here. Traders driving stocks lower as valuation worries overshadow data showing that the economy is holding up. S&P right now at 6603, holding just above that 6,600 threshold, down 0.5%. We've got the Dow down 134, drop there of 0.3%. And at midday, we've got the NASDAQ Composite Index down by about 0.5%. The Bloomberg Mag 7 Index lower now by 0.8%. 10-year 4.17%, with a 2-year 3.65%. Gold flat on the day at $37.34 the ounce, while West Texas Intermediate crude oil is down 0.5%, $64.69 a barrel. Among the day's economic reports, the U.S. economy grew at a revised 3.8% annualized pace in the second quarter, stronger than the previously reported 3.3% advance, and initial applications for jobless benefits fell to the lowest since mid-July. Our Stuart Paul will have a whole lot more on the economy coming up in just a moment. Starbucks shares, they are trading right now lower by 0.5%. It plans to close stores and eliminate 900 jobs in a $1 billion restructuring. Also, Amazon has agreed to pay $2.5 billion in penalties and refunds and change its process for how to cancel its Prime subscription to settle a lawsuit by the Federal Trade Commission. Amazon shares, they're down by 0.5%. Right now, we return to Washington. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, the Marathon Man. We thank you, Charlie. As always, he'll be back with a little bit more in about 20 minutes as we follow the Thursday trade here, even as we talk politics in Washington. It's great to have you along on Bloomberg TV and radio. I'm Joe Matthew in the nation's capital as we consider the data today and the deadline. Only 6 days to go until a possible government shutdown. It's not looking like it's going to get easier, with a new memo out today from the budget director at the White House, Russ Vought, calling for significant federal worker layoffs at the moment the government shuts down. The administration would be in control of where the money goes, and it codifies a conversation that we have been having for months, well, weeks on this program. It's been months in the making, knowing that this deadline was here on the 30th of September. And we've been talking to lawmakers, yes, for weeks, about the prospect of Russ Vought getting exactly what he wants. It was Mick Mulvaney on this set who told us he was jealous of Russ Vought at this moment because there was likely a plan. Now we're seeing the plan, and it does seem to be impacting the dynamics on Capitol Hill with more folks looking for a shutdown less than a week out. This comes against the backdrop of some pretty good news on the economy, growing at a revised 3.8% annualized pace in the second quarter. That's up from 3.3 in the latest reading here. The economy rebounding in the second quarter after a contraction in the first, and consumers are carrying their weight. As I mentioned, we're going to talk about this with Stuart Paul in a moment. We heard earlier today from Stephen Myron, the newest member of the Federal Reserve Board, earlier today on Surveillance, his take on this moment in the economy. Listen.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy.
Let's bring him in now. Joining us from New York, Bloomberg Economics U.S. economist Stuart Paul, keeping us honest here on Balance of Power, as always. Stuart, let's start with the numbers, and then we can talk about Mr. Myron's view on things here. How should we be reading the health of the consumer with a number like this? Because I keep hearing everybody's tapped out.
Yeah, so when we look at the spending numbers that we saw in the revised estimates for Q2, the data looks strong as we continue looking into the third quarter, as we look at July, as we look at August retail sales, and tomorrow we'll get PCE spending. The health of the consumer looks pretty good. A lot of it, though, is contingent on the labor market. When the pace of hiring slows, when the pace of wage growth slows, consumers' capacity to spend going forward also gets dulled. And I think that the big factor here that we can think about is firms' hiring plans, firms' expansion plans. And Joe, I want to point you to what I think is the most important revision in the Q2 numbers that were released today, and that's corporate profits. Corporate profits in the second quarter were revised down to about $7 billion from a previously estimated nearly $60 billion. When that's the case, when there's that little in corporate coffers, you can't expect to see the same investment and hiring plans going forward than we previously expected. And when that's the case, when labor market cooling and slowdown in investment, slowdown in firms' expansion plans is the most front and center item on my desk, it's hard to be very optimistic about spending going forward.
Well, that's incredibly significant, Stuart. You just pulled the parking brake as we careen down the highway here, because the whole story on Wall Street has been, don't worry about the economy, don't worry about the Fed. Look how much money we're making. Corporate profits are soaring, and you're telling me they're not.
Looking at the BEA data and looking at the revisions that we just saw today, the BEA data do not paint that picture. It's a very difficult landscape out there. What's most significant when we break it down at the industry level and to relate it to policy and your world here on Balance of Power is that the firms that are being squeezed most appear to be manufacturers and wholesalers. It's the folks that are in the middle of the supply chain. It's the folks that are not yet able to pass along higher input costs to consumers, and instead they're stuck bearing the burden of the tax incentives created by tariffs. So we do see this consequence of policy bearing out in corporate profits. It's right there in the middle of the supply chain.
So you finally just said the word tariffs. That's what we're talking about here, because it's been seen as good news until, well, now, that companies or exporters were not passing this on to consumers, right? And that's what we hear from the administration. It's not showing up in the CPI, therefore we're getting away with something. But if companies are eating that, it eventually eats into their profit margins, which is a problem for shareholders, which sends stocks lower.
That's right.
This is the scenario.
That's right. It's a problem for shareholders. It's a problem for growth. It's a problem for expansion plans. And ultimately, it'll be a problem for the labor market. It's, again, the thing that I think is most important, that's below the fold, that warrants the most attention today.
Fascinating stuff. What does the Fed think of this right now? Because we're supposed to be looking at, what, two more cuts, before the end of the year. But when you see tape like this, what do you do if you're Jay Powell?
Well, so you have two different things that you need to consider here. You have to have the outlook for the labor market, and you have the outlook for inflation. Now, inflation is still running a bit hot. Tomorrow, we're going to get the Fed's preferred measure, the core PCE price index, which will still show nearly 3% year-on-year core inflation, and that's going to keep the Fed a bit uneasy. I think that we'll still see at least one more cut, likely in December this year, because the balance of risk is shifting to the cooling labor market. There's a very tenuous balance right now in supply and demand for labor. And I think that the Fed is focusing most on that. I think that we're likely to see at least one more cut this year and probably another one in Q1. After that, it's really all about the printed data, which could be affected by the government shutdown. So I'm excited to hear what Congresswoman Debbie Wasserman Schultz has to say about the politics and the expected outcome.
Yeah. You may not be uplifted by it, Stuart, but I appreciate that. It's always great to see you. Stuart Paul, with the read on the data and the economy surrounding it, Bloomberg Economics U.S. economist, I should say. We are going to talk to Debbie Wasserman Schultz in a moment. We just heard from Hakeem Jeffries, who does not sound like we are getting any closer to a deal, in fact, further away, as Russ Vought shows up with a memo, as I mentioned, at the White House, talking about significant federal worker layoffs if the government shuts down next week. Democrats, in many cases, are saying, I told you so. Here's the Democratic leader from the House.
Republicans have clearly demonstrated they want to shut the government down. Throughout this process, an intentional decision was made by Republican leadership in the House and the Senate not to have a single conversation with Democrats. They're not even pretending as if they want to find common ground.
And of course, Republicans say the same about Democrats, that we're just giving you a clean CR. That's the Biden budget. We'll argue about health care before the end of the year deadline. Why would you close the government down? And it just boils down to an enormous lack of trust following the rescissions packages, following the president's big, beautiful bill that changes to Medicaid, all of which we have discussed with Debbie Wasserman Schultz. And she's back with us now, and not the eve of a shutdown, but pretty darn close. The Democrat from Florida's 25th district, live on Bloomberg TV and radio. Congresswoman, it's great to see you. It's nice to see you smiling, because it feels kind of dark here in Washington. And do you see light at the end of the tunnel here, or do we need to brace for a shutdown?
Well, Democrats are certainly trying to open that aperture of light as wide as possible. And the ball is really in Republicans' court. I am a senior member of the Appropriations Committee, have spent almost my whole career on the Appropriations Committee in Congress, and I've never seen a party like this Republican Party refuse to negotiate an end-of-year spending plan. I mean, Democrats are at the table, we're ready to negotiate. There are only, as you know, Joe, 3 votes difference. This is the tightest margin that a majority has ever had, and of course, we have to sit down and negotiate a bipartisan spending plan. And what we are trying to do as Democrats is cancel those cuts, lower costs, and make sure we can save Americans' health care. We can negotiate that and should negotiate that right now. And if Republicans refuse to, then shutting the government down will be...
This is Charlie Paladin, the Bloomberg Newsroom. Obviously, technical issues right now. We're getting those resolved. Let me bring you up to date on what's happening with U.S. markets right now. We are looking at a down day with the Dow, the S&P, NASDAQ all declining. Certainly looking ahead to earnings after the close of the trading today here in New York. Costco shares falling now by 0.6%. Again, they do report after the close of trading. But right now, we have got the Dow, the S&P, NASDAQ all lower. S&P at 66.05. That is a drop there of 32 points, down by about 0.5%. Dow Industrials down 122, a decline now of 0.3%, while NASDAQ is down 104. For NASDAQ, a drop there of 0.5%. Broad-based selling today. The Russell 2000 index of small cap shares is slumping 0.9%. Dow Transport's down now just about flat on the day, but still lower. And our Mag 7 index down 0.7%. Balance of power continues right now. Back we go to Washington, and once again, your host, here he is, Joe Matthew.
Okay, Charlie. Congresswoman, you never know what's going to happen around here. I appreciate your standing by for a moment. I think we just took a bolt of lightning or something here in Washington. Let's get back to where we were, because you're talking about something important at this time when a memo emerges from the White House. In the next 6 days, the House won't even be back until after the government is presumably shut down. What could happen if no one's talking? Is this over?
Joe, I hope that bolt of lightning really jolts Republicans to the negotiating table, because the fact that Donald Trump canceled a meeting with our two Democratic leaders, Hakeem Jeffries and Chuck Schumer, and refuses to even sit down and talk about the details of negotiating an end-of-year spending plan so we can lower people's costs, get rid of the cuts, and save Americans' health care, that's just unbelievable. And so on top of that, Donald Trump and Russ Vought have been salivating to be able to have their way with hiring and firing. Look, the reality is that we have to make sure that we negotiate a spending plan in a bipartisan way, and we also have to make sure that people don't lose their health care coverage. This is going to drive up health care costs, not just for people who have an Obamacare policy, but for everyone. You have healthcare insurance companies that are already signaling huge increases in premiums, healthcare facilities closing, hospitals closing, healthcare clinics closing. Republicans need to come to the table, and they need to actually demonstrate that they care about whether or not the most important thing for Americans, which is whether they have their health, is something they're going to leave to chance. And I know as a breast cancer survivor, that would be unacceptable for me, and should be unacceptable for Republicans too.
Yeah. There's a thought that this could change in the Senate. Well, a couple things. That some Democrats might be very concerned about this memo, but more specifically, Democrats and Democratic senators in states like Virginia and Maryland, your colleagues like Tim Kaine, Mark Warner, who have a huge number of federal workers in their state, might not want to see Russ Vought get the steering wheel at this moment and might vote yes to pass a clean CR. What are the odds of that happening? Is that a problem or a break in Democratic unity if it does?
So I think that Democratic senators and House members see that play by Russ Vought for what it is, and that is that they are just trying to use intimidation tactics and to distract the American people from the focus we need to have, which is making sure that we can pass a government funding bill that lowers people's costs, that eliminates the cuts, and that saves people's health care. And Americans want us to come together and work together in a bipartisan way to do that. Mike Johnson, Joe, he canceled the 2 days of voting that we have on Monday and Tuesday, the last 2 days of the fiscal year. They're not even bringing us back to town. Democrats will be there. We will be there ready to work on Monday. If the Republicans just shrug their shoulders and ignore this, then they are giving the middle finger to millions of people who need to make sure they can keep their health care costs affordable.
Wow, I can just see it now. You don't have to tell me, but I can see all out on the steps of the House the moment the government shuts down next week, asking where Republicans
are.
We're
at the table, ready to negotiate.
Yeah. We just got a red headline on the terminal, Congresswoman. If you can stick with me for a moment on this. It's certainly a change of subject as we consider geopolitics for a moment. following the meetings at the United Nations General Assembly and the incursions of airspace we've seen Russia provoke in Poland, Estonia, and some other countries on NATO's eastern flank, Europeans are now privately telling Russia, this is according to Bloomberg News, that they are ready to shoot down Russian jets that break into their airspace. Do you trust the administration holding NATO together at this moment?
Well, I certainly hope that Donald Trump lives up to our Article 5 NATO commitment to ensure that we come to the aid of our NATO allies. Russia has been an evil, bad actor. The dangerous games that they're playing, testing and pushing our European allies is an absolute outrage. Donald Trump keeps saying he's run out of patience. He absolutely better make sure, and Congress, I know, will insist, and in a bipartisan way, that we meet our Article 5 obligations to our NATO allies. They have been there for us. We need to be there for them. And Russia and Putin need to understand that you do not mess with the United States of America or our allies, or there will be consequences.
Well, he has been messing with them, which is pretty remarkable to think that we would treat something shy of an attack as a reason to shoot down jets. Does that unnecessarily escalate things if that happens?
Well, I mean, Putin is playing with fire. I mean, he is trying to goad our allies into conflict. And at the end of the day, he needs to withdraw his troops. He invaded Ukraine, a sovereign nation. The United States needs to continue our military support for Ukraine so that they can remain a sovereign nation and that they can get their territory back. If Donald Trump means what he said the other day, that he thinks that Ukraine can actually have all of their territory restored, they can do that as long as we provide that assistance. And we need to stand up and not just leave Ukraine twisting in the wind without our help.
Well, you do wonder if there's going to be a congressional answer to some of this if this type of tension continues, Congresswoman. Yeah.
A lot. And
well,
I know I hear from my constituents down here. I represent a large Ukrainian population who want to make sure that their country remains sovereign, and also who want to make sure that the free world remains united against the evil access that includes Russia.
A massive Ukrainian population, one of the biggest in the country, and a massive military presence, of course, in the state of Florida. It's great to have you back, Congresswoman. Let's see you when you're back in town. Debbie Wasserman Schultz, Democrat from Florida, is 25th with us here on Bloomberg TV and radio. I'm Joe Matthew in Washington, where it does feel like we are ever closer to a shutdown. Each day we move. Of course, as the Congresswoman referred, the end of the fiscal year is next Tuesday, September 30. Next Wednesday, the 1st of October, is when the lights would go out, so to speak. And we'll have to hear more from the White House at that point about how monies would be directed. We've got a great conversation coming up with our political panel. Jeannie Shanzano is not with us today. Rick Davis, Bloomberg Politics contributor, and Ophira Heskel from the Democratic Governors Association straight ahead. Also, we'll compare notes with David Gura, who interviewed Andrew Cuomo today. A fascinating conversation on the New York mayoral race. It's all ahead here on Balance of Power on Bloomberg TV and radio. We must update Wall Street in the meantime, though, and for that we turn to Charlie Pellet, who's with us live from World Headquarters in New York. Charlie, how the markets?
Hey, thank you very much. Lower across the board, Joe Matthew. Do want to begin, however, with a headline that you brought us moments ago. We do have some more details. Bloomberg News reporting that European diplomats have warned the Kremlin that NATO is ready to respond to further violations of its airspace with full force, including by shooting down Russian planes. Russian officials have denied that their planes crossed into Estonian airspace. They also insist that they are not trying to test NATO, saying Russian military flights are guided by international rules. But again, the headline right now on the Bloomberg: Europeans privately tell Russia they are ready to shoot down jets. Keep it locked in to Balance of Power for the latest on this developing story. The Dow, the S&P, NASDAQ all in the red right now, with the S&P down 39. Right now, the S&P is lower by 0.5%. We've got the Dow down 136, a drop there of 0.3%. The NASDAQ Composite Index down 0.6%. 10-year 4.17%, with the 2-year 3.65%. Gold up $3 the ounce, $37.39. That is a gain of 0.1%. Among the commodities, commodities, often sensitive to those headlines that we brought you moments ago. But spot gold right now up under 0.1%. West Texas Intermediate crude trading lower now. WTI down by about 0.1%. And Bitcoin in the red, holding just above $110,000. Bitcoin now down by 3%. So again, recapping, stocks are lower. That headline bears repeating. Europeans privately telling Russia they are ready to shoot down jets. Balance of power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Headlines flying every day here on Balance of Power. Charlie, thank you so much. Charlie will have more on the markets in about 20 minutes here as we talk politics in the nation's capital and what has turned into a down day on Wall Street with a lot of questions about government funding. If you just heard our conversation with Debbie Wasserman Schultz, you can probably understand why. 6 days out from a shutdown, no deal, no meetings are scheduled. And we may have a very different conversation by this time next week. Fascinating conversation a little bit earlier on Bloomberg as David Gura spent some time with Andrew Cuomo generating the headline, Democratic Party Civil War. That's how the former mayor, the former governor, I should say, is describing the mayoral race that's currently underway. A civil war, one that even President Trump has tried to get involved in to try to get somebody to drop out. Because at the moment, this four-way contest favors Zohran Mamdani. And David Gura is with us now from World Headquarters in New York. It's great to see you two sit down, David, and I appreciate you bringing this conversation to us because this race feels frozen in time.
It does, and you look at the polling data, Joe, and so much of it has stayed the same. It really is kind of glacial in how it's moving, and I think that's an element of frustration for Governor Andrew Cuomo, who had a bad performance in the primary, took some time to think about his performance in that primary, and sought to reinvent his campaign. But as I learned over the course of this conversation with him, a lot of the messaging is still the same. He's raising the specter here of what a Mamdani mayoralty would mean for New York City. And as you laid out, there were a number of directions that we could go, and obviously some questions about the policies that he prioritizes, what he hopes to put in place, and how to pay for them. But really, at this point in time, 40 days out from this election, I thought it was important to start with the state of play and how he sees the path forward to victory. And I started off by asking him about the polling.
How do you see the path forward here, given the polling and sort of where things stand? I should note that the polling hasn't changed a tremendous amount in recent weeks.
Yeah, it will change dramatically. What you see in the polls is Mamdani is always at about 40%. That leaves 60%. As you accurately pointed out, you have a multi-candidate field, so 4 people or 3 people are breaking up that 60%. I don't think you're going to wind up ultimately with that larger field. I think the field is going to collapse. I think it's going to come down to me versus Mr. Mamdani. And as I said, Mamdani has 40%. He has his very radical ideas, which are exciting to one group of the population, especially young people, but are polarizing to many other people. And I think it's going to come down to a one-on-one, and then it is a totally different race, David.
Curtis Sliwa, the Republican candidate, says he's not dropping out. The incumbent mayor, Eric Adams, says he's not dropping out. We've passed the ballot deadline. If we were to have a race where it's you against Zohran Mamdani, polls still show him leading you by a substantial amount. What do you see in the electorate that the data aren't showing when it comes to that particular configuration?
Yeah, well, polls are historically wrong, especially this year, especially in New York. On your first point, you can stay in the race. First of all, technically, nobody can get off the ballot, right? The question is, are you viable in the race? And you can have people who are in the race, but the voters just think they're not really competitive. They can't win. I'm not going to waste my vote. And I think that's what happens here. I think it comes down to me and Mamdani. I think when people understand what Mamdani stands for, besides what he has said on TikTok, he's anti-police, disband the police, legalize prostitution, legalize the drug trade, abolish jails. This would be anarchy in New York. Socialism does not work in New York City. It's antithetical. We're the business capital, right? We're pro-business. Business is the engine that drives the train. So none of that has been communicated yet. And when it does, I can tell you the minds will change.
Is there an effort by you and your campaign to try to convince Eric Adams or Curtis Lewa to drop out of this race? Are there conversations that are happening behind the scenes to make what I imagine you see as a compelling case for them to step aside to make this more of a one-on-one race?
No, I'm sure they're making their own decisions. Look, I've been in elections where I have dropped out because I thought it was the right thing to do. They have a decision to make. There is no apparent path to victory for them. They, in essence, would act as a spoiler, and that's a decision they have to make. They have to make it personally, and that's their business. But again, I think it's going to come down to a two-person race no matter what, because that's what the polls are going to say, and that is the choice. I am a Democrat. My father was a Democrat. I worked for Bill Clinton. Zoran is a socialist. They call themselves Democratic Socialists, right? Didn't support Democrats. Said Barack Obama was a liar and evil, and didn't support Kamala Harris against Trump, right? So this is a very different, this is apples and oranges between the two of us.
I want to ask you about some comments that Curtis Lewa made yesterday. I'm sure you heard them. He was campaigning and suggested that you or affiliates of your campaign had reached out to him and offered him money to the tune of $10 million to drop out of this race. And I'm going to quote from what he said during that campaign event. He called these classic Andrew Cuomo tactics. Why don't you strap up Cuomo to a lie detection machine and ask him, and we'll all be blown to kingdom come because he's behind it. I don't have a polygraph machine with me here, but how do you respond to what he's alleging in those comments?
Look, you have to take Sliwa with a grain of salt, right? He is a known con man. He's lied about being victims of crime before. But it's very simple, David. When he said that, someone should have said, who? Who offered you the money? Let him answer the question, because it would happen to be a crime, right? Who offered you money? He never said who, which sort of tells you, right, that it's all malarkey. There was no person who did it.
I want to ask you, last, we've talked about the state of the race, where you hope that it's headed, and if we can, I'd like to look back to 1977, so a ways. You were 19, you were a student at Fordham University, your dad was making a run for mayor, and you were helping out on the campaign. He didn't win the Democratic primary and decided to run on an independent line for mayor. He ended up losing that race by 9 points. They say that history doesn't repeat itself, but it rhymes, and I know that you don't want history to repeat itself here. You'd like to win this race in a way that he wasn't able to back then 50 years ago. I'm not the first to point out this historical parallel, but I imagine you've thought about it. And I wonder how that experience has informed your outlook on this race. There was introspection after the primaries. You didn't do as well as you wanted to do. You decided to make this run. What can you learn about that race that your dad waged, and how does that inform the way that you're running this one?
My father was an extraordinary individual on many levels. Highly principled, frankly atypical for a politician. And he did, quote unquote, the right thing, whatever he thought the right thing was. For me, I believe in the Democratic Party. I believe in what my father stood for, what John F. Kennedy stood for, and Robert F. Kennedy stood for, and Bill Clinton, and what Mondami represents, and this Democratic Socialists of America, DSA, socialists, call them whatever you want, is repugnant to the Democratic Party, I know. And that's what's really going on here. This is a civil war within the Democratic Party, right? Where the extreme left is pulling the Democratic Party. And the moderates are afraid of the extreme left. It's the inverse of the Republican Party when they had the Tea Party, and the Tea Party was pulling the Republican moderates too far to the right because they were afraid of them in a primary. That's what's happening here. It's a battle for the soul of the Democratic Party. And the Democratic Party is not anti-business. It's not anti-police. That's not who we are. We're not about redistributing income as a policy, right? You tax to provide a service. You don't tax to take money from the rich to give it to the poor, right? That's why Donald Trump calls him a communist. So this is not the Democratic Party that I believe I represent and traditionally has served this nation well. He has zero experience in the position, never managed anything, 5 employees, never had a real job. And when you're willing to consider chief executive of New York City, no management experience, ran 5 people, now he's going to run 300,000 employees, $115 billion budget. You wake up any morning, you could have a terrorist attack, you could have another COVID. It just demeans government and demeans public service in a way that I just find abhorrent, and I'm going to do everything I can to stop it.
My conversation there with Andrew Cuomo, the former governor of the state of New York, mounting a campaign here for mayor in New York City. And Joe, what stood out to me a number of times is how he kind of cast himself in the mantle of being a Democrat. He said, I'm a Democrat. My father was a Democrat. I worked for Bill Clinton. You heard there at the end him talking about Democrats saying of Mamdani's platforms, that's not who we are. You have to just go back to the results of that primary, that Democratic primary from a few months ago, that ranked choice primary. Mamdani got 56% of the vote, and Cuomo had 44%. So, yes, he's running on the independent line, but still very much associating himself with the history and the Democratic Party.
Really interesting you brought up his dad. Does part of you think that his father would be impressed by the gains that Zoran Mamdani has made among young progressives?
You know, I think that he might, and far from me to psychoanalyze, what he might have thought, but I do think that it is something that clearly is flummoxing not just Andrew Cuomo, but the other candidates in this race. And you heard Andrew Cuomo there kind of disparaging the TikTok side of this campaign, the success that Zoran Mamdani has had on social media, and yet it is still working and working so effectively for him. And again, going back to what I said before we played that interview, I expected that there would be kind of a marked change in outreach and tone and platform from Governor Cuomo. And to be fair, he is out more. He's on the campaign trail more in and around the city talking to voters. But the way that he has set up the contrast between him and Mamdani remains the same. That is, there's an element of fear less than hope about the direction of the city if Mamdani were to win. And I think that's something that he's continuing to hammer home here in these last 40 days of this campaign.
Really interesting. Always a pleasure to have our friend David Gura with us. Thank you for the great conversation today with the former governor, David, live in New York. As we assemble our panel for their take on this and what it might mean on a grander scale at this moment for the Democratic Party, Bloomberg Politics contributor Rick Davis is here, partner at Stone Court Capital, our Republican strategist, alongside Democratic strategist Ophira Yeheskel, Director of External Affairs at the Democratic Governors Association. Really interesting to hear the conversation and the language that Andrew Cuomo chose to use. Mamdani's candidacy abhorrent, the competition, a battle for the soul of the Democratic Party. Ophira, he said your party is in a civil war. Is New York a microcosm for what's happening nationally?
Absolutely not. I think New York and the mayor's race is about what's happening in New York. And I think New York voters were very clear that they want a leader who's going to be focused on making life more affordable. And what I just heard Andrew Cuomo say was that he doesn't have a lot of forward-looking vision for how he's going to do that. And I know he's complaining about poll numbers, but I think voters, again, were very clear during the primary about what they want. But I also don't know that it would be helpful to be running as somebody who keeps invoking Trump if you're looking to bring the party together and show that you're going to be a fighter for New Yorkers.
At what point do more seniors in the Democratic Party need to get behind Zoran Mamdani for this candidacy to have credibility?
Well, I think this campaign's about what's going on in New York City, and I think Governor Hochul has been a leader on this and has been very clear. She looks forward to working with him in the mayorship on how they can make life more affordable, keep the city safe, bring more people there. And I think a partnership with somebody in that seat is something that Governor Hochul is looking for. And again, I think Democrats are looking for somebody who's going to show that they're focused on these kitchen table issues, but also that when Trump is trying to come after New Yorkers and their freedoms, that they're a voice that's willing to stand up and fight. And I don't know that we're seeing a lot of that from Andrew Cuomo right now.
Interesting. Rick, you've run a lot of campaigns in your career. There's a Suffolk University City View poll shows Mamdani leading Cuomo by 20 percentage points. Do you believe the landscape as the pollsters are calling it?
Yeah, even Cuomo said that he was talking about Mamdani having 40%, which means he probably does have 45%. And I thought what was really interesting in that Suffolk poll is he has a above majority, over 50% of Hispanics, Asians, African Americans. I mean, like, the basis of the New York Democratic Party is their resilience with diversity. And Cuomo's not getting any of that. When you look at his growth, since he became an independent and said, I'm going to be the guy that beats Mamdani, he hasn't really grown at all. And so if you were to believe his pitch, that there's 60% staying out there and I can get, the majority of that, then he better start going. The election's a little over a month away and he has yet to grow a bit. So I really don't understand even the messaging, but let's just leave it at that. Polling looks extremely strong. I think this race is pretty much over, and we'll see where we go from there.
Well, that would be the end of his political career, would it not?
Far be it from me to say what Andrew Cuomo might do next, yeah.
By the way, President Trump has become somewhat invested in this, calling on certain candidates to drop out. Eric Adams, Curtis Sliwa. If there was a head-to-head here, though, the polls still show Mamdani as the next mayor of New York.
Well, I think he, again, has been echoing for what New Yorkers are looking for. He's showing a vision for how he can work on a lot of the issues that people say they want to see Democrats make progress on. And I think we hear time and time again, affordability, affordability, affordability. And I think he's really excited people in New York with that. And they're looking for somebody who's going to drive progress forward on that. And I think, again, he's exciting people, like Rick said, all across the base. I think that's a good thing, and we want to see more of that, obviously.
It's interesting, Trump's involvement in this case, Rick, because he talks about Mamdani so often that you'd think he wants the so-called communist, even though he is a democratic socialist, at least self-labeled, to be there for him as a foil for the next 3.5 years. What do you think Trump's motivations are when it comes to the New York mayoral race? Is he looking at this as a New Yorker or as a national Republican political figure?
Well, I would say, for the record, I have no idea what motivates Donald Trump. That being said, what we do know is that he has a substantial business investment, including his own image of being a successful New York businessman in New York City, right? And this could have an impact on the businesses and the activities that he's been involved in his entire life in New York City. I know there are a lot of real estate developers in New York City, him included probably, who are very fearful of this Mamdani as mayor. That being said, you're right. On the other hand, to be able to see the rising star of the Democratic Party being an avowed socialist, who, as Andrew Cuomo said very articulately on our show just now, wants to redistribute income, it is a very hard thing to stomach if you're a Democrat running for re-election in 2026. So Donald Trump will make good use of that. I would doubt there are very many candidates outside of the city of New York who are going to include any of the Mamdani platform in their re-election campaigns in Congress for 2026.
Is that why Hakeem Jeffries has not endorsed the Democratic nominee?
I mean, I can't speak to Leader Jeffries, but I do think that Zoran Mamdani is running a campaign that, again, is really focused on issues that I think a lot of Democrats are talking about right now, how we can lower costs for the American people. And we don't all have to agree on everything. I think that's the nice thing about being Democrats. It's a big tent. But I think where we're showing a real contrast is, again, that we're laser focused on how we can make life more affordable for people, keep them safe, put money back in their pockets, and not hearing a lot of that from Republicans on the other side.
Well, maybe that endorsement doesn't matter. You look at these numbers. Rick Davis seems to think this thing's already baked. Does the Democratic leader in Congress matter in a New York mayoral race? Granted, he's from New York.
Well, I think these races tend to come down to local issues and, again, local leaders. And I think Zoran has really distinguished himself in the field as somebody who is focused on how he can make life better for New Yorkers. And I think Governor Hochul jumped in and endorsed him because she's looking for a partner she can work with as governor and make sure we're uniting the party on what really matters, how we can lower costs for people, but also stand up against the president and the actions he takes that hurt.
This is fascinating. To Rick's point, it's almost time to vote in New York.
It is
I'm really glad
almost time
that
to
you could
vote.
both weigh in on this. And a great conversation David Gura brought us with Andrew Cuomo. Ophelia Haskell, thank you, as always. Democratic Governors Association, of course, our friend Rick Davis, Bloomberg Politics contributor and Republican strategist partner at Stone Court Capital. Thank you so much for the great conversation. I'm Joe Matthew in Washington. We've got another good one coming up for you. Chris Sununu is going to sit down with us. The former governor of New Hampshire is on to the next chapter of his career, but he's still talking politics, and he's going to be with us coming up next. We want to check Wall Street first. Charlie Pellet has his arms around the markets live at World Headquarters in New York. Charlie?
Hi, thank you very much, Joe Matthew. Lower across the board. Do want to begin with a number of developing stories. Just getting some headlines from the Federal Reserve's Lori Logan saying the time has come to prepare for a new benchmark rate. Logan saying Fed's fund connection is fragile and could break suddenly. The Dallas Fed's Lori Logan speaking in a text ahead of a Richmond Fed event. We'll have a whole lot more with our Michael McKee coming up on the Fed and the economy right here on Balance of Power. The other developing story that we are keeping an eye on, we reported this roughly 20 minutes ago. European diplomats are warning that the Kremlin that NATO is ready to respond to further violations of its airspace with full force, including by shooting down Russian planes. That's according to officials familiar with the exchange. We are looking at losses for the U.S. equity market with the Dow, the S&P, NASDAQ very much in the red right now. S&P trading below 6,600, 65.90 where we stand. We've got the S&P down 47, a decline now of 0.7%. Dow Jones Industrial Average now lower by 200 even, down 0.4%, while the NASDAQ Composite Index is down 182, a drop there of 0.8%. The Mag 7 Index down 1.2%. Dow Transport's also lower, down 0.2%. And the SOX, that is the Philadelphia Stock Exchange Semiconductor Index, down 0.7%. 10-year 4.18% with the 2-year 3.66%. Gold up $3.50 the ounce, $37.39, up by about 0.1%. And West Texas Intermediate crude down 0.1%. WTI 64.89 a barrel. And right now Bitcoin is down 3.6%, 109,464 on Bitcoin. BP says oil demand is going to keep growing for the rest of this decade, rolling back its prior projection that the high point could come as soon as this year. Right now we have got oil stocks, they are trading higher. BP, the ADR is up 0.2%. ExxonMobil is advancing by 1.1%. Chevron up by 1%. This on a day again when West Texas Intermediate crude lower, little change, 64.91 a barrel. Again, recapping, S&P down 48, down 0.7%. Balance of Power continues right now. Back we go to Washington once again. Here's your host, Joe Matthew.
All right, Charlie. Many thanks to Charlie Pellet with us every day here on the fastest show in politics. Thank you for joining us on the Thursday edition of Balance of Power. We've covered a lot of ground this hour already. Ticked our way through a possible government shutdown, the better than expected economic data we saw this morning, the New York mayoral race. And we get to cook it all down with an old voice on the show, a friend of the program who has entered a new chapter in his career. I don't know if I can even call it a political career anymore. The former mayor, Republican mayor.
Mayor? We're doing
Were you
mayor
ever a
now?
mayor?
I've been demoted.
I just had a mayor with me. It just came out of my mouth.
Demoted.
The former governor of the great state of New Hampshire, the live free or die state, Chris Sununu. Great to see you back.
Good to see you.
You're not here as a senator or a congressman. You came back to Washington as the CEO of Airlines for America, which is the big trade group for the industry. You and I have talked a bunch about why you're not already down here seeking national office or something beyond being governor. And you always had a pretty good answer because you didn't think you could get a lot done here. What are you going to get done in this job?
Well, that's the excitement of it. I mean, when folks first said, hey, come to Airlines America, and I said, well, the Trade Association in Washington, you know, where's the connection with being governor? But the fact that you're looking at rebuilding the air traffic control system of America, which is desperately needed. I mean, 30 years of antiquated technology. And for the first time ever, you have an administration that is making it top priority. You have Secretary Duffy at Transportation, Brian, who's now running the FAA, this great guy, used to be the CEO of Republic Airlines. People that are really have hands-on, on-the-ground experience. I thought, this could be done. This could actually be a win for not just Washington, but for the country in terms of safety, a strategic asset. And it's the airlines. And you have, I mean, I'm not just saying this. The CEOs of the airline industry right now are amazing. These are some of the best CEOs in the country. They're mission focused. They deal with all these strains, international and domestic, and they all want the same thing. They're all rowing in that same direction to make sure that this system gets revitalized for the safety of the country.
It's a national security asset, to your point earlier. Governor, I have a couple of questions for you about this, and I want to get into the toy department with you a little bit, because you must have an amazing shopping list on how exactly we're going to build all of this out. But here we are again on the verge of a possible government shutdown. It does appear that there's a carve-out for the air traffic control system, and we would expect that. But would it mean other disruptions or problems for the industry?
It'll be a strain. So a couple things. Number one, the airlines still stay in the air, right? TSA, that does all the security. The FAA, which basically makes sure that the planes are landing safely and on time, those are all deemed essential workers. Those folks come to work. So the planes will be there. Now, will the system be strained as it is often with these shutdowns? Absolutely. And that's where we ask for people just to take your time, be a little more patient, give yourself a little extra time. But the planes will get there.
Is it manpower? Do you not everybody gets to work, or they're all working without being paid?
They're all working, but they're working without pay.
Okay.
They're working without pay. And so that's a lot to ask.
That's TSA, air traffic controllers, everybody you encounter at the airport.
Hundreds of thousands of workers that make sure that they all are asked to come to work day after day. And so that's why a short shutdown can be managed pretty well. The longer it goes, as you would expect, more days, more weeks, whatever it potentially might be, that just really exponentially increases the strain on the system. The system doesn't shut down, but it will get strained. And so that's where, we're fighting hard to not have the shutdown. We're fighting hard for folks up on the hill here to understand what those repercussions are, because there could be a potential carve-out for the TSA, but what is likely going to happen is all these new things that are just happening, $12.5 billion allocated, it all comes to a screeching halt. The new simulators they want to buy for FAA, because we need more manpower in those control towers. We want to train people more. We want to get those certifications going. All that comes to a screeching halt. Some of the new technologies that are going to be implemented, everyone has to basically take a pause until the system is turned back on again. So, I've seen Washington, we've all seen Washington fail time and time again. But when you're talking air traffic control reform, this thing is moving. It's really exciting. Senator Cruz has been an absolute leader. Senator Susan Collins of Maine, a leader. Congressman Graves just absolutely gets it. Everyone's pushing hard. No one's accepting failure, what makes it exciting and what makes the potential shutdown really scary.
Well, it is scary when you frame it like that. Let's talk about resources. You don't have enough money to do this all now, right? Congress is going to have a couple of layers, I presume, of funding approvals. You have the president behind you on this. We did talk to Senator Cruz about what would be involved here. This would be an unprecedented undertaking to essentially rebuild the American air traffic control system. The president talks about copper going into fiber, going into IP. It's a Frankenstein-looking system now. How long would it take to rebuild?
Great question. So you hit it right on the head. It's a bit of a Frankenstein patchwork system with floppy disks and copper landlines for communication. And that's really what it is more than anything. It's a communication system between the planes to ground, ground to ground, more than anything. And so when you're talking about the epitome of safety with folks in the air, that's where it gets scary. And obviously, the tragedy that happened last January was incredibly severe. That everyone in this town and across the country stood up and said, this should have been done literally 30 years ago. Let's go. Let's get it together. Now, how long will it take? It'll take a few years. Congress has allocated $12.5 billion. That's a good chunk of change. But when you're talking about the most technologically advanced overhaul system that this country's ever seen, it's going to take a lot more than that. But we've kind of outlined what are the quick wins. Let's get the copper, old-fashioned copper, out of the ground and put fiber in the ground so these towers can talk to each other. Let's upgrade like I said, the simulators, the opportunities to bring more people, younger people, new workers into the FAA, into those control towers, so you have the redundancy. Those are easy and short wins that the Secretary understands, that the FAA understands, and that we think are going to be undertaken pretty quickly.
So you get that done. That's, I guess, the low-hanging fruit. Do you essentially then end up building a tandem system? It's like building the other Cape Cod Bridge, and then eventually you just move everybody over to the new one, or does it actually have to be integrated into the existing
system? It would be great to build a whole new system and turn the old one off and the new one. You can't do that. And it'd be great to do it nationally all at once. You just can't do that. So what I think the way they're going to go about it, they're going to bring what they call an integrator, kind of an overseer, if you will, of the project. Sometimes that doesn't go well, right? So the fact is, Secretary Duffy knows there's got to be accountability in that. There's got to be standards. To your point, there's got to be a schedule that has to be kept because the president's behind it, and he's behind it very loudly. So anyone that comes on board and isn't achieving those goals, they're going to be held to a very loud and public standard. Like this is not Washington as usual, which is awesome. This is, you know, when I only came down here about not even a month ago, and I told everybody, I said, look, Washington is moving faster than ever because of President Trump and this administration. So if you're going to keep moving at Washington pace, it ain't going to work. We got to not just keep up, but we got to, you know, sprint just to keep pace with these guys. But the team is there to do it, which is really exciting. So what's going to happen is they're going to look at it, I think, regionally and kind of 3 or 4 major pieces of the system that get overhauled and patchworked in and replaced one at a time.
Boy, fascinating.
Yeah,
I don't know if you
complex.
have a price tag on this, but this is a Congress that can't even keep the lights on, it looks like, by the time we get to next Wednesday. Do you trust lawmakers with coming up with the money, or do you have other sources of funding?
So I believe that the additional sources of funding will be there if and when we achieve those results. I see. What I've said is get these 3 or 4 wins. Show Congress it's a win. Show some progress, show that it's working. And when you do that, as a governor, I can tell you, we did it in New Hampshire, the legislature says, oh, okay, it's working. There's accountability, there's standards. This isn't just a black hole of money. We're getting something, a return on our investment. The system's getting safer. Our Americans are getting, whether there's better customer service on the front, back end, or sometimes the side you don't see, which is just making sure that plane lands safely on time, gets to your gate, and folks have confidence in the system.
Really interesting.
When all those pieces come together, I have no doubt that Congress will take further actions and, again, keep that investment coming to make sure that this system is built out to fruition, not just piecemeal, not just we tried something, it didn't work. Failure really isn't an option given the level of safety that we're talking.
You sound like you've been in this business your whole life.
I love it. I don't know. It's been 2 weeks. I'm having a ball. I really am. I love the
weeks.
people I work with. I love the projects. And there's other challenges, too. It's not just air traffic control, right? There's all these other challenges that the airlines deal with on a day-to-day basis. But here in Washington, whether it's some other technology issues, some policy, you know, they're going after deregulation hard. That's no secret around here, which is awesome. The previous administration was really tough. They really overregulated.
What does deregulation mean for the airline business?
It means getting rid of all the, look, there was basically so much regulation put on in the last 4 years with the previous administration where basically they had to do drastically less flights. They had to find ways to fit more people on planes, crowd them in, less flights per day. That was the mandate. Just, you know, do less flights. We want more flights.
Because
we want more options for Americans.
Because of the number of hours pilots can fly, or was it a number of factors?
I think there were some environmental issues, and those are very important issues. The industry has taken a lead on sustainable aviation fuel. They're putting hundreds of millions of dollars of their own money into new technologies on sustainable, clean energy, clean aviation fuel, which is awesome. We're not just saying, hey, government, you do it. The industry's taken the lead, so it's very exciting. But the previous administration was pretty tough. But now that it's not that the regulations are just off, they're more streamlined to make sure it's a better customer service and a safer system as a whole.
Your industry is not only a national security asset, it's also an economic indicator. Remember the old as goes GM, so goes the nation.
That's right.
As goes the airline business, right? You have a better sense on how many seats you're filling, on how many planes you need to have in the air, of where this economy is going. And there's a big conversation in Washington right now. Are we slowing down? There's some weakness in the job market. There's a lot of noise with tariffs. Canadians don't want to come to New Hampshire anymore. When you add all of this up,
well, maybe they don't want to come to Massachusetts, but New Hampshire, they're loving.
No, it's Vermont,
they're loving
actually,
New Hampshire.
I bet it's Vermont. But you know what I'm saying. Are we on a trajectory of growth right now, or are we at the beginning of a slowdown?
It's growth. There's no question. So a couple really interesting metrics that I didn't even know. Since over the last 5 or 6 years, the average price of an airline ticket in this country is down.
No kidding.
It's not just up a little bit where everything, you know, inflation's taken everything 25% up. All the competition that has happened has, you know, forced more options for a consumer. You can buy a much cheaper ticket if you want. You can decide not to take baggage or take baggage. You can design your own experience on the plane at a much cheaper price.
So you're less at the whim of the economy? Is that your point?
No, it's because the competition is so strong. It's a great argument that why free markets work. And when they compete, the prices have come down. Where the opportunity really is on that international market, I think. What the president has done with most of the general agreements is make sure that it's a zero-for-zero tariff issue on the airlines, and specifically on the manufacturers and the price and the parts. So at least with the European Union, that was a big one, a big win for them. I mean, we got to codify it, as all these tariff deals have to be ultimately codified. But that was a huge win there in terms of making sure that the tariff issue isn't going to somehow inflate prices or cause some sort of strain. Like I said, I was just shocked to learn that competition. Do you know anything else in America that has come down in price in 5 years? I literally can't think of anything.
And they still seem kind of expensive, I have to admit, which is why I'm amazed to hear that.
But again, but they're not. I mean, there's this idea that, there's the prices are screaming high. I think because they allow you to develop your own experience. So if you want to take an extra bag or whatever, you pay a little more here. But that base price of a ticket has gone down about 2 or 3% over the last few years, which means more families can afford, whether it's for vacationing or traveling. You know, we didn't touch upon something here. What's coming up? The holidays. So when you talk about government shutdown and putting a strain on the system, I don't know about you. What do you do for Thanksgiving? Do you stay at home? Do you Christmas? Do you travel? What do you do?
I try to go home, yeah.
Yeah, try to go home.
But I'm usually driving because and then I end up taking 10 hours to get to New England.
So many millions of Americans.
Can you get me home this year?
Can I get you home this year?
To New England.
Well, everyone's loving the airline, so they're flying. If we stay open, if there's no strain shutdown, I'll do what I can to get you home.
When do we get a supersonic, when do we get a Concorde for the future? When's the supersonic jet going to be part of this fleet that you're now helping to run?
I don't know, but I'm going to make that the next one.
Let me get air traffic control
taken care of, and then we'll work on the supersonic.
But technology is a big part of your industry here, obviously, and the CEOs that you mentioned are using it to improve things a lot. Forget the planes for a minute. When does AI become a factor, or is it already in the call centers at the airlines?
AI is already in place. I mean, AI is in place almost everywhere. So whether it's call centers, whether it's helping with dynamic pricing, whether it's making sure that you can create, like I said, create your own package and model, whether you want a nonstop flight, whether you want to stop in Des Moines, whether you want to take an extra bag, whether you want just to sit in the back, sit in the front, have extra legroom, whatever it is, you're kind of designing your own system. And AI does that, helps with a lot of that dynamic pricing, which has kept the competition and the prices low. When we're talking about air traffic control, of course AI is going to come into play. The robots aren't landing your planes. Let's not make any mistake about that.
No.
But
they're calling balls and strikes.
But having a backup system that says, you know what, the weather in Los Angeles, and we have a flight leaving Des Moines, but that could affect this connecting flight out of Miami, and in real time crunch all that data to say, hey, the incoming flight from Chicago to Boston, let's get that out of the gate a little faster.
Are you getting the data from the government that you need on that front?
The airlines work very closely. And it's not just with the government. I mean, they've made such huge investments in their own AI systems.
They've got their own data.
Yeah, their own data, their own AI systems.
When it comes to weather specifically.
And when the FAA gets it, you know, when the real bulk of the rebuild of the air traffic control system comes underway, obviously, again, AI won't necessarily be on the front end, but the back end as a kind of a redundancy, a back check system in a variety of different ways, just to make sure that folks are getting from A to B faster, safer, and with confidence.
You get to fly free now?
Do I fly for? Yeah, do I fly for free?
I didn't think you'd answer it.
I haven't flown. I just got the job 2 weeks ago.
Oh man, let's go down to the airport. Let's go to Nashville. We'll go to Vegas together.
I'll find out if I fly for free, and I will let you know when I come back in a week.
All right, fantastic. Please do come back. It's great to see you. I'm happy that
you're
now
I'm right up the road.
Now. We're neighbors.
Yeah.
This is
I used to be a cynic about this town, but now I'm like
were.
Shrek. I love the swamp. I love it. This is my swamp now, and I'm loving it here.
I love that as well. Chris Sununu, the former governor of New Hampshire. What a great opportunity to catch up on things without the pressure of elected office. He's the new CEO of Airlines for America, of course, former Republican governor. You never know who you're going to bump into around here. We're going to have to make this a regular thing. That was an interesting hour. I'm glad you got through it with us here on Bloomberg TV and radio. I'll meet you back here for the late edition of Balance of Power alongside Kate Davidson. That is at 5 p.m. Eastern Time. Big thanks to our panel, Rick Davis and Ophira Yeheskel, for spending some time with us. Bloomberg Business Week Daily coming up next here, and I'll see you back here, as I mentioned, a little bit later on. I'm Joe Matthew in Washington. This is Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. Live across Bloomberg platforms. This is Bloomberg Business Week Daily for, yes, it is Friday's Eve, Thursday, September 25th, 2025. Carol Master, Tim Stanovic. And we are seeing stocks definitely off their best levels. They're in the red across the board. Those Mag 7 names really weighing on the trade today.
Yeah, Charlie Pellet's going to have the details, but seeing red across the screen, as you mentioned, Carol, the NASDAQ Composite down a full percentage point right now. The S&P 500 down 0.9%. The Dow down 0.6%. Tesla taking a real beating today as a result of what we heard from Europe and car sales happening in Europe. Tesla, a very small portion, less than 2% of car sales there.
You know who isn't taking a beating is Intel. This stock is one of your top performers in the S&P and the NASDAQ 100. It's up for a third day. We're going to get into why, oh, why might Apple actually want to invest in the company. We'll get to that in just a moment.
Plus, a view from the C-suite on that and more with Cristiano Amon, the CEO and president of Qualcomm. He's going to be joining us in just a few minutes.
We've got the CFO of a firm, Rob O'Hare, is going to be in the house. We'll get a view of consumers, what they are up to, and then leveraging AI to transform women's health. That's all coming your way in just a moment.
First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Lower across the board right now on the equity market. Do want to begin with a developing story involving TikTok. We had the headline moments ago here on the Bloomberg Professional Service. Oracle, Silver Lake, and MGX will be the main investors in TikTok. That's according to CNBC citing sources. The three will have a combined 45% ownership of TikTok. Again, developing story right now, headline on the Bloomberg. Stocks in the red right now. Stocks are falling as valuation worries overshadowing data this morning, showing that the economy is holding up. Those numbers, the economic numbers, not having much of an impact on Fed bets, but bond yields kept rising after a weak Treasury sale. We've got the S&P down 59 at 65.78, drop there of 0.9%. Dow Industrials now down 290, a decline of 0.6%. Tech selling off. NASDAQ down 1%. NASDAQ 100 index also down 1%. But our Mag 7 index, as Carol mentioned, down now by just about 1.5%. The 10-year at 4.17% with the 2-year 3.65%. Gold up $9 the ounce, up by about 0.2%. And West Texas Intermediate crude oil WTI 64.78 a barrel, down now by 0.3%. Amazon has agreed to pay $2.5 billion in penalties and refunds and change its process for how to cancel its Prime subscriptions to settle a lawsuit by the Federal Trade Commission. Amazon down by 1.1%. And Starbucks plans to close stores and eliminate 900 jobs. Again, recapping, stocks lower, S&P down 62, drop there of 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So shares of Apple, little changed. In fact, they're just up about 0.3% as we speak. This nearly 24 hours after the Bloomberg exclusive that Intel has approached Apple about securing an investment in the companies, according to people familiar with the matter. It's all part of efforts to really bolster a business that's now partially owned by the U.S. government. So Apple, little change today. Not the case, though, for Intel, rallying another almost 6% in today's session. And we saw the stock rally yesterday as that news hit late in the Wednesday trade.
Okay, so the story got many, we think it's safe to say, including us, asking why, oh, why would Apple make an investment such as this? Remember, it's just reporting that Intel has approached Apple about this at this point. That's what we have. So we wanted to bring in Mark Gurman because we're really curious about what he's hearing. He's Bloomberg News managing editor for Global Consumer Tech. He is the Apple guy. He covers this company so closely. He joins us from the Bloomberg Los Angeles Bureau. Mark, what are you hearing about this?
From a technology perspective, you guys are right. There is no reason for Apple to want to invest in Intel. But from a play nice with the Trump administration and its do more manufacturing in America standpoint and investments there, it's a great idea. Apple obviously wants to be on the good side of the Trump administration and the White House. There are several things that they want from Trump. They want Trump to help them push back against the EU's Digital Markets Act. They want Trump to help them them reduce their tariff payments, right? So they need all sorts of things from him, not to mention the DOJ lawsuit that's supposed to go to trial in 2027. They want his help getting that thrown out. And so they can make Trump look good by investing in Intel. Obviously, the U.S. government now owns a tenth of the chip maker. Obviously, the U.S. government wants to show its constituents that it has Tim Cook and Apple, the poster child of American innovation, they think, playing nicely with them and partnering with them. So from that perspective, it's just about looking good. From a technology perspective, Apple very likely to never use chips from Intel again. The chip has sailed. The ship has sailed, I should say there. The chip has sailed too, if I'm being honest. They're all in on TSMC-based production. They're all in on processors based on that ARM architecture, not the x86 architecture that Intel uses. Obviously, Apple dropped Intel from its computers half a decade ago. But there are some less advanced chips, low-end nodes, as they call them, not the advanced processors that you think of as SoCs or chips in iPhones and Macs today, that Intel could theoretically, produce for Apple. Apple already sources billions and billions of types of chips and components inside devices that no one's ever heard of or cares about that Intel could theoretically manufacture at some of their facilities for them. There are other things like chip packaging that is not a high-tech process that they could work with Apple on. So there are angles there, but for all intents and purposes, if they do this, it would be lip service to make things even nicer between Apple and the U.S. government rather than improve technology for the company.
We'll call it CEO presidential diplomacy, if you will. But having said that, Mark, at the same time, doesn't Tim Cook kind of have a fiduciary responsibility to do anything in this environment where if you get negative attention from the White House, it can be problematic for your company and certainly for your share price? So does it also kind of make sense to play nice in this environment? And probably CEOs do it to different degrees with all presidents.
You have to thread the needle if you're Tim Cook, right? On the Trump administration, Donald Trump is obviously very divisive, right? I think that is the most obvious thing that anyone has said on your radio show in a year. And Tim Cook has to do what he can do from a fiduciary standpoint to make sure that they're paying less tariffs, to make sure Apple is safe as a business. But there's also the element of employees who are not pro-Trump and customers who are not pro-Trump, and the legions of people who find it, I would say, gross or disgusting that Tim Cook is as close to Donald Trump as he appears to be publicly. I think that I know, and I think that a lot of people know, that a lot of this is just diplomacy or a game to some extent, trying to make the company as effective as possible, trying to save as much money as possible, and just doing his fiduciary duties as a CEO. But there are a lot of people who don't recognize that. And so this goes well beyond the potential Intel investment, but it's certainly a balancing act that Tim Cook has been having to try to strike for a while now.
Ryan Gould, who was part of the deals team, I know you worked on this story too yesterday, Mark. He was part of the deals team that worked on this story as well. He came on our program and he referenced Tim Cook at the White House just a few months ago and the multi-$100 billion commitment to invest in the U.S. that Tim Cook made there. How does this fit into that number in the hundreds of billions of dollars? I think up to $600 billion at this point. Or how would it? How would it? Not how does it? How would it?
I mean, within that $600 billion that they've earmarked, a lot of those are chip-making companies. And so any investment they would make in Intel would just go into that pool. The most interesting thing about that $600 billion number is that it's an eye-watering number because it is eye-watering, right? It's a lot of it is reality, and some of it are probably things like stock buybacks and dividends and what have you to people in the U.S. and buying back shares in a U.S.-based company, right? So it's not like they're writing $600 billion worth of checks to different chip makers and investments and such. So it is pretty interesting, and I think it goes back to what Carol said about this being CEO and presidential diplomacy. And Apple did some of this with prior administrations. There were similar announcements related to American manufacturing and American innovation with President Biden. Steve Jobs was close to some extent with President Obama. They overlapped in their tenures there. So certainly this is not abnormal. I just think this is getting more attention because of the divisiveness to some folks about the Trump administration.
So I know your focus is on Apple, but from an Intel perspective, does this money, and shares of Intel this year have absolutely surged up 64.5%. A lot of that has to do with the investment that the U.S. government made, or the ownership of the U.S. government, of course, the NVIDIA investment too, the news there. But I'm wondering if this changes fundamentally Intel at all, and if Apple were to make this investment, if
in some cases, an Apple store, you go to an Apple store in a mall or in a particular city, and they get really big tax breaks in some cases to put their store in that mall. They get discounts for putting their store in the mall because the mall sees it as a driver to bring people into the mall and get them to shop at the particular store, right? And so my point being that a partnership with Apple could make Intel look really strong and good and as an innovator, and potentially get them customers, right, from other companies as well. And so the Apple brand is so strong that it could have a positive, layering effect for Intel. And I think that is the play there in addition to the funding.
All right. I have a silly question for you, but, here we go. Is it possible Intel could have called up Apple, Mark, and they're like, yeah, we don't want to talk to you? I mean, would they do that? Or is there kind of a Silicon Valley, hey, yeah, we are all always talking to each other?
They're always talking to each other. I mean, they show that they have an enemy-like relationship with Meta, maybe with Google on one hand and Amazon, but all these CEOs and all these executives of all these tech companies are interlinked socially, business-wise. Their spouses know each other. Their kids go to the same schools with each other. They're all linked together, right? There's no getting away from that. So like on the surface, they may show these bad relationships, but there's no declining a call from another CEO at another company. They all know each other. They all text.
All right. Okay. That makes sense. Hey, listen, so on that, I'm just thinking about the H-1B visas and what President Trump has talked about in regards to this. And we've been talking a lot about the impact on the tech sector. I am curious what you are hearing. What's Apple's exposure on this?
Yeah, this is terrible. Honestly, this is terrible. It's not like, so let me take a step back here. The reality is that other countries are producing great talent, countries like India. And I think it's a good thing for America to have the best talent, no matter where they come from. And I think Apple agrees with that specifically. And, the other thing to note is that the Indian community at Apple, from what I've heard, is up in arms about this. There are a lot of people on H-1Bs, a lot of people trying to get green cards. Apple spends a lot of money to help that make that happen. And the engineering talent coming from places like India is just, supreme. There are many executives at Apple. The COO is from India. The COO's deputy, his eventual successor, is from India. Some of their top software engineering executives are from India. So they have a lot of talent from outside the US. And Apple is only Apple to some extent because of the talent they have been able to bring in from across the globe. So for Apple, this is a terrible thing. I would say for American innovation, right? American innovation is not only made by Americans, it's made by people who chose to move to America from other countries for a better opportunity and to have an impact. So I don't think this is a good thing at all for Apple, Amazon, Google, Meta, or any of the tech companies, or quite frankly, the country.
And we do have a story in the Bloomberg. I just want to point out that a bipartisan Senate duo is pressing Amazon, Microsoft, other companies on their use of H-1B visas to hire foreign workers with specialized skills. So all of that going on in the background.
Hey, we're speaking with Mark Gurman. He's Bloomberg News managing editor for Global Consumer Tech. He joins us from Los Angeles. Mark, more on the H-1B story. You know, we saw so many tech CEOs just a couple of weeks ago at the White House at that dinner. I was surprised to see a decision such as this from the president, given that it would affect the companies that these individuals run so negatively. Why don't you think we've heard a collective message from the tech community on the H-1B visa issue yet?
Oh, I mean, Tim, you know the answer to that. It's because they're scared of Donald Trump and they don't want to push back on this H-1B visa issue only for Trump to hit back at them with tariffs or starting to charge Apple more tariffs than they're already paying today, right? I think they are worried if they fight on this issue, they'll come back and be hit harder on other issues, maybe issues that they consider more fundamental to their lobbying efforts. You're not going to see Apple push back publicly against this H-1B issue. They would have done so already. Instead, they're going to work with lobbyists and other groups behind the scenes to have them do their bidding for them, but you're not going to see them push back publicly. That's not going to happen.
All right, we're going to leave it there. Hey, I'm so glad, we are so glad, Mark, that you could lay that out for us, both on the H-1B visas, but also Apple and an Intel possible link up. Mark Gurman, he is Bloomberg News managing editor for Global Consumer Technology. We're going to stay on the tech world because we did have some headlines involving TikTok.
Yeah, Oracle, Silver Lake, and MGX will be the main investors in TikTok. This according to CNBC's David Faber. He reported this on air. He cited people familiar with the matter. Oracle, Silver Lake, and MGX will have a combined 45% ownership of TikTok. That's according to Faber. Looking at shares of Oracle right now, Carol, down about 5.8%.
All right, we're talking TikTok. We just talked about a possible Intel, Apple kind of tie up there with our Mark Gurman. We want to stay again on really the tech world and even that tie up or possible tie up. We've got the head of a company that's one of the world's biggest sellers of the chips at the heart of mobile phones, including Apple, which is its second biggest customer, at least according to Bloomberg data. Great to have with us Cristiano Amon. He is CEO and president of Qualcomm. He joins us from the Snapdragon Summit in Maui, Hawaii, along with our BTech co-host, Ed Ludlow, which you can find on BTV every day at 11 a.m. Wall Street time. Ed out there in our San Francisco bureau. Gentlemen, great to have you both here on Bloomberg Business Week Daily. Cristiano, I want to start with you. I got to ask you, Apple is, you know, according to our data, your second biggest customer. What would a possible Apple-Intel tie-up mean to you guys?
Look, there's no relationship, and actually it has been widely reported for years now that over the next few years, I think Apple will stop, getting chips from Qualcomm, and the company has really moved on not only what we're doing within the Android ecosystem, but we're now in PCs, in automotive, in industrial, in robots. We're even into the data center. So Qualcomm. It's a different company right now. We continue to execute on this strategy, and there's really no relationship.
But in terms of a tie-up, do you think that's even something likely, that there is some deeper relationship between those two companies?
The way I think about it, and like I don't know details, but I can only see two possible angles. One possible angle is Intel continue to invest to become a foundry. In that case, as we are a fabless company, we welcome more foundries. Today, we manufacture our chips with TSMC, with Samsung, and if Intel has the capability to become a competitive foundry in America, we're very happy, and we will look at them as a manufacturer. As far from a product standpoint, I can't really see a connection because Apple have their own processors.
And we want to get on to other stuff. One more question, though. How are you feeling about the government investing in Intel? I don't know, would it be fair for other companies, even a Qualcomm, to say, wait, what about us?
Look, my understanding of this is there is an overarching strategic topic, which is manufacturing of semiconductors. And I think we know, and it's been widely reported, that Intel had a struggle to compete with companies like TSMC and Samsung. So anything that is driven towards enhancing the industry manufacturing capability, especially in the United States or even other places, so we have a more geographically diversified manufacturing, that's actually good news. We're looking at the big picture.
Cristiano, like the thing definitively that's changed is the landscape in both PC and mobile. But I really want to start on the PC bit. I look at what's come out of Maui, generation to generation from a year ago. And what's really clear is you want to push even deeper into Windows-based PC. Could you just explain like how the generational updates on the tech help you do that and why it's important?
Yes, and I wish you all here with us. This is actually a not bad place.
We
at
wish
all.
we were there also.
Yes, this has been day 3 of a lot of announcements, all the chip announcements. And one thing that we're actually very proud. I think, as I said, earlier to Carol, I think the company is diversifying. We're building products for many different industries, and PCs is one of the growth vectors of the company. So we announced our 2nd generation PC. We just entered this market, and in our 2nd generation, I think people are seeing one of the biggest leaps in performance from generation to generation. We have 40% improvement in the CPU, 80% improvement in the GPU, and we actually have the very first processor in a thin and light laptop running at 5 gigahertz of clock frequency. But the real news is the amount of AI performance. I think the transition of phones and PCs to AI is happening, and those are what those chips are designed to do.
Cristiano, I don't want to make statements because like I'm the journalist, and as you know, I love to ask you questions, but I go very deep on what's happening. And so like there's an acceptance that this is edge technology that's deployed in the real world. But I kind of want to hold you to how it's going. In February, you basically said that in really specific category, Windows PC priced $800 and above, I think you said you had 10% market share in that. And I'm looking at the specifics of what came out of Maui in the last 3 days. Do you have an update on the ownership you have in that market, or what this latest gen of chipsets will do to push you deeper into it?
Yes, this is a great question. We are, as we're new in this market, and it has been, it's actually, we can leverage a lot of technology. It's actually accretive, I think, to Qualcomm. And we're tracking to what we said. We actually only launched this, you see PCs with our chips in the United States in the top 5 European markets, and we're tracking about 9% right now. I think our projection was by 2029 to get to about 12%, very reasonable. But what is exciting right now, and that's, I think, in your question, is the edge AI transition is happening. Actually, the foundational models now are being designed so they have cloud and edge working side by side. And that is actually creating an opportunity for us to accelerate. And it is reflected in a number of designs. We actually, a while ago, just a couple quarters ago, we talked about having 100 designs across all the major PC OEMs, HP, Dell, Lenovo, Acer, ASUS, Samsung. Now that number is significantly higher, and we're seeing the excitement.
To Carol's question, I think it's fair, like the NVIDIA Intel product collaboration puts this emphasis back on x86 against ARM-based chips. How are you tracking the penetration of both in the market? If you're going to react to that NVIDIA and Intel deal and how it changes the market, you must also be tracking it in that context, how you are pushing into that territory.
Yes, when you actually, and I'm gonna quote you when you just said, when you actually dig deeper on it, and it was interesting actually when that announcement happened. It was interesting. We were slightly up. It was kind of neutral to positive to Qualcomm, and we saw, I think, the market stock reaction on ARM, on AMD, and then Intel was up. And the way we actually look at this, we're incredibly excited. Because what it basically means is, I think it's Intel is sending a message that their integrated GPU and their AI products are, they're not going to, likely not to continue with that, because that's what the market is saying. It's going to be NVIDIA. So then as NVIDIA comes in to the integrated GPU market, combining their GPU with Intel x86, he started to bring AI into the PC market, and that is the moment we've been waiting for. And I think that's what we do. And I think the Qualcomm DNA is anything that is battery power, is high performance, low battery life, and a lot of AI. That's where we want the market to be.
So Cristiano, sell us on this moment, because I think a lot of people's experience with AI so far has been LLMs, and LLMs that you can use on your phone, LLMs that you can use in a browser. So if that's the way they are experiencing AI, why will they think that they need to buy a computer that is specialized for AI?
Okay, so this is a little different, and I wish I have time to walk you through all the details. Maybe that's an invitation for you all to come here, I think, next year.
We'll be there.
Okay,
And,
we're done. We'll come.
Yes, but I'll give you some very simple data points. The first thing is we used to learn how to interact. We had to learn how to interact with your phone, interact with PC. But now with AI, whether it's what we say, what we write, what we see, the computer knows how to interact with us. So the user interface is changing, and the user interface actually runs where the human is. It runs on your phone. It runs on your PC. So we're starting to see right now, and you see Microsoft doing that with the agents. You see that Google doing that with the agents. Then now the computer has this agent ready to interact with you as your assistant as you do things. That's the first thing that is happening. The second thing that is happening is there is incredible amount of processing power that is available. And as companies starting to see AI getting scale, because now it's about not just creating AI in the data center, I need to deploy it, I need to make money. They realize that you can leverage all of this computer. It's transparent to you. It's the wrong thing to talk about AI is cloud or is edge. It doesn't work like that. Just think, for example, if you're Office 365 customer, you have cloud and you have a client. And AI is going to be deployed like that. And companies are saying, if I bring this to the edge, my cost goes down, my latency improves, and I have privacy. And that's what we demonstrated. Many ISVs starting to deploy AI on PCs and in phones.
All right, going to leave it there. Glad we could get that time with you and really cover a lot of ground. Cristiano, thank you so much. Enjoy Maui. We certainly wish we were there. It's a pretty great day here in New York City. Cristiano Amon, he is CEO and president of Qualcomm from the Snapdragon Summit in Hawaii, along with BTech co-host Ed Ludlow in San Francisco. Check him out every day with Caroline Hyde there on Bloomberg Television at 11 a.m. Wall Street time. And be sure to check out Ed's reporting out on this story.
Hey, we are just a little over 90 minutes from the close of U.S. equity trading. Stocks, well, in the red, but off their worst levels of the session. Charlie Pellet watching this closely. Let's get a business flash with him. Hey, Charlie.
Thank you very much. Tim Stenovic sums it up nicely. After the bell, of course, going to be hearing from Costco, just talking with the folks from Qualcomm. Qualcomm shares down now by 2.4%. The Dow, the S&P, NASDAQ, all in the red right now. Tech's being hit especially hard. S&P down 43 now. It's 65.95, down 0.6%. And trading below the big round number of 6,600. We've got the Dow down 208 right now. Drop there of 0.4%, while the NASDAQ Composite Index down 0.7. NASDAQ 100 Index also down 0.7%. And our Mag 7 Index, though, that's a lot of tech stocks tumbling today, with the Mag 7 down by 1.2%. Your 10-year now at 4.17%. The 2-year 3.66%. Gold up 0.3%. 37.47 the ounce. And West Texas Intermediate crude flat on the day, $65 a barrel. CarMax lower after the company reported a surprise drop in comparable sales as buyers had rushed to buy vehicles in the previous quarter ahead of a tariff on imported cars. We've got CarMax shares today. They are trading lower. CarMax down now by 19.2%, plunging there. Also Carvana, it is up 0.3% after earlier losses, and Penske Automotive Group down by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, buy now, pay later is everywhere, every day, as it feels like. You've got companies like Affirm, Afterpay, and Klarna. They've all brought installment payments into everyday life, while big banks and tech firms are also now racing, Tim, into the space.
We talked about the growth and growing competition recently with the founder and CEO of Affirm, Max Max Levchin. He joined us just a couple of weeks ago. Shares of Affirm, by the way, they're on a tear, up 30% year to date. The company provides a window into the consumer and health of our financial system. So when we were given the opportunity to talk with another key member of the C-suite, we certainly jumped on that. We got Rob O'Hare with us. He's CFO of Affirm. He was featured in a recent edition of the Bloomberg CFO Briefing newsletter. He joins us from San Francisco. By the way, sign up for that newsletter, bloomberg.com/CFO-briefing. Also with us is Nina Trentman. She is Bloomberg News Senior Editor. She writes the Bloomberg CFO Briefing newsletter. She's here in the studio. Rob, that's exactly where I want to start with you. How the consumer is doing. It's a question we posed to Max a few weeks ago, but you guys have real-time data. You're seeing at every moment how people not just are spending money, but how they are with paying it back. How's the consumer in the U.S. doing?
Well, first of all, thanks for having me. In terms of the consumer data that we see a consumer that's strong and healthy. You know, we're originating, over $100 million of loans every day, and right now, all of the repayment data that we see in our daily loan cohorts, it's all really strong, and it's exactly in line with our expectations. So that tells us that the consumer's healthy, and that tells us that we're setting the right underwriting posture in our business.
Rob, how about delinquencies in the business? Are those ticking up? What are you seeing there in the data?
No, I mean, we manage credit. That really is job one internally for us, and we stare at delinquency data. That's part of the repayment data that I was alluding to, and we're seeing outcomes that are exactly in line with what we would expect.
Just wondering, with the Fed cutting interest rates last week and indicating that there might be more cuts to come, how important do you think that is for your consumers, and also how important is it for your business?
It may be helpful for consumers, right? It may reduce the consumer's total costs of credit, which I think is beneficial for them. For us, though, we actually like the rate environment that we're in today. We're very profitable as a business. When we look at loans on a unit level, we're sort of at or above our long-term ranges. So we feel good about this rate environment. If rates were to go down from here, it might be a modest benefit for us. Not all of our funding that we utilize is floating rate in nature, so there could be a lag effect to see any sort of real material benefit. But I think one of the great things about Affirm is that we can be adaptable, and we can excel in any macro environment.
One thing we want to ask you about is that Bloomberg Intelligence, our own research team, Rob, has put out a report this morning, and they're projecting that Affirm will surpass 30% growth this year, to ahead of consensus. So just talk to us, if you will, about some of the drivers here when it comes to volume drivers.
Sure. I think it's important to remember that our outlook for fiscal 26, we have a June fiscal year. We've established a minimum GMV for the year, so we don't have a range out there. There's no high end to that estimate. So, certainly we put out a minimum number for GMV, and we would hope to achieve that, just given that it is what we think a floor for the business. Closer to home, for Q1, we're guiding that we see about 37% growth in the GMV line in the September quarter, and that would be down from the 43% that we had in the June quarter. So both metrics, I think, are quite healthy and quite strong, and we really like what we're seeing in the business today.
Hey, very briefly, can you just tell us a little bit about the Affirm card? 10% of your users are on the card. Tell us exactly how it works and the profitability on the card's portfolio. Is it better than conventional buy now, pay later?
Our card is slightly better profitability than our business at large. That really stems from the fact that the Affirm card is a repeat usage product. Most of our consumers come to us through one of our merchant integrations, and then look to deepen the relationship with Affirm through some of our direct-to-consumer products like Affirm Card. So there's a lot to like about Affirm Card, both for us, but for consumers too. It puts all of the utility, all of the financing and flexibility that we offer through Affirm, it puts it on a card, and it allows consumers to transact in places that today Affirm doesn't have quite the level of coverage that we have on e-commerce. So we see a lot of usage for Affirm Card in store, in brick and mortar situations. And you can also utilize Affirm Card quickly and easily at merchants where they don't have an Affirm integration yet.
Yeah, Rob, we're unfortunately running out of time. Maybe just 30 seconds just about the growth in your space. We've seen Klarna recently go public. Like, and how far is that potentially boosting even attention to the space?
We think it's good for investors to have multiple providers in the space so that they can compare and contrast across us and Klarna. I would say our space has been competitive for several years now. We really haven't seen a change in competitive intensity. So, we're focused on driving our objectives, and right now the business looks incredibly strong from our perspective.
All right, gonna leave it there. Rob, thank you so much. Rob O'Hare, Chief Financial Officer of Affirm, featured in a recent Bloomberg CFO briefing newsletter. A new one, by the way, out on Sunday. Find it at bloomberg.com/CFO briefing. And of course, always our thanks to Nina Trentman. She's Bloomberg News Senior Editor. When we come back, AI and data science and global health philanthropy. One view when we come back on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they're all in the red with the S&P down now at 6,600 even, lower by 37 points there. Drop there of just about 0.5%, back above 6,600 barely, but indicative of moving off session lows. We got the Dow down 176, now down 0.4%. NASDAQ, the composite index, down 129 for NASDAQ, a drop of 0.6%. Our Mag 7 index down 1%. Today we are seeing tech stocks selling off. The 10-year 4.17% with the 2-year 3.66%. Gold is up 0.6%, 37.57 the ounce. West Texas Intermediate crude up 0.2%, 65.13 a barrel on WTI. And Bitcoin right now at 109,607 on Bitcoin. It is down by 3.5%. Xiaomi's billionaire co-founder has unveiled a $630 smartphone that's designed to take on the just released iPhone 17, underscoring the Chinese company's broader ambitions to take on American rivals from Apple to Tesla. The Xiaomi 17 will be offered in Pro and Pro Max models. ADRs of Xiaomi, they're up now by 4.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Bloomberg Business Week Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world. And I got to say, the world of women's health was rocked a little bit this past week.
Yeah, President Trump created a potentially existential crisis for Kenvue, the maker of Tylenol, with just 3 words about the company's most recognized product. He said, "Don't take it." The Trump administration is linking Tylenol's active ingredient acetaminophen to autism and urging pregnant women, Carol, to largely avoid the medication, although decades of scientific research have yet to identify a single cause for autism.
All right, let's get more, though, into the bigger, broader picture of women's health. Dr. Joan LaRovere is with us, Interim Chief Medical Officer at Boston Children's Hospital, Director of Innovation and Outcomes. She's also co-founder and president of the NGO Virtue Foundation, which is delivering healthcare in over 25 countries. So she has a big global perspective here. She joins us here in studio. Dr. LaRovere, so nice to have you here with us. How are you?
I'm great, Carol. Thank you so much for having me today.
There's a lot we want to talk to. You're in town with everything that's going on. We're looking at global health with global leaders. I do need to ask you, though, about what we got from the administration this week, the Trump administration, the president on pregnant women taking Tylenol. I'm just curious what it's been like, and I know you've been in New York, but what you've been hearing from your team back at Boston Children's when it comes to this news and what they're hearing from patients and what the guidance is that you're giving them.
Absolutely, Carol. Well, firstly, at Boston Children's, we don't take care of pregnant women. It's a children's hospital, but this obviously encompasses women and children. And I myself don't take care of autism patients. I'm a pediatric cardiac intensive care specialist. But I am hearing from my clinical colleagues that they are getting calls from families, and creating confusion around this is really a challenge. And we're really sort of taking that head on in terms of addressing the questions of families as they're coming to us.
One thing that we've noticed about this moment in time is, and we spoke to a doctor from the American College of Obstetricians and Gynecologists earlier this week, and there's this tension between what we're hearing from professional organizations as far as recommendations go and what we're hearing from the American government and the HHS. And it doesn't seem like that's happened in the past, where you don't necessarily have the government aligned with these professional organizations. I'm just wondering how you're thinking about this moment when it comes to healthcare.
It's a challenging time for healthcare, and I think we just stick to our mission that we are trying to provide the best, safest, most effective care to children that we can.
I am also curious, like we said, you're in town, and we've had the benefit of talking to global leaders about some of the big issues that are out there, whether it's climate change. We've talked a lot about AI this week, but looking at healthcare from a global perspective, I want to bring you into this because you're very involved when it comes to the applications of AI in medicine. Talk to us about kind of where we are today with it and kind of where it can go.
Absolutely. I think we're at one of the most exciting times in healthcare, and I've been involved with AI with Virtue Foundation for 15 years. And never has it been like this moment in time. because I think that the tools that are now unlocked, particularly now with Gen AI, cloud computing, big data, we're seeing use cases that are much more actionable than before, and at an enterprise scale.
What does that mean? Break it down.
Well, I can break it down in the context of what we've done with Virtue
please.
Foundation. I'm happy to talk about some of the hospital use cases too. But in terms of Virtue Foundation, 15 years ago, Dr. Ebi Alahi, my colleague, was in Burundi, and he was there caring for patients and had this eureka moment where he's like, we should have more granular data on the ground to understand what my eyes see. And I should be able to see it here in New York to be able to action on it. And at that time, people are like, what are you talking about, right? It was very early days. And we started that journey of trying to first get the granular data, visualize it geospatially. But I think we've grown up as the technology's grown up. And I think key leverage points for us have been partnerships with Databricks, DataRobot, Carto, and I can break down one now if it's helpful. Yeah.
Well, and talk to us about data, because, you know, especially when it comes to the developing world, if you have data and information, you can assess a situation and figure out what to do.
Yes.
So talk to us a little bit about that. You do have partnerships with Databricks, as you said, DataRobot, Carto. What are you guys building together?
We are building the marketplace for global health philanthropy.
What does that mean?
So you can actually see what is happening in healthcare facilities and what is the work of healthcare NGOs on the ground in low and middle income countries. And we've used AI. In particular, we've built an enterprise-grade pipeline with Databricks, where we're extracting all the data that exists and co-locating it to a geospatial location. So you're a hospital, a Korlebu hospital in Ghana. Everything that's out there, information-wise, is co-located geospatially to that organization. And you create this vector graph, this knowledge graph, with all these mini knowledge graphs that tell you what's happening in each of those facilities.
At the end of the day, this is all about improving outcomes, and it's helping people live longer, healthier, happier lives. Do we have the data yet that shows that this moment in technology is leading to better outcomes?
I think that's what we're on the cusp of. Would I say that we're there and it's all, you know, completely functional and moving? No. But that is the direction of travel, and those are the tools that are enabling us to do so. For now, I can see this data in ways I couldn't see before. I can send the right teams to the right locations.
Well, what are the better outcomes that you envision? I mean, are we talking about longer life expectancy in the developing and the developed world? Are we talking about lower infant mortality? Like, what are we talking about here?
I think we're talking about all of it. I think eventually economic development will solve some of our problems. But in that window in time, how can we shorten the time it takes till we get really more developed healthcare in these markets? And we feel that this VF Match platform, this actionable data initiative, will allow you to be able to use this information, whether you're a healthcare NGO, whether you're a government in a country, whether you're even a corporation, to determine what you can build to accelerate progress. And we personally are using it to send medical and surgical teams to locations where the medical deserts are, the large populations of patients who need that ophthalmologist or that neurosurgeon or that gynecologist. And so that the people who are doing it, like myself, there are many in global health who are doing this work, know the place they can go to be most useful to the patient and most useful in passing on skill.
And just 10 seconds, so it wasn't so easy to do that before.
No.
And it was probably not unless somebody brought your attention to it.
Yes.
Or you got wind of it, but that's not the most productive way of doing it.
Exactly. This is to create efficiency and scale.
All right, got to leave it there. Dr. Lou Rivera, thank you so much.
Thank you.
Really appreciate it. Interim Chief Medical Officer at Boston Children's Hospital, Director of Innovation and Outcomes, and as we said, co-founder and president of the Virtue Foundation.
Hey, taking a look at markets off the worst levels of the day, but still red across the screen. The Nasdaq down 0.6%. The S&P 500 down 0.5 percentage point. The Dow down 0.4%.
All right, when we come back, we'll get a check on some of the specific stocks on the move on this Thursday. Don't go anywhere. This is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. We've got just about coming up on an hour to go until we wrap up trading. I'm just looking at our Markets Live blog, and it says stocks hit by algo sales to weaken more into the month quarter end. So computer-generated accounts helping fuel a sell-off in stocks today. So we're bouncing around. We're off our best and worst levels, but down about 120 points on the NASDAQ 100, Tim, and 35 to the downside on the S&P 500.
I'm Tim Stenevec along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Grafeo. Emily, the Mag 7 taking a bit of a hit today. Among the worst movers when it comes to the Mag 7, an EV company. What do we call it, an EV company anymore?
Yeah, an EV company. And robotics and AI.
Technology.
Have you not seen like all that they do?
The standing robot, the humanoid robot.
I've seen what they sell, and it's mostly cars. We're talking about Tesla, right?
We're talking about Tesla, yes. Ticker TSLA. Biggest intraday drop since July. It was down over 5%. It's regained a little bit, but it's still down about 4%. After data showing that European sales of the car maker fell 22% in August. So that gives the company a market share in Europe of just 1.9%. This is a report from the European Automobile Manufacturers Association. We get this report every month. It actually often tends to move Tesla's stock price. And Europeans are still buying other EVs, but just not Teslas as much. We did see EV sales rise in the region in August, but the Tesla sales dropping.
Not so good. Not so good. On the flip side, Intel continuing to have another good day.
Yeah, Intel extending gains for a third day. It's up 7%, and it's extending a gain after Bloomberg reported yesterday that the chip maker had approached Apple to ask for an investment. This is just the latest of a series of Intel headlines that we've gotten in the last couple weeks. The stock is up 36% over the last month, and this is ticker INTC, Intel. Our reporting is citing people familiar with the matter. The latest that we know now is that Apple and Intel have also discussed how to work more closely together, and that the talks are early stage and may not lead to an agreement. But the headline here is that Intel approached Apple for an investment.
Well, and it's our Mark Gurman said, because we were talking to him, like, why would Apple do it? And we really talked about kind of political clout. I was calling it presidential diplomacy or CEO presidential diplomacy, but it's kind of interesting. But he says, you know, tech CEOs, they kind of talk to each other all the time, these big tech guys.
Yeah, this would be, you know, like we said, the string in the latest of different investments. Obviously, last week we saw a $5 billion investment by NVIDIA.
Yeah.
Into Intel, we've seen the actual U.S. government investing. And just for context here, I'm sure you guys know because you talk to a lot of tech analysts, but Apple was a longtime Intel customer, but then switched to in-house processors in the past 5 years. So maybe they're going back, who knows?
Yeah, Mark had a really interesting point when we spoke to him about this, which was, you know, Apple is smart about making U.S. investments right now.
Right.
And I was trying to look for any other reason why Apple would do this. And look, the reporting says there's been discussions about it at this point.
Yeah.
And there was really no other reason that Mark gave us. Maybe they could help with some of the many other less intricate chips that go into some of these devices, he did say. But
yeah, he did.
For the most part, politics.
Presidential diplomacy. But like, you know, and we talked about this fiduciary responsibilities that CEOs of big publicly or all publicly held
Mark
companies.
said that.
Right. We talked about like having a relationship. It's not just this administration, but it is good to have a good relationship with the White House, right? Because whether it's a Democrat or a Republican or whatever, right?
Yeah, I mean, laws are made and then it affects the company and it affects the shareholders, so.
Exactly. Where do you want to go, CarMax?
CarMax. So Intel was the best performer in the S&P 500 today. The worst performer is CarMax, the used car retailer, plunging down 20% to 5-year lows. Bad earnings. They missed EPS, net sales, and operating revenue. And the street was pretty vocal about this earnings report. So Truist Financial Services said this was a, quote, miss across the board with, quote, really nothing good to see for CarMax. Used vehicle sales coming in at $5.27 billion, but that was down 7.2%. year over year, and also missed estimates. The auto retailer actually pointed to a fallout from Trump's tariffs and rising distress among consumers as it reported these earnings.
You know, I don't understand the environment here because
I don't either.
I saw that. I saw that too, Emily. And just in our program, Bloomberg Business Week Daily, earlier on Thursday, we spoke with the CFO of a firm, Rob O'Hare, who said the consumer is great right now. Everything we are seeing is fine.
I am so confused.
So
right?
if CarMax is out saying that the tariffs have caused this distress and people are pulling back,
right?
What are they? Look, a car's a big purchase, but
yeah,
if they're not seeing that at a firm, then I don't know what gives.
I don't know. Right, these are the crosshairs that we kind of like are dealing with.
It plays to the uncertainty. Even our very own Fed chair, Jerome Powell, was talking recently about just how much uncertainty there is for business leaders. So yeah, CarMax, ticker KMX, down now almost 20%.
Emily Grafeo, thank you so much. Be sure to check out our Stock Movers podcast, 5-minute episodes, because winners and losers in the market. Find it on Apple, Spotify, or anywhere you get your podcast. If you're watching on TV, the close is coming your way in just a moment. Tim and I continue on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Authorities say the gunman who opened fire on the ICE facility in Dallas yesterday left behind a note.
The sniper explicitly states, yes, it was just me.
Acting U.S. Attorney Nancy Larson.
In crude words, he expressed his hatred for the federal government.
CBS's Omar Villafranca reports there are still many unanswered questions.
The question is why? What led to this shooting to come up here in Dallas right off I-35 and shoot into a van?
A detainee in that van was killed. 2 others were wounded. No ICE agents were injured. President Trump today insisted the Democrats will be to blame for a government shutdown next week. And Ed O'Keefe reports the White House Budget Office has upped the consequences.
What they're now instructing the agencies to do is look at all those non-essential personnel and say, who of those could you lay off permanently? No president's done it like that before, so this is an escalation, at least, of the political battle. There are big questions about the legality of what the president's doing, since it is Congress that authorizes all of those non-essential programs.
In the past, non-essential federal workers were furloughed during shutdowns, but then returned to their jobs afterwards. CBS News has learned federal prosecutors are close to making a decision on whether to seek an indictment against former FBI Director James Comey. Stacey Lynn reports.
Comey's a bad person.
President Trump has long clashed with the former FBI director who he fired during his first term.
He did terrible things at the FBI.
He's been urging federal prosecutors to charge Comey with lying to Congress.
I stand by what the testimony.
And with the statute of limitations running out on Tuesday, it appears the DOJ is preparing to ask a grand jury to indict him. Mr. Trump says he's not sure what's going to happen, but
they're going to make a determination. I'm not making that determination. I think I'd be allowed to get involved if I want, but I don't really choose to do so.
Stacey Lynn, CBS News, Washington.
Trump is expected to sign an executive order soon on TikTok's ownership. Natalie Brand has details.
It will be a group of American investors that will have a stake now in TikTok, and it will be tech giant Oracle, according to the White House, that will provide the security, host the American user data, and also review the app's code and really popular, valuable algorithm.
Defense Secretary Pete Hegseth has called an unusual meeting of senior military leaders next week. It isn't clear why. They'll be gathering at the Quantico military base in Virginia. On Wall Street today, stocks are lower again. The Nasdaq is off by 118 points. The Dow Jones Industrial's down by nearly 180. This is CBS News. A new spot among the greats for a rising Major League star. Steve Kathan has that.
What a dream baseball season it's been for Cal Raleigh of the Seattle Mariners. Fly ball to right field! Number 60! Last night, he became just the 7th major leaguer to reach 60 home runs in a season. He's the first catcher to do it. Earlier this season, Raleigh broke the long-standing MLB record for homers by a switch hitter set by Mickey Mantle back in 1961. And he's a big reason the Mariners won their first American League West championship in 24 years. Steve Kathan, CBS News.
94-year-old Star Trek star William Shatner was reportedly rushed to a hospital in Southern California for a medical emergency. TMZ said it was a problem with blood sugar, and he called EMS himself. His reps now say that wasn't true. He's healthy and his same old self. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Thursday, September 25th. Carol Massar, Tim Stenovec, live here in our Bloomberg Interactive Brokers studio, bouncing around here on the equities side of things. We're going to get into some of the day's economic news that definitely maybe had markets moving a little bit. I've been looking at the yield curve, and we've seen yields move up as well.
Well, fortunately, Stuart Paul is standing by. He has what we need to know when it comes to GDP, jobless data, jobless claims data, tomorrow's PCE print, and then all the Fed speak that we've been hearing, not just on the Bloomberg network, but other places too.
Everywhere, right? We're going to get into what you need to know in just a moment. Also, we're going to hear from the NATO Secretary General, Mark Rutte, who is sitting down with our own editor-in-chief, John Micklethwaite, here at Bloomberg News. So looking forward to see what he has to say. Some developments, certainly, when it comes to Ukraine and Russia. I feel like some of the things we got from the President Trump, kind of maybe changing the view about how the U.S. maybe lending more of a hand to Ukraine.
Yeah, and no easy transition here because I'm talking about Costco. We spoke yesterday to
there is no easy transition.
CEO of Sam's Club. We did that at the Bloomberg Philanthropies Global Forum at the Plaza Hotel yesterday. Today, Costco earnings. Bert is joining us, retailing legend.
He is. Covered this space forever.
Love it.
Bert Flickinger. He'll be along in
did I not say Flickinger?
You just said Bert.
Oh, Bert. He's a man who needs no... You know, Madonna...
Gaga.
Yeah. So, like, who else, you know? Elvis, too.
Elvis.
Yeah. There we go. Okay, perfect.
Okay. And also Alexis, which means let's take a look at the trade overall for a check on the day's trade and top business stories. Alexis Christophers, she's here for Charlie Pellet. Hey.
Thanks so much, Carol and Tim. Another one for you is Share. Think about that. Why? Just one name. That's all you need. As you know, we check the markets all day long here at Bloomberg. And today, Wall Street shrugging off news that the U.S. economy flexed its muscle last quarter, growing at a better than expected pace of 3.8%, powered by consumer spending. Stocks lower for a third straight day. Checking the terminal, the Dow Jones Industrial Average down 176 points. The S&P 500 off about 37. We've got the NASDAQ down triple digits off 122. Federal Reserve Governor Stephen Myron tells Bloomberg News the Fed risks damaging the economy if it doesn't lower interest rates quickly.
My view is that policy is quite restrictive, and so I'd like to adjust quickly to get back to a more neutral area, right? That just means a series of 50s until you get much closer to zero.
And you can bet Wall Street will be closely watching tomorrow's inflation report to see if the Fed remains on track for 2 more rate cuts this year. We're watching Amazon. It's going to pay a record $2.5 billion to settle Federal Trade Commission allegations that it duped users into paying for Prime memberships, then made it difficult for them to cancel. This settlement includes $1.5 billion in customer refunds. Amazon also agreeing here to make it easier to cancel Prime in the future. Shares of Amazon, by the way, down about 1 1/3% right now. And shares of CarMax plunging 19% to a more than 5-year low. That's after the used car seller reported weaker than expected sales and profits, blaming those poor results on President Trump's tariffs. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christophers. That's your Bloomberg Business Flashback. Over to you, Carol and Tim.
No, Gaga, Cher, Alexis. You only have to go by one name. That's it. All right. Thank you so much, Alexis Christoforous there.
Well, the U.S. economy grew at the second quarter at the fastest pace in nearly 2 years as the government revised up its previous estimate of consumer spending. Tomorrow, we're going to get the Fed's preferred inflation gauge, the core PCE price index, for clues on the path ahead for the central bank. And on the central bank, Federal Reserve Governor Stephen Miron said the U.S. central bank risks damage to the economy by not moving rapidly to lower interest rates.
My view is not one of enormous economic pessimism. You know, I don't think the economy is about to crater. I don't think the labor market's about to fall off a cliff. However, the neutral rate is drifting down. And as a result of that, it's incumbent upon policy to adjust in response. And the longer that policy stays excessively restrictive, the greater the risks to the downside for the economy. My view is that policy is quite restrictive, and so I'd like to adjust quickly to get back to a more neutral area, right? That just means a series of 50s until you get much closer to zero. The fact that it's this year is just a function of the calendar.
Well, that was Stephen Miron earlier on Bloomberg News. Joining us now is Stuart Paul. He's U.S. and Canada economist for Bloomberg Economics. He joins us here in the Bloomberg Interactive Brokers studio. Excessively restrictive, Stuart. Is policy excessively restrictive in your view?
Certainly not. He's really focusing on the difference between the policy rate as it stands right now and his particular estimate of the neutral rate. If you look at financial conditions, if you look at financing costs, it's really difficult. If you look at asset prices, it's really difficult to make the argument that policy right now is excessively restrictive. Rather than orienting towards some sort of theoretical or abstract idea of what constitutes neutral, I think is more important and more practical to look at the actual consequences of the current policy rate on financial markets, on financial conditions, and on credit conditions. And there is nothing screaming in my face that financial conditions or the policy rate is too restrictive right now.
Is there anything, Stuart, in terms of his argument that kind of makes sense? I mean, he says he doesn't see enormous economic pessimism. I don't think the economy's about to crater. I mean, he seems kind of upbeat. I mean, does any of what he's saying make sense with kind of the U.S. statistics?
But wants to cut?
The U.S. statistics that you look at?
This is really, I think, the simplest way to square the circle if I'm Steve Miron and I want to make the argument for quick cuts. I would just basically say, look, policy rates today are where they were when nominal GDP growth was running at a pace closer to 7% per year, and now we're significantly below that. And if nominal economic activity, the dollar value of all goods and services that are produced during the year, if that growth rate has slowed, we might as well cut rates. I think that that's the simplest plausible explanation for what he's saying. But I think that the reality is that he does need to navigate a sort of difficult political path here where he needs to say, it's not the case that fiscal deficits are raising neutral. It's not the case that the labor market is cooling because ultimately I'm going to be going back to the White House and politically we need to orient the public opinion in favor of the current administration, especially ahead of the midterms. He has a very treacherous communications path that he needs to navigate. And when that's the case, he needs to sort of say, look, I want to juice the economy, even though it's not necessarily falling off a cliff. We want to just balance risks here.
Maybe he's going back to the White House.
Maybe he's going back to the White House. Look, I mean, he's just on a temporary unpaid leave right now, so he's expecting to go back to the White House.
As far as policy, how he views policy, we sort of got his view and where he stood compared to the other voting members last week. Everybody else, they voted along with Jay Powell for a rate cut of 25 basis points. He was by himself with the 50 basis point vote. Is there anyone else, though, who's emerged in recent days who's echoing what he's saying, or is he the only one with this rhetoric right now?
He's the only one who's argued for a series of 50s. That's an exceptionally bold line of argument. That's an exceptionally bold statement. We have seen folks like Mickey Bowman come out and argue for swifter cuts, but not a series of 50s. There is a contingent of doves that is becoming more vocal on the committee, that's for sure. But look, we knew that when we got the dot plot that showed that the median member was expecting 75 basis points of cuts this year. So there definitely are more doves on the committee, but none as dovish as Steve Miron.
What do we need to know about Federal Reserve Bank of Dallas President Lori Logan saying that the U.S. Central Bank should abandon the Fed funds rate as its benchmark? in implementing monetary policy?
I think this is just more an evolution of monetary policy, and more particularly an evolution of monetary policy communications. It's really just to say that there is a big pool of money outside of overnight interbank lending that we need to account for when we're setting our target for the overnight rate. You have folks like Fannie Mae and Freddie Mac who have a lot of money that they can lend overnight. You have money market funds that have cash that they can lend overnight. And if we're thinking about the overnight funding rate, we should take into account those pools of money. So it's not really some dramatic shift here. It's a little bit of just an evolution of communication around Fed targets.
Okay, I want to shift gears a little bit because we got Stuart in here for a couple more minutes. He watches the economy and the consumer closely. He's U.S. and Canada economist for Bloomberg Economics. We're a little confused about the state of the consumer right now, and I'll tell you why we're a little bit confused. CarMax came out and said fallout from President Trump's tariffs and rising distress among consumers are why we are missing our numbers right now. Our shares down as much as 20% in the session. Just in the last hour, we spoke to Rob O'Hare. He's CFO over at a firm, the Buy Now, Pay Later firm. Our first question to him was, how's the consumer doing? He basically said, everyone's great, nothing to see here. He echoed what Max Levchin told us, the CEO, a couple weeks ago. We're not seeing a rise in delinquencies. The consumer is strong. What's going on here?
When spending volume on a firm is especially elevated, to me, that suggests that consumers are feeling a little bit stressed and they need to finance some of the smaller everyday purchases that they would otherwise be making with cash. And if that's the case, I think it's actually in line with what we might be seeing from a firm, which is that folks just don't have the cash right now to spend on used vehicles.
But they're paying it back on time.
So
But the point that they need to take longer to pay for something, they can't pay for it right away.
Right, they can't pay for it right away. So it's not the craziest thing in the world to think that they could pay back a $100 loan for a sweater on time. But the fact that they can't outlay $100 and instead need to pay it off in $25 increments speaks volumes.
So you don't see these as conflicting narratives by any means?
No, I think that it takes a little bit of squinting and looking sideways to see the economic reality behind the two different stories, but I think they are threads that pretty easily weave together a narrative of a consumer that is stressed. When we look at the retail sales data, we see consumers are rotating from some of those goods that are being most heavily affected by tariffs and are focusing more on services, things that are less affected by tariffs. We see people hunting for bargains online rather than going to big box stores. If they're moving away from big box stores and they're hunting for bargains online, I'm not surprised to see that they're spending more and that they're using a firm for financing those purchases. Maybe a firm is just replacing, say, the Macy's credit card for laying off some of that spending and instead making up those payments in the future.
Stuart, 30 seconds. We've got an important inflation print tomorrow. Is that the data point to watch out for? Just quickly.
That's the data point to watch out for. It's the Fed's favorite inflation gauge. Core inflation year on year going to remain elevated at 2.9%, despite the fact that income growth is slowing on the back of a cooling labor market. All eyes on personal income and outlays report tomorrow at 8:30 in the morning.
This is why Jay Powell says he's in a pickle when it comes to monetary policy.
That's Dr. Stuart Paul right there.
It is Dr. Stuart Paul. Stuart, thank you so much. Really appreciate it. He is U.S. and Canada economist for our Bloomberg Economics team. As he mentioned, we will get those PCE numbers and core PCE numbers at 8:30 a.m. Wall Street time tomorrow.
Coming up next, we're getting the details on what exactly is happening with TikTok. Sarah Fryer, usually in San Francisco, she's going to be joining us here in the Bloomberg Interactive Brokers studio. Sarah's going to explain. This is Bloomberg.
I'm Alexis Christoforous, and here's your Bloomberg Business Flash. We check the markets all day long here at Bloomberg, where stocks are lower for a third straight day. And that's despite news that the economy grew at a better than expected 3.8% pace last quarter, thanks to strong consumer spending. Checking the markets as we head closer to the close, the Dow Industrials now near their worst level of the day, down more than 200 points. The S&P 500 down 34. We've got the NASDAQ down 134. As for the bond market, the yield on the 10-year, 4.16%. The 2-year yield sitting at 3.65%. Oracle is losing 5% after the software company sold bonds to finance its artificial intelligence build-out. And Amazon, we've been talking about it all day, is going to pay a record $2.5 billion to settle Federal Trade Commission allegations that it tricked users into paying for Prime memberships, then made it difficult for them to cancel. Shares of Amazon down 1 1/3%, and shares of Starbucks slipping about 1% right now after the struggling coffee chain said it would lay off about 900 workers. That's mostly in its corporate offices. It will also close at least 100 stores as part of its turnaround plan. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash. Back over to Carol and Tim.
All right, much appreciated, Alexis. Thank you so much. All right, Oracle, Silver Lake Management, and the Abu Dhabi-based investment company MGX are in talks to invest in a U.S. version of TikTok and receive some board seats in the new venture. This again, Tim, according to people familiar with the discussions.
The Trump administration recently encouraged MGX to join the coalition of non-Chinese owners, said one of the people who asked not to be identified, discussing non-public information. For more, we bring in Bloomberg News big tech team leader Sarah Fryer. She's usually in our San Francisco bureau, but she's here in the Bloomberg Interactive
I ran into her yesterday. I'm like, wait, what? Or was it today? Was it earlier
You're like,
today?
you're coming on the show, right? And I was like, I don't think so, but here we are.
Here you are.
So glad.
Sarah's also the author of No Filter, the inside story of Instagram. Sarah, welcome back to New York. We're trying to figure out what's happening with TikTok and what exactly a U.S. version of TikTok looks like. We're getting more information about the ownership structure here. What can you tell us?
It's still so, even though we were getting the sense that each of these owners will have another 15% of the overall ownership, we still don't know if this is something that China's going to be okay with. Like we've heard tentatively that, you know, the Trump administration says China's going to be okay with it, but we don't have the final approval. We don't have the final order signed. All of this is waiting on this another 120-day deadline. So we could be into the new year before we have any solution.
Well, one of the things, who is it that said to us that we like, well, where's China on this? We've heard nothing from China on this, right?
We have a statement from them.
That was Alexander Levine earlier this week. Yeah.
Right. Yeah, we have a statement from them that they want to support the companies and their path.
What does that mean?
It was just so vague. It was non-committal.
But they have to sign off on this for anything to happen.
They do. They have to be okay with it. And so what Trump thinks he has here is a solution that will satisfy not just the law, but the Chinese government. And we're not really hearing anything from China. We're not really hearing anything from ByteDance. So it's possible, but you know, if this is so solid, that it's going to be announced with these stakes, why does it need 120 days?
Well, this is what I want to ask you. Is it very possible after how many days, 120 days, whatever, that ultimately nothing can be done?
Ultimately, the way that this deal is structured looks very similar to the status quo, right? Mm-hmm. Bringing Oracle in as the security partner that's going to solve the problems that we have with TikTok's data. Guess what? Oracle's already TikTok's security partner. Right. They already store all of TikTok's data. They're a major cloud customer. So what is changing? I guess it's the ownership, right? But the actual reality of this, you know, there's going to be a U.S. version of the app. Somehow that data is going to be cordoned off from the rest of the world. TikTok already says that the U.S. data is shielded from the rest of the world. It's very much, it's still a process for us to understand how much of this is an announcement versus a real change in how TikTok functions. And if it is a real change in how TikTok functions, that's what's interesting. Because then I want to know how involved does Oracle want to get in the algorithm.
And we're not gonna know that for a while. One thing I wanted to ask Sarah is if this whole thing is about U.S. ownership or is about non-foreign ownership, then why do we see MGX in there? This is the Abu Dhabi-based investment company. So, you know, if this whole thing is about security in the United States and making sure there's U.S. ownership of this asset, there's another foreign entity getting involved.
There are a lot of you know, friendships, I would say, between the Trump administration and folks in the Gulf. So I think we saw that with the deal earlier this year for Stargate. It's just.
But Tim brings up another point,
right?
It is just
a very strange. The other thing that I wonder about is if Oracle is a national security partner for TikTok, partnering on the data, what does that mean for the Trump administration's view into TikTok's data? And is that something that they're interested in having?
That's interesting.
Insight into.
The U.S. government.
The U.S. government.
Right.
And that would be unprecedented for a social platform to have a direct line to the government.
That's a great point.
It's a state-owned investment firm.
Yeah.
Not owned by the U.S. Like
that is, yes. It is.
I feel like we should just point.
Like the people in Congress who really pushed for this deal on national security grounds would not be okay with that outcome. We'll have to see.
And wouldn't ByteDance still have 20% or like a little? So like.
Well, the idea is that it's a small enough stake to satisfy the law. So it all is very squishy. It's all, I think, you know, could be up for a debate still. If this doesn't satisfy the law, then somebody could challenge it in court. And the Supreme Court has already said that the law can stand and TikTok should have to follow through with it. So
TikTok
here we are.
For a little bit longer.
So where does this leave the companies that you used to cover in a big way, like Instagram and Reels or YouTube Shorts? Where does it leave them?
I think that they are really focusing on countries where TikTok has already been banned, like India. Instagram, we recently broke the news this week that they have 3 billion users now. And India is a huge part of what they see as their growth story, of course, because TikTok is not in India. So I think that they are taking advantage. Of course, they don't want to come out and they have said that they don't want TikTok to go away. But it would benefit them strategically. Yeah. I think that this is dangerous for them, though, because if TikTok is banned in the U.S., that could lead to U.S. companies getting blocked elsewhere. We're already seeing a lot of tension in Europe around U.S. companies. There's a lot of discussion in Europe about digital sovereignty, having control over the platforms that people use. So I think that this is all it's all just so in flux and up for debate. And then when you're looking for money, when you're looking for investors, the people who really want to invest in U.S. tech right now are, if they're not in China, they're in the Gulf. So
yeah, right. Yeah, exactly. Unbelievable. All right. Well, we're still waiting. There's a lot certainly at play here. Sarah, thank you. Really appreciate it. Bloomberg News Big Tech team leader, Sarah Fryer. She's author of No Filter, the inside story of Instagram, like we said, usually on the West Coast, but lucky for us right here in New York City. Sarah, thanks.
Well, let's talk a little more about what's happening around the world and economic statecraft, too. Fallout from an accident, the Gasberg copper mine in Indonesia continues. The accident at the mine, which killed 2 workers and left 5 missing, has left Freeport-McMoRan to declare force majeure on contracted supplies and slash its production and guidance. We also saw copper just shoot higher today. Joe Doe is with us. He's Bloomberg News economic statecraft reporter. He also reports on metals and mining. So that's in his DNA. He joins us here in the studio. Let's talk a little bit about what's going on here and what this is doing to the copper market. Force majeure, I don't see that often.
No, you don't see it often, period. You don't see it often on the world's largest mine for any particular commodity. I mean, I remember when I started covering commodities at Bloomberg over 10 years ago, the first mine I ever learned about, it was almost like it was in a handbook, was this mine, Grasberg. It is the largest copper deposit mine in the world. For them to declare force majeure, to call it market moving is an understatement. And you saw this movement in pretty much every copper producing company globally. The globally traded price of copper, traded both in New York and separately in London, moved up higher. I mean, it's a big deal when like copper moves up 1% in a day. For it to move 3% is like a 10% move for like a well-known stock.
Wow.
So it's massive.
It's big.
All right. So what does it mean? I mean, should we assume prices are going to stay elevated for some time? Or
yeah, if you're looking at the analyst notes that have been coming out over the past couple days, they are saying, listen, there is an expectation that prices will remain elevated, because I think the number that the company, that Freeport, is saying in terms of Q4 production, well, Freeport, the operator of the mine, is technically not Freeport, right? So the government of Indonesia is like a 51% stakeholder in the mine, and that goes back to a number of different discussions over years of disagreement between the government and Freeport. So the operator of the mine has indicated that there's effectively going to be zero production in Q4 of copper. You're usually looking at about 200,000 tons of copper produced per quarter from that mine. That's a significant amount that you're pulling off the market. 200,000 just for the sake of throwing it out there is the equivalent of about 10% of consumption in the United States per year.
So what does that mean? Like, what companies, where like will we see that? Companies who can't do things because they can't get the copper that they, or is it?
They're just going to pay more.
They're just going to pay more.
Yeah, you're going to pay more for your copper, then you get into the demand question, right? So you look globally,
right?
Demand for metals has been like okay, it's not great, but you're now going to have a supply shock in a very important globally traded metal market, and everybody's going to have to adjust to that. So from traders to actual buyers, who turn copper into wire or piping or whatever it is. So this is going to be a big deal in the metals world.
It seems like investors are now thinking that the Indonesian government is going to take a greater share in this mine. What's a timeline for something like that? How do these negotiations work? You said this is the historic type of thing.
Yeah, really, really hard to know. You're talking, all of these things are on grand timescales. Like when I started at Bloomberg, at that time, Indonesia was talking about taking back ownership of the actual ore body coming out of the ground. In particular, nickel was like the big thing we were looking at. And it was like the government in Jakarta was saying, okay, China is pulling all this nickel out of the ground, and then they're shipping it back to China and processing it in China. What we realize as the government is the money is made in the processing. So let's start implementing laws that doesn't allow for foreign nations or foreign companies to take projects that they own internally, to take that ore out and process it elsewhere, where we could charge a higher tax amount or gain more revenue from.
Right. Okay. Well, this is certainly going to stay on our radar for a while. Jojo, thank you for jumping into our studio. Bloomberg News economic statecraft reporter joining us, as we said, here at Bloomberg headquarters. All right, everybody, counting down to the close, just about 26 minutes away. This is Bloomberg.
It is 3:40 on Wall Street. I'm Alexis Christoforous. We check the markets all day long at Bloomberg. Stocks are lower for a third straight day. Want to go over to the First Word breaking news desk for today's afternoon call. Here's Bill Maloney.
Alexis, that's right. Stocks are in the red again today, with the Dow currently down 173 points. S&P's dropped 36, and the Nasdaq is off by 0.5%. The U.S. 10-year yield is at 4.17. Gold and oil are in the green, but Bitcoin, that's sinking by 3.2%. Among the main 11 S&P sectors, only energy was in the green. Healthcare was under pressure, and leaders to the upside in the Dow, IBM and Apple, while Nike fell 3% and led to the downside. In the tech space, CNBC reported that Oracle, Silver Lake, MGX to own 45% of TikTok US, and CoreWeave inked a $6.5 billion deal with OpenAI. Wrapping things up, Costco reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Alexis?
Thanks, Bill. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we've got just about 18 minutes or so before we wrap up the trade on this Thursday. You just heard Bill Maloney and Alexis breaking down the trade here. S&P 500 down 41 points, a decline of 0.6 percentage point. So off our worst and best levels of the session, but we've really been in the red all day today. Dow Jones Industrial Average just down about 0.5 percentage point, 206 points to the downside. NASDAQ 100 down about 0.6%, Tim, 144 points down on that index.
Jillian Wolfe is back with us. She's Bloomberg Intelligence Global Equity Strategist. She joins us here in the Bloomberg Interactive Brokers studio. Jillian, we are off our worst levels of the day, but we were down as much as 1% at the lows on the S&P 500 at one point today. Why some selling? I mean, look, stocks go up and stocks go down, right. But are there any fundamentals here that you are watching about why we've seen shares of the S&P 500 down for 3 days in a row?
I think it's interesting that the S&P 500 is down, particularly right after this Fed cut, right? That was supposed to give a big amount of juice to the equity market, right? And now there's a lot of thoughts about, well, how many cuts can the Fed really do if we're running into some hotter inflation going forward? I think one of the things that differentiates the U.S. economy right now from a lot of others right now across the globe is that CPIs have been accelerating over the past few months in the U.S., and they've broadly been flat to stable elsewhere in the world. So we're not really in the same 2022 scenario where inflation was just hot everywhere and investors didn't really have a choice but to invest in an area where inflation was getting hotter. Now it's really kind of becoming a U.S. issue, and that's bringing into question a lot of what the Fed really will be able to do. And I think that's why we're seeing a little bit of weakness now.
Speaking of the Fed, Fed's Lisa Cook warning, of course, the Fed governor, Lisa Cook warning the Supreme Court of market chaos if she's fired. She has made a filing to the Supreme Court in a bid to save her job. We know that President Trump has taken it to the Supreme Court in order to remove her from the Federal Reserve. So the back and forth continues. Do you agree that if indeed Lisa Cook is out, what would that mean potentially for the equity side of things?
I think it would definitely be a destabilizing force for equities, right? There's a reliance in the investor community that the Fed can act independently of whoever the president is or whatever is happening.
And that to you would be a clear sign of the Fed is independent anymore.
Correct. If there starts to be
independent, yeah,
exactly. If there starts to be pressure about who can or cannot sit on the Fed committee as a result of their choices, it's a sign that there's less Fed independence, which, regardless of whether you think that there should or shouldn't be less independence as an individual, it would destabilize equity markets. Because
what does destabilize mean? Down 10%, down 20%, down 50%?
It depends. I wouldn't make a call to say, oh, well, it'd be down 10 or 30% or something like that. But I think it casts a lot of doubt into the Fed's ability to keep inflation under control, and then that would ultimately bleed through into the market, right? So if the Fed isn't allowed to control inflation and fulfill its mandate, trying to keep unemployment low and keep inflation low as well, ultimately the stock market will respond if those forces start to get out of control.
We haven't seen even a reaction. We haven't seen a big reaction from the bond market. or the stock market that shows that this is a real risk right now, at least to investors?
I think there's just so much uncertainty with this administration in particular. I mean, Trump was going to fire Powell at one point, and that didn't end up happening. I think we're in this very much wait and see mode to see if any of this actually goes through. The market, I don't think, is pricing that in right now, to be honest, which is a little bit dangerous because we are at all-time highs. And if there starts to be a signal that the Fed is losing some of its dependence, that could really rock the market from this very high place. That said, who's to say whether or not this actually happens? I think it's very difficult for anyone to really make that call right now, given the amount of volatility that we see in this administration.
All right, so Jefferies Financial, I can't remember who was on with us, says actually that's like the first sign of, kind of the beginning of earnings, and we'll start to get an idea, certainly from a financial market perspective. They report after market September 29th. And then, of course, we get JP Morgan, which is the big one that we always focus on, and that comes October 14th. But earnings, what can you tell us about expectations?
Eric Weiner told us that.
That's who it was, Eric. Because I was like, it was
It took me
Jefferies.
30 seconds to remember.
But he said, because we were saying JP Morgan, in a couple of weeks, he's like, actually, Jefferies comes before that. And we will get that after the close on September 29th. What are we expecting for earnings this go around?
I think 2Q was such a big beat. I think earnings are in a little bit of a precarious place right now, right? Because 2Q, we had this massive beat. The tariffs really didn't flow through to earnings in as negative of a way as many people expected. There was this pause. Analysts made a lot of cuts heading into the second quarter. Turns out they didn't really have that much of an impact. But we're finding on earnings calls quite a bit, our CEOs and C-suites saying, we can manage this. We have inventory stock in place. We're hedging our bets against tariffs. I think there is a lot of expectation right now from investors that companies are actually going to be managing this tariff situation in this new tariff regime relatively smoothly, and any cracks that start to emerge in the earnings picture could be quite dangerous.
When you say relatively smoothly, what does that mean? Like put some pressure on margins?
Put pressures on margins, because right now we're not seeing it putting pressure on margins too much. A lot of companies stocked up early in advance of this, and a lot of companies are saying that they're coming to their own independent deals and they have their own supply chains, and things have been relatively smooth sailing thus far. I think it's setting up a bit of this, maybe a very high bar for earnings to clear in the next few quarters, because now C-suites have really given this impression of, we got this is not going to be that bad. And if it turns out that cost pressures really start to go up and start to eat into margins, I think because the market isn't expecting it right now, that's why the market's at new all-time highs, it could really be a bit dangerous.
No, I think about the conversation that we had with Chris Nicholas, President and CEO of Sam's Club yesterday, right? When he talked about, Walmart and all of its universe has incredible leverage with their supply chain. We know that. We talk about their ability to do that. But he did say that because of, I guess, that supply chain, the relationship with their suppliers, that they can go back and kind of figure this out with higher tariff costs, or figure out ways to maybe cut costs elsewhere, so that they don't necessarily have to raise prices to consumers.
What the discussion has really been about. We run a natural language processing sentiment model on our team. It's a fancy way of saying we run all the transcripts, earnings transcripts, through an algorithm that tells us how positive or negative the C-suite sounds about certain topics. Around tariffs, they still sound pretty positive. They're really hedging their bets, and I think we have to temper our expectations that maybe this won't be the worst case scenario for tariffs that we thought was going to happen back in April and May. We're not going to see this huge implosion of margins into the end of the year. But I think the risks are being downplayed a little bit right now of, this is smooth sailing, this shouldn't be any problem for us, which is what we're seeing on these calls. And there really is a risk heading into 2026 that it starts to weigh down on their costs.
I wouldn't be surprised if executives don't want to say that because they don't want to draw attention.
They don't. But it's setting up a risky place, keeping the market this high, that the second you get even a little bit of disappointment on that, that's really going to have an exacerbated effect now, because we're expecting things to run so smoothly.
We're living in a fear factor moment. That's kind of how I see it. It's kind of interesting. But I also talked about, we talked about this with Mark Gurman when it comes to Apple and fiduciary responsibilities, right, of a CEO of a publicly held companies in maybe keeping their companies off the radar, right? I don't know.
Yeah, you don't want to sound the alarm bells if you're in the C-suite. Your job is, particularly in these earnings calls, is to talk about how you're going to manage the tariff regime. You don't want to say the world's on fire and this is terrible.
All right, Jillian, thank you so much. Jillian Wolf, she's Bloomberg Intelligence Global Equity Strategist, joining us in our Bloomberg Interactive Broker Studio. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, we have just about 7 minutes to go until we wrap up the trade on this Thursday. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker Studio. We soon head over to our TV colleagues, Romaine and Matt, and we'll count you down to the close. I think we've got a little bit of earnings, too. Costco coming our way, right, at 4:15-ish Wall Street time, so we'll break that down. In the meantime,
this is the most read story in the last hour.
Is it?
Yeah.
Oh.
It is.
Really?
Yep.
Wait, maybe I need to recycle.
Recycle.
And see.
See.
Because maybe it's
Click the
moved
buttons.
up. Yep, let me do it.
Okay, she's
And-
doing it. She's doing it on the terminal.
No, I have it as number 9.
Oh, okay.
Yeah.
Well, that's
Really?
okay.
Okay. Anyway, you want to hear about this story. Check it out. Secretary of Defense Pete Hegseth has summoned top military commanders for an unusual meeting early next week, just before the U.S. government might shut down over a funding dispute between President Donald Trump and congressional Democrats. So Chief Pentagon spokesman Sean Parnell said the Secretary of War will be addressing his senior military leaders early next week. He put this in a brief statement today. He did not provide a reason for the meeting or say what the defense secretary planned to tell the high-ranking officers.
The Washington Post reported earlier Thursday that Hegseth had asked hundreds of admirals and generals posted around the world to assemble at the Marine base in Quantico, Virginia, near Washington on Tuesday. That is the final day of the fiscal year. And it's the day before a possible shutdown when government travel is normally prohibited, could begin. Travel could be allowed during a shutdown if deemed essential. A meeting such as this, so I've read a few reports about this. I read it in the New York Times. I saw it in the Washington Post, too. We have the Bloomberg News story as well. It's getting a lot of interest from a lot of different parties. I mean, people have texted me this story today.
Right, yeah.
New York Times reporting, I think they spoke to 4 people about this who said that they don't remember a situation like this where the top brass have been invited outside of a traditional, like, okay, everyone's going to come here and meet and we're going to have dinner with the president type thing.
Right.
Like this is sort of like, nobody in recent memory remembers this.
Well, I think it's also odd, right, for it to be kind of like with no reason, like why to be called in.
You know, I think it's fair to say that Pete Hegseth has made a lot of changes at the top of the military. He's fired a lot of people, and maybe this could be another indication that there could be some changes coming, or he could talk a little bit about how he sees the org structure moving forward. I don't know.
Yeah, I don't know either. I think the timing is interesting in terms of bringing everybody in just before the shutdown. Now, keep in mind, the defense secretary, he's often seen in the president's company, has been among the administration figures to champion the destruction by U.S. forces of boats from Venezuela that they say were ferrying narcotics. He is often, if you think about, kind of in close proximity to the president. And we've seen in terms of announcements sometimes the defense secretary right next to the president.
You might remember earlier this month, the president signed an executive order to rename the Department of Defense as the Department of War, calling the move a reversion to a time before America went, quote, woke. Congress, however, must formally approve the change. The Pentagon now refers to Hegseth as Secretary of War. But again, Congress has to formally approve the change from Department of Defense to Department of War.
All right, so keeping an eye on that. Folks, we're just about 3.5 minutes to go until we wrap up the trade on this Thursday. S&P 500 on track for its longest losing streak in a month. We have been on kind of such a move to the upside. It felt like for a moment or period of time recently that we had record after record. And then we had a day where we had all 4 major equity averages higher. So we definitely have seen some bullish sentiment, but it's gotten a little tired as of late. Maybe investors kind of getting ready for the earnings season that kicks off very soon and maybe trying to get more clarity when it comes to what the Fed might do. Do investors get all the rate cuts?
Not according to Paisley Nardini, who said, we don't think that's happening. And we think there's going to be some sort of, not reckoning, but maybe readjustment.
I don't know. We will see. I don't know. That's just that kind of day.
Nobody knows. He's data dependent. The Fed is
something's
data
going
dependent.
on in the universe. It's just like everything's
Emily Griffeo said the planets are aligning or something, right?
Or not aligning because
oh, okay. I don't know.
We're all kind of mad at everybody. Let's stop being mad. Let's actually right now head over to our TV colleagues. The closing bell starts now.
Live from the financial capital of the world, broadcasting across the globe, this is WBBR New York, Bloomberg 1130. The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Matt Miller, taking you through to that closing bell with a global simulcast. We're joined now by Carol Masser and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms. Carol Masser on another down day for the markets, fractional losses to be sure. But when you kind of stack it up over the last few days, a lot more caution coming back into this market.
Yeah, I was just reading a headline off one of our global markets wrap stories, and it talked about the S&P 500 on track for its longest losing streak in a month. Keep in mind, there was a period where it felt like we had record after record after record. We've seen quite a run up. So maybe investors, guys, just waiting for the next round of earnings or more clarity from Fed speakers about what comes next with the U.S. Central Bank.
We'll get a little clarity tomorrow, maybe, or maybe an idea of what the Fed will do, because we'll get core PCE price index tomorrow. We know that's what the Fed wants to see. I don't know, though. What else is going to, before we get earnings, and we're going to, we'll get Costco today, and we'll get Jefferies later this week. And, we'll get JP Morgan in a couple weeks. Before that, I'm trying to find out what the catalyst is going to be.
By the way, Costco is one of my favorite stocks to look at, and the reason is that the estimated PE is so much higher than that of NVIDIA, right? We're looking at a forward PE of 52 on Costco. And if you look at NVIDIA, which is, the darling of this multi-year rally that we've seen, the forward PE there is only less than 40. So it'll be interesting to see what they come out on, with an E on that ratio.
Yeah, I went to a Costco once.
I go in there every week.
Yeah. All right, we get red across the screen here for yet another day with the majority of stocks in each of the indices in the red. The Dow down about 0.4%. The S&P now back down to that 6,600 level. It takes a while for these numbers to settle, but it looks like 6,605 is right around where we're going to end up. Down 33 points or a half a percentage point lower on the day. The NASDAQ Composite and NASDAQ 100 down by a similar amount, but the big laggard on the day, that remains the Russell 2000, down by about 24 points or 1% even.
All right, guys, back to the S&P 500 I go, and you've got most names in the index lower on this Thursday. You're talking about 383 to the downside, 119 to the upside, Matt, and one unchanged.
Yeah, one winner for every 4 losers, essentially. It's even worse if you look at the breadth of industry groups. IT was a gainer today because you have that Intel Apple story, which I still find so fascinating. You can do this the hard way or you can do this the easy way, right?
I don't think that's the same story.
Maybe Apple takes a stake in Intel. It may make a lot of other things easier for them.
We are calling it CEO diplomacy.
Yeah, so you see IT and really energy kind of flat, but they are the only green slices of the pie.
But on that point, I mean, I heard your interview a little bit earlier today, Carol and Tim, with Mark Gurman, who, of course, covers all things Apple. And you kind of put him on the spot there with some of the questions about Tim Cook. But I thought he kind of made a good point. I mean, look, there is a fiduciary duty that any CEO has to its investors and, for that matter, to its employees and its customers. And he's navigating that, as he should do. Right?
Yeah,
or he shouldn't be CEO.
I agree. We keep talking about that, right? If you don't really want to get on the radar of the White House or the administration, and you've got to think about your company and you got to think about the financials or your share price, I mean, right, there is a responsibility, but it's just kind of interesting to see how.
Well, you got to want to diversify too, right? You can't make all of your chips at TSMC all of the time. Why not get another foundry?
But they've moved away from Intel in the past, and Mark
of course,
made
they design them all in-house, but where they design them and where they make them are two very different things.
Mark made the point, like, maybe they could make some of the, some of the chips that they use in some of the devices. There are so many, but that's not what this is about.
Either way, I'm going to say, if you're an Intel shareholder right now, you're pretty happy because you continue to see this stock moving up.
They're up 9% today, Carol Masser.
I know.
Are you going to get to your gainers eventually?
Yeah, well, that was my segue. Thanks for jumping in on it again.
9%, Matt.
All right, where is
Bitcoin.
Katie, the boys? Intel up almost 9% in today's session. It is the top gainer in both the S&P 500 and the NASDAQ 100. It was also upgraded to neutral from sell over at Seaport Global. They see near-term upside for the chip maker if it receives more direct investments. There you have it. That's pretty clear going forward. And of course, we've been talking about the Apple Intel, whether or not we get something out of that. Lithium Americas, guys, also an outperformer in a big way, up about 23% 1% after almost a 96% gain yesterday. Heavy volume in today's trading today. White House proposed taking equity in the company during a renegotiation of some terms of a $2.3 billion loan extended by the Energy Department. Bloomberg News reporting that out. That came out on Tuesday. We've had Reuters reporting that the administration was seeking a stake of as much as 10%. Nonetheless, it's on everybody's radar. We are living in a very different capitalistic environment, it feels like, certainly with the government potentially taking stakes in various companies. All right, synopsis. Got to bring that one out, guys, because that too was a top gainer, but the S&P 500, NASDAQ 100 up about 4% here. Some reporting, the company out with a release that it and Taiwan Semi have been working together to shorten design cycle times on more efficient chip technology. So that caught the attention. So some good gainers there.
Well, what caught my attention was some of the decliners in the S&P 500. The worst performer on a percentage basis in there was CarMax by a long shot, down 20% today. Shares tumbled after the company reported weaker than expected results. It showed deepening strain in the used car market. Company executives actually came out and said fallout from President Trump's tariffs and rising distress among consumers were what led to falling sales and profit. There have been some recent challenges in the auto industry, as Matt is absolutely aware. Subprime auto lender Tricolor Holdings declared bankruptcy this month amid allegations of fraud. First Brands Group is preparing to file bankruptcy as soon as next week, Bloomberg News reported. Once again, shares down 20%, the worst performer in the S&P 500. Tesla, speaking of automakers, down 4.4%. It was the worst performer of the Mag 7 today on a percentage basis. Shares fell as European sales of Teslas fell 22% last month, giving a market share of just 1.9%. European car sales overall climbed 4.7% last month. It turns out that EV sales actually rose in the region last month. Hybrids, though, were a particularly bright spot.
By the way, that bears repeating. That bears repeating. So European car sales rose 5%.
Yes.
EV sales in Europe rose.
And Tesla fell
22%.
Yeah. Seems like a Tesla, a challenge particular to Tesla then. And that's why you had shares fall today, probably. Finally, Freeport-McMoRan, among the worst performers in the S&P 500 as well, fell another 6%, down 6.2% today. Fallout from the accident at the Grasberg copper mine in Indonesia continues. The accident at the mine killed 2 workers that left 5 missing, and it's led Freeport to declare force majeure on contracted supplies and slash its production guidance. We spoke to Joe Doe, who covers economic statecraft, and he's for years has covered metals and mining, and he talked to us a little bit about the negotiations between the Indonesian government, which controls 51% of the local entity, and now the concern that the government might want more of that mine ownership and what that could mean.
All right, a quick check on yields here. Up for a second straight day, up for the 3rd time in the last 4 sessions. And a big part of the reason is that stronger economic data that now seems to be throwing just a touch of cold water here on the idea of whether the Fed actually does have the room to continue cutting rates beyond that first 25 basis points that we already got. I do want to go back to the stock market, though, and some of the individual movers. One of the decliners you didn't have on your board there, Tim Stenovic.
Oh, wow,
Starbucks.
you're targeting Tim
Yeah,
this
well, I knew we were
time.
talking about this, so I didn't want to do it as one of the decliners.
Good programming.
Sometimes you got to think about this stuff.
That was a
barely
segue
down.
for you, Carol Master. You still haven't picked up.
It was also barely down today.
Yeah.
It was down like half a percentage point too. So
is she going to talk about something?
She's going to talk about.
Aren't we gonna? Isn't that your story?
She's trying to get a word in, but
You know what?
we're not letting her. Go ahead, Carol.
Let's talk about Starbucks. I was going to put this in the category of meh. I mean, you have Starbucks closing, 1% of its stores in the United States and Canada, cutting 900 jobs. It's all part of its turnaround plan. And investors, not that impressed. The stock's down. It was up about 0.5% at its best levels of the session today, finishing with about a decline of about 0.5%.
You try to tee people up, Matt Miller, and sometimes they just don't. I don't know if you have this problem. You host a show yourself.
Yeah,
so you have to do this
I think it's an exciting story, regardless of the share move. Because look, they're firing 900 workers. They're closing only 1% of 18,000 stores.
Yeah.
But a lot of people have been coming out this morning and saying this is the right track, and maybe this is what they needed to do from the start, right? Brian Nichols been in office for over a year, and since then the stock has fallen 6%. Like, why didn't he do this earlier? Why didn't he maybe cut a little bit deeper? They just have too many stores, and they're not as exciting as they used to be.
But to
So
that
they
point,
need to
Matt,
spruce it up.
Is 1% and 900 workers going to do anything? And look, I know these are corporate workers, and every job lost is terrible. But 360,000 employees is what the company has globally. So this is a small figure when you think about those numbers.
Precisely my point.
Well, maybe, you know, as some of the analysts said, that their prices are maybe just too high, and people, maybe they have to address that.
Yeah. I mean, isn't Tim like the $75 bag of coffee guy?
Yeah.
Yeah, but it's a 5-pound bag of coffee.
You keep telling me that.
It takes a long time to go
Matt,
through 5 pounds.
Isn't that where the pound cake comes from?
No, I get the pound cake that you and I enjoy so much from LA Gourmet on 58th and Park.
So good.
Is there pound cake that's
Been
being
doing
shared
this for
amongst
years.
you two, but not the other?
Wow.
Not for the last couple weeks, though. I've lost 10 pounds.
I know, which I actually appreciate too. You look good. You look
Thank
good. Yeah. If you're really nice to him, Romaine, maybe you'll get some.
Okay. All right.
But, you know.
All right. We are like 2 minutes over, so say goodbye.
That's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We just didn't want to leave you guys. Romaine and Matt continuing over there on television on the close, and Tim and I continuing on Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That is Carol Masser. I'm Tim Stenivek. A story that we're following closely, and it's a Bloomberg exclusive, actually. Bloomberg obtaining exclusive details of private discussions between European and Russian diplomats. European diplomats warning the Kremlin that NATO is ready to respond to further violations of its airspace with full force, including by shooting down Russian planes. Russian officials have denied their planes crossed into Estonian airspace and insisted that they are not trying to test NATO, saying Russian military flights are guided by international rules. I want to bring in Becca Wasser, Becca's defense lead for Bloomberg Economics. She joins us from our Washington, D.C. bureau. Becca, what would it mean if NATO would respond in this way? I mean, isn't that the entire point of NATO, to respond collectively if there is such an incursion?
Thanks so much for having me today. I think you're exactly right. NATO's core focus is for the alliance to essentially treat an attack on one to be an attack on all. What we are seeing here is not necessarily an attack, but rather incursions that violate sovereign airspace. And so what we are having is a collective response. It's just not necessarily taking overt military means. What I think we have seen today with this scoop that Bloomberg News had is a warning from NATO and NATO allies to communicate that should Russia continue to violate NATO airspace, there may be repercussions for those actions. A core part of deterrence, which is what NATO is all about, is trying to communicate to someone that their actions have consequences. And I think that's exactly what these NATO allies have done today. And they're trying to make it so that there isn't a potential escalation or any accident that could spiral further and lead Russia and NATO into conflict.
So, U.S., part of NATO? I mean, so I am curious. We have certainly seen from President Trump saying that Kyiv and Ukraine can win and that they're in a position to fight and win back. Specifically, to be fair, the president's gone kind of back and forth in terms of his support of Ukraine or also support of Russian President Vladimir Putin. So is the U.S. all in on this and supportive of NATO, all in 100%?
So the U.S. is a founding member of NATO and therefore has said that they are all in and that they will ensure the security of NATO and the NATO alliance. That said, if you are looking at President Trump's comments, he makes it very clear that he sees NATO likely to be a European project. So while the U.S. is part of NATO and